opportunity to work with. And HSBC has continued to step up in playing its part. When we connect the world and we connect India, we're in 60 plus countries, and in India we've been there for 170 plus years. You combine the two, you combine the globality of HSBC, you see the wonderful policies of the state of Gujarat, the country of India, and obviously the wonderful regulator in IFSC, and the GIFT City to put together. I think the opportunity is very unique. Some of the things we've done in the recent past have been whether financing an airplane to a vessel financing to actually helping trade financing. We've also been the bank which has been doing a lot of development in personal banking, making sure you have multi-currency accounts. Recently, RBI and the government announced the FCNR program, which to attract more dollars investment into India. When we started thinking about this plan, it was natural to us that GIFT City would be at the heartbeat, at the center of our initiative in this particular initiative. We normally do not talk about numbers, but on the 30th of July, some of the numbers were publicly published, and we were privileged to be on the rank 1 of that particular league table. But that was possible. That was possible because of our presence at IFSC and at GIFT City and all the support which we get here. In the corporate banking, we continue to make investments. We already have 50% plus of our treasury centers which we are banking. Throughout the day, we will have multiple interactions. Our CEO for our HSBC Asset Management will talk to you about how we can invest globally, but also how NRIs can connect back home. In payments, we've been thinking, can we change the paradigm? Classically, Indians have had only the Indian rupee account. Why should Indians only have a single Indian rupee account? Why can't we have an account with 20 currencies in it or 15 currencies in it? When you travel overseas, do you really need to pay a foreign exchange surcharge? All our NRIs, and there's so many Gujarati NRIs and so many NRIs in India, over 30 million. When they travel and when they come back home, shouldn't they have seamless banking? Shouldn't they have a single account number which can travel with them around the world? And I think GIFT can provide that. We will have participants from the capital markets. We'll have participants from fund managers and a range of other people talk to you about us. And insurance, again, we are trying to see what we can do together. Our partner, Canara HSBC, is already here. Should insurance be only offered in the Indian rupee, or can our global Indian have single insurance here issued at GIFT City, which can hold with them around the world? So as we internationalize the Indian rupee, we also bring the world to India, and this is a small initiative from our side to continue the dialogue. With that, sir, thank you so much for being here again. Thank you so much.
भूपिंदर भाई, मैं ये कहना चाह रहा हूँ कि कुछ वक्त में गुजरात में इलेक्शंस होने वाले, और आपने अभी तो सिर्फ स्पीच दिया और क्वेश्चन आंसर नहीं हुआ, लेकिन जब इलेक्शंस होंगे उससे पहले एनडीटीवी की टीम यहाँ पे आएगी और हमारी रिक्वेस्ट रहेगी कि जिस तरीके से आप गवर्नेंस में फ्रंट फुट पे बैटिंग कर रहे हैं, वैसे सवालों और जवाबों को भी आपको देना पड़ेगा और काफ़ी एक्साइटिंग रहने वाला है। और हमारी कोशिश रहेगी कि कम से कम एक वॉक द टॉक आपके साथ बनती, आप वक्त निकाल के हमारे पास आए, अपना गिफ्ट सिटी का विज़न हमारे साथ रखा। मेरे को याद है करीब 2009-2010 में मैं अहमदाबाद आया था, गांधीनगर में थे। उस टाइम के चीफ मिनिस्टर से मीटिंग हुई तो उन्होंने कहा कि मुझे मालूम है तुम्हें ये बिज़नेस का शौक़ है, तो एक काम करो, मैं एक इंटरनेशनल फाइनेंस सिटी बना रहा हूँ, उसको जाके देखना। तो उन्होंने एक ब्यूरोक्रेट अपने साथ में भेजा और एयरपोर्ट जब जा रहे थे तो यहाँ पे रुके। उस टाइम पे पूरा बंजर था, यहाँ पे कुछ भी नहीं था, वो एकदम मच्छर थे, काफ़ी ख़राब सिचुएशन थी। और जो ब्यूरोक्रेट मेरे साथ में आया था वो बोला था यहाँ पे ऐसी इमारत बनेगी, वहाँ से नदी निकल के आएगी, ऐसा करेंगे। मैं सोचा क्या ही मतलब ये बोल रहे हैं, कैसे होगा? क्योंकि जो न्यूयॉर्क में या लंदन में हमारे बैंकर दोस्त हैं उनकी ज़िंदगी कैसी रहती है उसका मुझे एहसास है। तो मुझे लगा ये कहाँ पे मतलब गांधीनगर अहमदाबाद में आएंगे, ये तो नहीं होगा। लेकिन जिस तरीके से मोदी जी ने खुद और अब आपकी सरकार उस मिशन और एजेंडा को लेकर जा रही है, जो पहले एक विज़न था, काल्पनिक था, अब कम से कम बहुत तेज़ी से वो एक हकीकत बनने की दिशा में बढ़ रहा है। और अगर इस तरह के इंटरनेशनल फाइनेंस सिटीज़ बनते हैं तो भारत के लिए भी अच्छा है, देशवासियों के लिए अच्छा है। जैसे संदीप ने कहा कि हम लोग क्यों इतना सारा अपना फॉरेक्स वेस्ट करें जब हम इंटरनेशनली ट्रैवल करते हैं। ये तो एक बेसिक फैसिलिटी है, अगर देश के अलग अलग दुनिया के देशों में मिलती है तो हमें भी मिलनी चाहिए। हम बहुत शुक्रगुजार हैं चीफ मिनिस्टर साहब, आप बहुत कम ही पब्लिक इवेंट्स में आते हैं, आपने वक्त निकाला, आप हमारे साथ यहाँ पे आए एनडीटीवी और एचएसबीसी के इस कैपिटल कनेक्ट कार्यक्रम में। हम बहुत बहुत शुक्रिया करते हैं आपको और ये वादा लेते हैं आपसे कि जब इलेक्शंस होंगे तब आपको हर सवाल का जवाब देना पड़ेगा। थैंक यू सो मच। थैंक यू सर।
Thank you so much, Honorable Chief Minister. We really appreciate it. A sincere note of gratitude from our end. All right. Every financial center ultimately succeeds or fails on just one factor: trust. Investors may be attracted by incentives, but they stay because regulation is predictable, because markets are transparent, and because institutions inspire confidence. As the regulator responsible for shaping India's International Financial Services Center, our next speaker is actually central to that journey. Please welcome the chairperson of the International Financial Services Center Authority, Mr. K. Rajaraman, for a special address. I am given to understand Mr. Rajaraman is just joining us in just a few moments. All right. As we began this summit, we had started on the note that we are meeting at a very unusual time for the global economy. I had highlighted earlier that capital is moving differently. Supply chains are being redrawn. Governments, well, they are competing for investment with as much intensity as they once competed for trade. Every major economy is asking the same question: where will the next wave of global capital choose to go? And as I mentioned earlier, India wants to be part of that answer. But ambition alone has never built a financial center. Every successful global financial hub has had to earn credibility, and that's happened over decades through stable regulation, through deep markets, through institutional confidence as well, and the ability to attract global capital. Can India accelerate that journey? Well, that's why we're here, to discuss tangible ways to figure out a roadmap. And can GIFT City become more than a financial district and evolve into a platform where international capital is raised, it's managed, and crucially, it's also deployed? Well, those are some of the questions that will continue to shape today's conversations. So over the next several hours, you will hear from policymakers, from regulators, from market leaders, investors, and innovators who are helping define India's place in global finance. Mr. Rajaraman, the stage is all yours.
Excuse me. Yes, thank you. So, good morning to all of you. I think it's a pleasure being here. I think with Mr. Batra, Mr. Sanjay Kaul, and many other distinguished participants here from GIFT City and from outside as well. We had the privilege of hearing the Honorable Chief Minister of Gujarat as well on how the whole city was envisioned and how it has grown over the last several years thanks to the investments made by the state government and by the government of India as well. So at the outset, I would first of all like to thank NDTV and HSBC for introducing a GIFT City edition to this important HSBC NDTV Global Connect forum. I also take this opportunity to compliment HSBC for believing in the vision of GIFT City and also significantly contributing to its growth journey over the last several years. The last time, I think it was in 2024, perhaps, there was a similar event. So we have just heard from the Honorable Chief Minister on the vision of the government of Gujarat, I think for this city. The government of Gujarat has invested in the infrastructure and has set up the GIFT City company. I'm sure that Mr. Kaul also will speak. The infrastructure here has to be world class. So therefore, I think a lot of measures are being taken to ensure that the city is livable. So nearly about 7,000 apartments have come up. A riverside facility, just like what is in Ahmedabad, is being built up. And maybe in the next few years, it will get ready. There's a metro which is being extended into the city. There's a station just outside the city. But I think a couple of stations within the city also will ensure that so many cars need not come into the city at all. So maybe people can just commute from their homes to this place. And to take it even further, it is expected that around 28, 29, the high-speed railway line between Mumbai and BKC and Sabarmati will become operational, which means that Mr. Rahul Kanwal and Mr. Batra can come by the morning train for the 2028 program or 29 program perhaps. So, and be on time to and catch the metro from Sabarmati station to come into the city. So seamless connectivity and a green environment here is what the GIFT City is working on. I'm sure that Mr. Sanjay will talk about that. So let me use my time to speak very briefly about our vision of the GIFT IFSC for the next 5 to 10 years. The world has been passing through a turmoil for the last decade, with global uncertainty showing no signs of abatement. Every day, it's it's getting either worse or stays the same way, unfortunately. The bad news is that the global economic policy uncertainty index has touched historic highs over the last several years. The good news is that India has, for the good part of the last decade, trailed in this particular index with significantly lower uncertainty due to the reform express that has placed our country and our economy on a path of structural, financial, and political stability. Headline inflation is at 4.4%, and the oil prices are ruling the highest ever in the last decade or so, thanks to sound monetary policy measures of the central bank and inflation management, coupled with long-term supply-side measures taken by the Government of India and the state governments. The Honorable Prime Minister of India's call for Viksit Bharat at 2047 in 2022 has kick-started a new wave of structural reforms. The Viksit Bharat at 2047 agenda is focused on transforming the legal and regulatory architecture, focused on ease of doing business, ease of investing, and ease of living. Investment reforms are focusing on infrastructure, advanced manufacturing, and global services. Technology development is focused on design in India, domestic research and development, and startup innovations. And most importantly, Inclusion 2.0 agenda is focused on the economic, social, and financial inclusion of the brethren at the bottom of the pyramid. So I'm sure that using all these 4 pillars, the Viksit Bharat is right on track, and we expect that the reform pace to gather steam over the next few years. IFSC is part of this reform agenda, if I may say so. It has been established for the task of enabling foreign investors to invest into India with the least possible friction and serve as a capital raise platform for India's Viksit Bharat at 2047 journey. So globally, establishing a greenfield international financial center is a very challenging task. If you look at all the competitors, all of them are at least a couple of decades old. Even Dubai maybe is 20 years old. Abu Dhabi is also 20 years old. But if you look at the others, I think Hong Kong maybe is about 500 years old as a trading center and maybe 150 years old as a financial center. Maybe they're as old as HSBC, because HSBC was the first bank perhaps in Hong Kong. If you look at London, maybe another 500 years. Maybe New York is also maybe a couple of 100 years. So we are a baby, a crawling baby on the block, if I may say so. So I think comparisons can sometimes be, in a sense, not really correct. But we will still continue to benchmark ourselves with these financial centers right from the beginning. And right from the beginning, we have been kind of looking at what kind of regulations these centers offer and see how we could be competitive with respect to regulations, with respect to taxation, and with reference to a variety of other things, including the environment, the legal environment. So I will say that the making of a financial center is always a very long-term process. Nothing happens in a year or a few years at all. So it's a very highly complex project, And it evolves around the fundamental issue of trust and confidence, I think. And trust and we can build buildings in probably in a year or two, but building trust and confidence takes time, I think. So it is an intangible commodity, which is the highly priced and valued possession in a financial market. So therefore, building this trust and confidence has been a very difficult long-term process, and we are consistently at it on how to scale up the level of trust and confidence that we have amongst foreign investors and also the NRIs and PIOs, etc. So it typically takes decades to build institutional depth, market liquidity, and regulatory credibility. Despite the complexities involved, the country's leadership took a bold and visionary decision to establish GIFT IFSC as India's financial gateway to the world. The idea was to create on Indian soil a completely new and distinct international financial jurisdiction, which is legally distinguishable and operationally independent from the larger domestic Indian economy. An entirely new financial architecture was required to be created for GIFT IFSC, and this required deep and wide-ranging legal, regulatory, taxation, and policy reforms, which are successfully implemented by the Government of India by adopting a whole-of-the-government approach. So in the last 5 years, particularly after the establishment of the International Financial Services Centers Authority under the law of Parliament, in the IFSC Act of 2019, we have come a long way in building a solid foundation. So GIFT IFSC is no longer an aspiration, it is fully functional international financial center having its own unique characteristics and capabilities. As a unified regulator, we have created a comprehensive regulatory ecosystem of over 35 regulations, 15 frameworks, cutting across the entire spectrum of international financial services, which includes banking, capital markets, insurance, aircraft leasing, ship leasing, bullion markets, the fund industry, the fintech and tech fin, and so on and so forth. So we have also expanded our scope to develop extended ecosystems with ancillary services and foreign universities, both of which are very important in terms of scaling up the manpower deployment in this city and also in enabling a robust pipeline of talent. The tangible outcomes of GIFT IFSC can be measured by evaluating the actual growth of financial services business over the last 5 years. I'm happy to share that the number of registrations granted by IFSC has grown significantly from about 110 registrations as of March 2021 to about 1,193 registrations as of March 2026. This itself is a testimony to the growing confidence and trust that global and domestic financial institutions place in IFSC as a jurisdiction. Equally compelling has been the growth and expansion of financial services business, which is now being delivered out of GIFT IFSC, and this can be evaluated by the growing volumes of financial flows through this jurisdiction. While I don't want to go into too many statistics, but I think a few things are worth mentioning. First, the banking sector, from which HSBC has stood out as a very important player. We now have 42 banks in IFSC, including 21 foreign banks and 21 domestic banks. The total asset size of this bank has grown from about 14 billion 5 years back to about USD 143 billion as of 31/7/2027. External commercial borrowings to the tune of USD $61 billion has been extended by the IBUs to the Indian corporates as of 31st of March of this year. Previously, such foreign currency borrowings were sourced from overseas financial centers. Additionally, aggregate loans disbursed by IBUs, which is a matter of recent origin, is the RBI swap facility for FCNRB schemes. From April to July 2026 stood at USD $17.54 billion. Next, if we look at the funds industry, GIFT IFSC has now become a preferred destination for pooling of global capital for making investments into India. Previously, such pooling structures were being set up in overseas financial centers. We now have 217 fund management entities with more than 400 registered funds, which have raised a cumulative commitment of USD $39 billion and have made total investments of nearly $20 billion into the Indian and global markets. And of course, I also have to mention the debt ecosystem with more than 200 bonds that have been listed on the IFSC stock exchanges by more than 65 issuers, amounting to more than about USD 70 billion. While I'm sure that my colleague Dipesh will speak up more about the other aspects of the financial center, let me highlight a few pillars of our strategy going forward. The first one is actually to scale up the capital raise from GIFT IFSC to a global scale, and as required by the Viksit Bharat at 2047 vision. See, there are many study reports which have now been put out by various agencies, including NITI Aayog. For instance, the net zero at 2070 agenda will require nearly about $20 trillion of capital, I mean, on an optimistic basis, and at least about $8 trillion on a conservative basis. So this runs to about nearly about $400 to $500 billion a year. I mean, I think currently we are investing about nearly $200 billion a year in the renewables and climate mitigation adaptation strategies. So this will require huge amounts of capital, and it requires a different kind of a regulatory ecosystem to support the trust and confidence that foreign investors require to mobilize and to house capital in this jurisdiction. So GIFT City aims to do that, and we aim to be a very important source and platform for raising climate and sustainable capital for India's growth story. Other priority sectors, including trade finance and manufacturing, etc., will require lots of debt and equity, for which GIFT IFSC will become a very important center. The second pillar relates to scale, size, and scope of the financial services. Focus would be to enhance the scale, size, and scope of the ecosystem by ensuring that every domain has got a complete 360-degree presence in respect of the types of entities that are required. So, I mean, let's take the case of aircraft leasing. You require not only an aircraft lessor, but you need a financier like a bank. You will need valuations services. You will need ancillary services provider. You need something called a TCSP for housing, I mean, orphan SPVs. So there are a variety of law firms for advising lessors. So it's I mean, each domain requires a complete ecosystem, and the focus is on getting those missing pieces of the ecosystem here, so that I think the main core entities that come here are in comfort. So the third pillar is to enhance the institutional depth and breadth. Our focus going forward will be now to attract the next wave of global scale institutions with high quality talent. GIFT IFSC should become a preferred destination for financial professionals, not just from India, but from across the globe. Our endeavor will also be to enhance the product breadth and the liquidity in the financial markets. The last pillar, of course, the most important pillar today is the innovation and technology pillar. So we have a regulation on TechFin. We also have various regulations which support fintechs. I mean, typically, financial, entities, sector entities such as payment services providers, payment settlement operators, and entities such as AML, CFT service providers, and so on and so forth. So our idea is to use the latest technologies, including AI, to support the financial services industry, not only in India, but also in the rest of the world. I would therefore urge all the CXOs sitting in this room to seriously evaluate GIFT IFSC as a base for your next phase of global expansion, and to reach out to us with your ideas, your requirements, and even your concerns, so that we can work together to address them. We are an agile regulator, and we have our ears to the ground, and we look forward to ensuring whatever we do should support sustainable growth, and also at the same time ensure that there is market integrity, order in the markets, and financial stability. So corporates in India or any part of the world may use this platform for raising credit via ECBs, bonds listed on the IFSC exchanges, raise equity using the funds which are housed here, ensure their global assets, raise trade finance, etc., without a direct presence. Business can also choose to set up direct operations in IFSC. Example, a finance company to do global treasury operations, raise credit via bonds or loans, manage global investments, setting up a holding company here, or aircraft or ship leasing using a leasing entity here. So there are 35 regulations permitting various forms of businesses. We welcome business to use this to India's advantage. There are 36 million NRIs and persons of Indian origin who are very important stakeholders. IFSC has so far attracted nearly about $2 billion of individual deposits. Early days. We will not say we have arrived till we have 1 million depositors using this platform. IFSC has therefore notified a video customer identification protocol last year as a means of digital onboarding, and directed all banks to put in place a complete online user interface for onboarding, transaction banking, and also for exit. So a similar directive is under consideration for all retail market service providers. So IFSC is also working on a pilot for Aadhaar-based face authentication, which will make unassisted onboarding of NRIs a job which can be completed in seconds. IFSCA intends to ensure that regulated entities and IFSCA offering retail products shall offer a complete digital experience. So I once again thank all the leaders, including Rahul Kanwal and Mr. Batra from HSBC and NDTV, once again for offering this platform. I look forward to the conversations that follow through the rest of the day's program, and I wish to hear from you on any good suggestions that may come up as part of your panel. Thank you very much, and Jai Hind.
sincere thank you, Mr. Rajaraman, on behalf of NDTV and HSBC. You know, around the world, global capability centers, they are undergoing a quiet transformation. They're no longer simply processing transactions or providing back office support. Increasingly, they're becoming centers for decision-making, research, treasury options, financial technology, and innovation. So then where does GIFT City fit into that evolution? Can it become a destination where global institutions locate high-value financial functions that shape strategy rather than simply execute it? To explore that opportunity, please welcome Sanjay Kaul, Managing Director and CEO GIFT City, in conversation with NDTV Profit's Managing Editor, Tamanna Inamdar.
Good morning everyone. It's exciting to be here in GIFT City. This is, I think, began nearly 20 years ago. We're close to 20 years of the first announcement of GIFT City, and it's really hit its stride. I mean, just the facts, the figures, the numbers tell you all of that. The kind of assets which are flowing through GIFT City at this time. At a time when GCCs are a buzzword, we're right front and center. So you can really see that dream come into fruition. Sanjay Kaul, these are exciting times for GIFT City. What is top of mind for you right now?
Yeah, no, thanks. Now, we start from what the Honorable Chief Minister said, go back in time. What was this? This was a barren piece of land, rewinds literally because you have the river flowing next door. And as the speech was on, we look back at what our regulator, Mr. Rajaraman, said. The number of banks, the transactions that are happening here. So that itself is an indicator as to where GIFT City has come to from the time it was visualized by the then Chief Minister and the current Prime Minister. So it indeed is, these are exciting times. Exciting times, why? Because we very strongly feel that we are at an inflection point, inflection stage, and the way we are growing, both in terms of the entities that are getting registered here, the basket, the bouquet of products that are offered here across different verticals, be it banking, insurance, something like aircraft leasing, which was happening or rather happens predominantly through other countries like Ireland. And we have got into it reasonably strong, in a very fairly strong way. So indeed exciting times is what I would say. Yep.
You know, we should put some of these into numbers. $111 billion in assets I crossed, I believe, March 2026. 17,000 professionals work here. What, to your mind, has been one way to tell the country and the world? Because a lot of people know about GIFT City, I think not enough do. If you had to put it into statistics, what is the way to really showcase how large this idea has become?
See, how we see it, or rather, more than numbers, it's what is being created here. The ecosystem that is developing here. To get into numbers, we have more than 40 banks, half of them international banks and global banks. Some of them don't have a branch in mainland India that is, because when I say mainland India, it's one thing else from the perspective of the Foreign Exchange Management Act. The GIFT IFSC has a separate jurisdiction. So rather than numbers, what we should be looking at is what kind of an ecosystem is being created here. Let's talk of purely the IFSC. What is it? See it in very simple terms, gateway to global finance to India, and conversely, also the gateway for Indian entities, institutions to do global business. That is what GIFT City would be in one simple line. That's how I see it. Banks, insurance companies, reinsurance companies, fund managers. You have 2 stock exchanges, subsidiaries of NSE, BSE. You have a bullion exchange. Lots of consultants, law firms, BFSI, BATF entities. Close than 1,200 entities are registered by the regulator at this point in time. And on an average, the numbers show that close to around 40 to 45 entities are registered every month. So I think this is what is important, rather than getting into statistics as to how many banks do you have or how many fund managers do you have. It's important that the ecosystem is developing. What is the depth of the ecosystem, what that we are creating, the financial ecosystem. I would like to see it that way. And wherever we go, be it within the country or overseas, there is curiosity, one, and people who know about GIFT City, they talk about how do I open my, how do we operate out of GIFT City. I think that is what is more important.
No, undoubtedly. You talked about the ecosystem. And when we look at GIFT City from a global investor's lens, it's a choice to be made. There's Dubai, there's Singapore, there are destinations around the world. You spoke about Ireland a few minutes ago. How do you believe GIFT City, where we're sitting right now, stacks up?
How do we differentiate ourselves, or rather, what is the larger intent of GIFT City? I would see it in a different perspective. There are two standpoints. One is India is one of the largest growing major economies of the world. That is one. We have tremendous capability in terms of talent, technology, innovation, operating global services. Now, these two combined, I don't think there's any other financial center would give you these two factors. So essentially, if you have to deal with India in terms of business, we feel that you need to be here. That would be the differentiator. Now, you mentioned about other global financial centers like Singapore, Dubai, etc. Of course, they are there since quite a long time, well-established centers. We learn from them since we are fairly young, we are very young. If you see it in that time scale, we are toddlers, but then we are growing up very fast. So we are learning from them. Why shouldn't, again, coming out to the differentiation, why should someone choose GIFT City? If an Indian business is operating outside the country, which hitherto did not have options to do those operations from within India, for example, global treasury operations, fund management, etc. Now you have an option in GIFT City. From within India, you do it from the comfort of your own country. One. Second, there is stable governance, predictability of rules and regulations. You have a regulator which is very proactive, which is forward-looking. I think people would not be missing this. People would not, entities would not come purely for a tax incentive. They would look at the holistic, the larger picture. And the larger picture is you need to engage with India. You need to engage with India. We have one of the major global economies, so you need to engage with India. And what better place than GIFT City? That's how I would see the differentiation.
Yeah. Well, tax incentives may not be the only parameter, but it would be fair to say it's an important one. How do we compare? And let me contextualize. You have a number of Indians who are now wealthy Indians who are now thinking of themselves as global citizens. They think of themselves as global citizens, and there is a competition right now for wealth and talent around the world. I spoke about Dubai. Dubai is pulling out all stops. Singapore is beginning to do that at some end as well. So how do we compare in terms of tax incentives, in terms of giving those opportunities? And of course, there is stability and there is governance. But not necessarily the other options don't have those parameters either.
Let's talk about the corporate tax front. The corporate tax front, we are fairly on the same levels as other international financial centers, except the Middle East. They work in a different regime. But all other centers, we are fairly at par as far as the tax structure is concerned. Personal income tax also, we are more or less, in fact, the other financial centers which have a higher rate of taxation than us. So that is one. Second, you mentioned about, our diaspora, which is overseas. Again, see, increasingly, the uncertainties, the global uncertainties which are there, so it makes them look inwards, And when I say inwards, back to your own country. As Mr. Rajaman was mentioning, you have deposits from NRIs coming, it's increasing, and the regulator is making things so easy. So naturally, the conveniences which they had until now in an overseas, wherever they are, all those things are coming into India, into GIFT City. So why not be here? At the end of the day, I would want to put back money from where I've come to, in assuming it gives me the same set of operational ease, same returns. So I think that's the biggest draw. And we are very fast, processes are being simplified. And just as you mentioned that, the KYC, regulations evolved. When we first started, we had issues about KYC. Now it's streamlined. That's not an issue at all. It's very easy. I'm talking about in the IFS, International Financial Services Center. So it's for these reasons we feel that people are interested. When I say interested, the conversations which we have every day, I'm seeing both at the regulator and with us, Gift City company, the conversations, the number of people engaging with us on a daily basis has increased multifold. Multifold.
Is this since geopolitical tensions have started across the world? Because you mentioned that, and you're right, it is a turbulent world. The Indian diaspora and Indian origin companies have huge presence. Have you seen that build-up of interest, say, in the last few years?
Not necessarily. No, I would see it as maturing of our International Financial Services Center, both in terms of the regulations as well as the ease of doing business and attractiveness of, working out of here, putting in your money in entities operating. I would say it's a maturing of the Financial Services Center.
In terms of challenges, and we've talked about all the strides that Gift City has made, undoubtedly the statistics talk about it, the numbers talk about it. You drive through these streets and what you see, the infrastructure speaks to that story. In your view, Mr. Kaul, as someone who's spearheading the progress here, what do you see as the big challenges or the issues that you need to overcome to go even one step further?
See, I wouldn't say challenges, it's how we are growing. We are toddlers, so the growing up pains is what I would say. You learn to walk, then you learn to run, and people expect us to hop, skip, and jump immediately. We were a barren piece of land. The infrastructure, the common infrastructure, utilities get developed, the common infrastructure starts, and you have to bring in people to develop it. So initial phase was, there were 3 phases how it's developed. Initial phase was the common infrastructure, which was done by the company. Then next you have is, you need people to come and start building buildings, construct buildings. So that's the next phase, that's the physical infrastructure. Then came in the regulations. Once the regulations came in, you have business entities starting operations out of here. So it's gone sequentially. What next? You need to attract talent, you need to attract people to make them come here and work here. Now, to make them work here, entities would not just come in and occupy buildings. It has to be a complete ecosystem which will attract them. On the one side, you have the regulations which are at par with global jurisdictions, if not at par, some segments, nearing at par. Then is it livable? Is it workable? Can I, work and live here? And probably have the same kind of lifestyle which I have, which some people at least are used to overseas, or other metros in the country, maybe a Bangalore or a Mumbai or NCR, where traditionally these kind of entities are there. So you had physical infrastructure, regulations, and then how do you make it livable? So now the focus is, when we say Gift City, we believe that we are developing the complete financial ecosystem, which consists of physical infrastructure, regulatory infrastructure, as well as make it livable, that is a social infrastructure. Now in terms of social infrastructure, what are we doing? We already have 2 hotels, this is one of them. We have one more coming up, which would be up in 2028. There's another one which is being tendered out, that's an ultra luxury segment. We would be constructing service apartments. That's all, it's all starting now. That becomes a livable portion, service apartments, of course, there are developers who are doing it. We have F&B outlets, which are going to come up. It's just coming up, 2 kinds of spaces are there. One is what the constructed buildings have. There already people are in talks, and we have good brands coming, something which we have constructed. We have an operator there, which will be operational in some months. That's the F&B portion of it. Entertainment, we have a golf driving range, which will come up by November end. We have a sports arena, which should be ready by August end. So sports is taken care of. Entertainment, what we have planned is we'll have continuous entertainment on a weekly basis, something to keep everyone engaged. So all in all, we are very conscious that, in fact, there's one mall also that is coming up. It's been tendered out and that will take time, of course. The effort is to create the whole ecosystem. So lots of things are happening, but then infrastructure takes time to be visible. Infrastructure takes time. So lot of work in progress. This is something which we tell everyone. You come here now and say some things are not there, but that's not correct. Lots of things are happening. In terms of accommodation, the total planned accommodation here in terms of apartments are about 11,000, of which 1,200 odd are built up and occupied. There are 3,000, approximately 3,000 under construction. 14 million square feet of office space is under construction. So this will be ready in phases up to 2030. This year I'm getting 3 million square feet of office space which will be there ready. So a lot of infrastructure work is going on. So we believe that once people understand this and people see it, it would become a livable place. That is one. Second, you have to understand GIFT City is not in the middle of nowhere. You have Ahmedabad, airport is just 15-20 minutes drive from here, non-peak hours time. Peak hours, half an hour max. You have Ahmedabad there. On the other side is Gandhinagar. Gandhinagar is just 10 minutes out. You get out of the GIFT City boundaries, geographical boundaries. We don't have those walls here. You have the complete educational ecosystem. You have the IIT, you have some good universities. So it's not in the middle of nowhere. You have lots of social life. Just get outside GIFT City. And GIFT City is creating everything that has to make it livable. 2. 3, this is Gujarat. The safety, the quality of life, the standard of life, it's different. It is very comfortable. So this is something which has to draw people.
By when will we see the transformations that you're talking about? They're sounding very exciting. And has this social infrastructure that you've described so beautifully and the lack of the entire picture so far been an issue in attracting the kind of talent you would have hoped for?
Yeah, what you come here after 6 months, and what all I've said would be up and running.
In 6 months?
Yes, because it's all in works. It's in 6 months. It would be up and running, substantial portion of it, except the mall, which is in 2029. That's close to 1 million square feet. It's a destination mall that is being created. What we see is, how we try to understand, is this just a narrative which people, because they have not understood what GIFT City has to offer to do their businesses, is that the excuse is what we are trying to understand. Of course, these things we are educating people to see all these things are coming up. You not be so despondent that there's the social infrastructure is not there. So people realize that lots of things are happening. It's not as it was before. Okay? It's not that.
We started this conversation with a mention of GCCs, Mr. Kaul, and that is one space where you have competition, I would say, not just globally, but within the country as well. Whether it's Bengaluru, whether it's Hyderabad, all of these states and destinations are vying to attract global centers. How do you think you will be ahead in that race?
Let's look at how GCC ecosystem has evolved in the country. They came in essentially as back offices because of the cost arbitrage. That was the first phase, and that is how we became known globally as a GCC center, the country. What is important and how we see it, it should be a place where decisions are made, where global decisions are made. Instead of the higher level work happens, decision making, designing, innovation, that is what we would like to see the GCCs. Now, how would I differentiate in GIFT City? Everyone is into GCCs, every major center in the country. Do have space there in that competition. I would say that we are different. We are not competing for the same piece of cake. How are we different? I have my IFSC, the International Financial Services Center. GCCs which would come in now, whom we attract now, they have to be centers which are mandated to take global decisions. Those are highly specialized functions that happen. Now, let's see a scenario where you have a GCC with very specialized functions. Naturally, when global decisions are being taken, not very operational ones, where decisions are taken, policy decisions, if I may call that, designing, you need something which is there on the, behind it. For example, you need capital, you need innovation, you need technology. All these things are available in GIFT City, and you need seamless cross-border flows, financial flows. So that is a differentiator which I would say how we position ourselves. Complete BA, BFSI and BATF services which would support a GCC to run those operations is where my differentiation comes in. Other places do not have the luxury of being an IFSC, so that's what we pitch for.
Okay, the social infrastructure is coming. The IFSC, tag is already there. You talked about 6 months, and frankly, I'm very excited to come back and see what this looks like in 6 months.
We'll host you, yeah.
But let's push that timeline a little further. Let's talk about, say, 5 years, 3 years, 5 years. There is now the impact of AI over the financial sector. Timelines of doing anything are collapsing. Where do you see GIFT City and your vision for GIFT City in the next 3 years?
India's International Financial Services Center, known globally, this is India's IFSC, International Financial Services Center. One, but more than that, I would want to be more ambitious. It should be that, one, any global entity operating out of anywhere, when they need to take a decision about global transactions, the first top of the mind recall should be, why not GIFT City? Can evaluate GIFT City, someone sitting in London or a Singapore or a New York, if the global companies, if it comes to their mind, why not GIFT City? I think we have arrived. One. Second, for Indian entities operating globally, we should be the natural choice. We should be the natural choice. It should not be that I can go and do my global overseas business anywhere else in the world. It should be GIFT City. Once that happens, we established ourselves. That's how I see it.
And what do you think will be the turning point for this to happen? Social infrastructure, etc., will be one part of it. You're already competitive on taxation. How does that change? How do we move on that paradigm?
We are moving very aggressively. That's all I can say. We are moving. I would say, why would I make that statement? I can see the responses, I can see the number of inquiries converting into offices being set up here. So the pace at which we are growing is very encouraging. That's how I would say.
This is very exciting, Mr. Kaul. Thank you so much for your time and for laying out your vision. We look forward to seeing more and more of how GIFT City makes its name across the world's financial capitals. Thank you.
Thank you, my pleasure.
All right, the Indian economy has become increasingly global. Indian entrepreneurs, they're building businesses overseas. Professionals are working across jurisdictions. Families now hold assets. They hold businesses and investments in multiple countries. And that changes the very nature of wealth management. It's no longer only about growing wealth, though. It's about managing complexity across borders. To discuss what the global Indian expects from modern banking and wealth management, please now welcome Sandeep Batra, Managing Director and Head International Wealth and Personal Banking, HSBC India, with NDTV Profit Senior Executive Editor, Neeraj Shah.
Really looking forward to this conversation. Before we start though, I want to ask the people in this room, because I presume everybody in this room is upwardly mobile, financially literate, and prides herself on himself on knowing how to invest, right? So I want to ask any of you out here, or how many of you believe that you truly know the investment opportunity that comes to you via gift? Raise your hands, please. About 10 names. Okay. How many of you truly want to know how is it that you can utilize the gift structure to invest for your benefit? Perfect. We're setting the session. Okay. So thank you so much for joining in. And but just before we get started to how to use this opportunity, and I truly believe it is an opportunity, because you lived that life, right? You've been an NRI for such a long time. You probably investing globally all your life. Now you're using the HSBC platform to enable others to do the same as well, including your colleagues. What do you feel about how the upwardly mobile Indian, how long a way has she or he come when it comes to investing and diversifying?
See, point number one, Indians are always international, right? Wherever you go in the world, and I just came back from a holiday, you land into a place, from the Uber driver to the manager of the hotel to, people staying there, we have Indians around the world. So I was an NRI for 18 years of my life. We have 32 million of our friends of diaspora around the world. But Indians around in India as well are also investing globally as well. We obviously love our own markets. I've been investing in the Indian stock market from 1990. Wow. I think all of our people, we truly believe in the India growth story. And at that point of time, you'd get physical share certificates and you'd get the confirmation a day later. The markets in India have expanded. The market options, the avenues have moved from equities to mutual funds to alternates and so on and so forth. Within alternates, lots of investing classes have come into India. So in India, investing is on a boom. I think we are strong believers in it. I think it will continue to be a long-term story. I think international investing has been known to some people who've been outside India. It is fairly recent, fairly new to people who are residents in India. And I think both for people wanting to take a part of India, you're an NRI or you're a global investor around the world, you want to take a part in India, that started to happen a lot more. That is why you see $150 billion of remittances come into the country. But also Indians are saying, listen, I want to take a slice of the world. And that started to grow pretty rapidly in the recent years.
It has, most certainly it has. Okay, now I would love to know, Sandeep, I'm going to make this a bit of a classroom for me. I'm sure the audience will benefit. I'm sure people watching it on television and digital would benefit as well. How does an average Indian, an average jugal out there, the usual term was Joe, since we are in India, I'm calling it jugal. How does that person take advantage of the opportunities that gift has to offer?
I'll tell you what Sandeep is doing, and then
let's do that.
I don't know whether Jugal wants to listen to me or not, but I think Sandeep can do something very simple. The first thing is, if you're an individual, obviously we talk about corporates and businesses, which are equally important. But as an individual, the first thing is, while you can open an account in India or around the world, you can open an account at Gift City. The Gift City account is a distinct account to your India account. Your Gift City account is not typically in the rupee. It is in multiple, it could be in multiple currencies which are non-Indian rupee. It could be the dollar, the British pound, the euro, the Japanese yen, and so on and so forth. And that is a very simple process. Typically sitting in India or as an NRI sitting anywhere in the world, you can open an account with your bank of choice. There's a very good bank logo behind. But you could open an account in a bank of your choice at Gift City, which is the starting point. So you now have an account, you have digital access, you can now access your money in more than one currency. Classically, we've had Indian rupee accounts, we must keep them. And we now open one more account, which is at Gift City. That is your starting point, because now you can transact, you can pay people, you can pay your child who's traveling overseas. But that is your starting point, your foundation for your global investing journey. Now, once you've got that account, whether you're a resident or an NRI, both can open those accounts. And actually, ironically, many of us are mobile, so we will become residents and NRIs and come back home. That account remains the same. You don't need to keep changing it, right? That's your single account. Then you can start investing from that.
Sorry, but this can happen through any bank. I mean, HSBC or any other bank which is giving that offer, a person can open a bank account in Gift City for all of these options, right?
Some of the capabilities may be a little bit different, but
of course.
But yeah, you could technically. There are multiple banks here, and I think there should always be some competition. So you can open that account. You can open that in multiple currencies. That's a very simple process, right? It is not complicated. It could be in any branch or digitally from around the world. You can open that account, right? That's your starting point. Once you've got that account, you say, listen, I'm an Indian. I want to invest in a range of products overseas, right? So that could be a fund, that could be a fixed income fund or an equities fund. That equity fund could be from multiple fund managers. Later on, our own asset management CEO will talk about what HSBC plans to do here. But today you could do it on a range of funds. We are truly open architecture, so you could choose your fund. Within that fund, you can say, listen, I like the US a little bit more because I feel AI is going to be a story, or I like the emerging markets a little bit more, or I want actually more fixed income, or maybe I want half India, half US. So you're an Indian, you can take an exposure globally. You're an NRI, you can do both the things. You can take in global funds. So you could be an Indian staying in Ireland but wanting to invest in Korea. You could do that at Gift City. But you want a slice of back home in India, but you want to remain essentially tax-free, you want to remain in the dollar, you could create an inbound fund, and you could access that inbound fund, and the multiple funds which are available today. That is, so starting is an account. Second is this range of wealth management products which are already live. Equities is getting, with INX and with other exchanges, equities is becoming more and more popular. So you'll be able to buy equities sitting here, global equities. And then there's insurance. Insurance companies are coming in. You say, listen, actually my need, I'm an NRI, my child is going to study and the need is going to be in the dollars. You will be able to buy insurance in multiple currencies also sitting right here. Starting account, invest, protect, equities, all of that is already available here. So this is not, we're not talking future, we're not talking 2029, this is already available here. Obviously, we will continue to offer more and more capabilities and build on the success which has already been happening here.
What are the advantages for an Indian to do this out here in GIFT versus any other jurisdiction in India? Any other jurisdiction in the world? I mean.
See, these are complementary, right? As Sanjay ji also said, I think GIFT is wonderfully complementing the capabilities you have around the world. Of course, you can open an account in Singapore and Dubai, and HSBC has presence in all of these wonderful global centers. But classically, we are in India, so the homeward bias is going to be a little bit higher. So if you are looking at an NRI, you're looking at India funds, just the number of cuts you will get on the Indian market are going to be more here. You're a resident, you want to invest globally, you're talking to an Indian RM right here. Succession laws are more likely to be India succession laws than any other succession laws. Your will cover your assets here. Your reporting, right? These are domestic assets held in a different currency. So I think there are a lot of benefits for doing it out of Gift City. But I think, as I said, you're complementing and not competing.
And I believe you guys as a brand have truly expanded offerings out here too, right? One thing is the opportunity available. Two is the kind of trust that people can place in institutions through whom they are banking or investing. And therefore, gift and presence of banks like you helps Indians have that security as well, you would say?
See, absolutely, and just a little bit about HSBC. We've been in India for 170 years, and one of my favorite anecdotes is always about our Calcutta branch, which is there in India for 100+ years. So it would have seen the World Wars, it would have seen the Independence Day, multiple ups and multiple downs. That branch has always been open. Our Mumbai Fort branch just celebrated 75 years last year. So we've been committed and in India for 170 years. But along with that, our presence in 60+ countries. So we've got expertise, we've got asset management capability, we've got global wealth management capability. And so when you're dealing with us, you're connecting that globality with the depth of being here in India. And through those 170 years, obviously, we've built a very large corporate and institutional bank. We also have a large wealth and premier bank. And you combine the both. You've got the ability to bank for your business. You've got an ability to bank for your employee who works in that business. If you're an entrepreneur or you're an independent investor, you've got an ability to bank there. And both in India onshore as well as here at Gift City.
The other aspect is that for anybody looking, and I'll also come to, because a lot of us have cousins globally who are NRIs and may not know the exact nature of how to go about doing this. So I'll come to that as well. But before that, for a Neeraj or a Sandeep, and Sandeep knows this very well, Neeraj doesn't. So Neeraj wants to know that whenever I'm thinking of investing globally, let's say through GIFT as well, there are 2 or 3 things that come to my mind. One, there are LRS limits, and unfortunately, I'm well past those limits, or well below those limits, but that's okay. But there are tax implications, TCS, etc. How does one navigate through all of this, if you can just tell us?
I think we obviously bring tax expertise along. We have partners who are wonderful in tax. In the multiple sessions we've done with them as well. But I think the rules are much simpler than the fear of them sometimes. Obviously, as a non-resident, you can fully move money in and out. And there's no LRS limits for non-residents, as you know very well. For resident Indians, there is a $250,000 per person per limit, which is a reasonable limit. TCS may apply over a certain thing, that's tax collected at source, but you could set it off against your advance tax or your annual filing. And so that's your own money. That's your own money. The money which actually moves in through LRS to Gift City is now fully investable. You've got to invest that within 6 months. For 6 months, you could hold even a term deposit, and now you can actually place that term deposit online. Post that, you could choose your investing options, and as I said, that's a complementary to your India investing strategy. So you will continue to have a large part of your allocation to India, but you say, listen, AI is booming, I will take a part of some in the US. Emerging markets, we've not heard of any memory stocks 2 years back, many of us, right? Now, a lot of people know what SK Hynix and Samsung is, and you say, listen, I actually wanted exposure to emerging markets, I want to actually participate in this rally. Or I want a little bit Greater China in my portfolio, I want more Southeast Asia, or maybe I want fixed income. Yields have been, the 30-year and the 10-year US yields have been the highest it has been in many decades. And so those are all opportunities to be tapped in right here at GIFT.
May I ask you, Sandeep, since you're an upwardly mobile global Indian who's invested globally as well, did you participate in this whole semiconductor rally, SK Hynix, Samsung, what have you? Because they have been very volatile and people are scared of volatility per se.
See, I think as long as the portfolio is diversified, what you find is that markets sometimes rotate. So at times your emerging markets portfolio a little bit down, but you see financials started to do a lot better. You see Europe started to do better while Asia started to kind of come off in a few markets, right? So I think as long as your portfolio is diversified across underlying categories, so equities, funds, alternates, and so on and so forth, across currencies, across jurisdictions, I feel your returns over a period of time are far better and they're far more stable.
Okay. Now, two more questions. One is on an average NRI wanting to do this. I heard you say that if an NRI opens an account in GIFT, the person, she or he, has the option of investing anywhere across the world with the India exposure also built in. And naturally, we have a
homeward bias.
Yeah, home bias as well. Parents are here. You want to invest out here as well. So is GIFT therefore from that perspective the most lucrative option?
Absolutely. So see, if you wanted, let's say you wanted small cap exposure or mid cap exposure or X fund manager or Y fund manager, just the number of India options which are available at GIFT are already quite large.
Okay.
But you could also invest globally. And today we've been used to investing typically in equities, a little bit in fixed income. But new categories are coming in. I'm saying, listen, you wanted to invest in private equity in India. There are funds which are available. You wanted venture investing exposure. Now you want venture or private equity exposure globally. So listen, we believe that private and venture and early stage investing will remain an attractive long-term investing theme. If you have that conviction, you will be able to participate in newer avenues, not only for India, but around the world. So as I said, Indian money is typically, you shouldn't round trip. So you're investing at GIFT, you go outside. You could have some exposure to India in that fund. Outside money, NRI money could be global or could be coming to India in whichever slice of India you want.
Okay. Well, this is a fair explanation of all the options are there. I'm sure there are questions maybe, and maybe, Sandeep, if you allow, we'll maybe get a couple of questions from the crowd as well. But before that, I have one more question to you. And which is, what else is in the offing? Let's say for the next 6 to 12 to 18 odd months, because you understand this ecosystem so well. For somebody who's opening a GIFT account, let's say there are 10 people out here are convinced after talking to you or listening to you that this is the thing to do. I want to open an account with HSBC tomorrow. What else is in the offing?
I think the space is simply going to explode in my view.
Sorry, I missed that.
Just the options are going to explode.
Okay.
And I'll give you a few examples. In payments, for example, now I said we've all gone digital. So your GIFT account is digital. But maybe in the next couple of quarters, couple of months, couple of years, you will have people offering a single debit card with 20 currencies in it. So you go travel around the world, that debit card automatically knows which account the money is in. You're in Europe today, you use a debit card, it picks from your Euro account. You go to Japan, it takes from your yen account. US, it takes from your US account. You can actually withdraw money overseas, so gone are the days of you queuing up in front of a changing center in an airport paying a very high markup fees. You could pay from your own gift account anywhere in the world, whether cash or a direct payment. The number of fund options, they were very limited. I think there are a lot more now. But based on the interest I see, based on the participants we speak to, this is going to be very, very high. I think you will be able to simply choose from hundreds of options, essentially from every asset class in the world. Global equity investing, you wanted to buy whichever stock exchange in the world, you should be able to access through GIFT City. And digitization will keep growing. I think FCNRB is a more recent example, and when the government created the FCNRB program, GIFT became essentially the factory for that. Right? A lot of the leverage for FCNRB programs have been offered at GIFT City, and it's simply been made possible because of this wonderful infrastructure and because the players which have made those investments have been able to serve their clients using those alternates available.
Yeah, and I mean, without getting into numbers, Sandeep, but the FCNRB developments that have happened and the kind of inflows that have come and the promise of what could come on the next couple of months as well. Any thoughts on that?
I can only speak from public data, which was as of 30th of July, it got published on a parliament response, and I think the raises were pretty strong. We were fortunately ranked 1 on that particular day, which made us quite happy. I think since then, we've continued to participate, the market has continued to participate, but I think people are quite happy with the response of the FCNRB program, and I think GIFT has had a very vital role to play in it.
Okay. My last question, Sandeep, and that is, as you've seen the average profile of an Indian investor doing global investing, how, to your mind, has that changed from what she or he was doing 20 years ago versus 10 years ago versus now? Because nowadays, decades move in years, I believe.
See, information access has become universal, right? And we did a recent survey. We spoke to 10,000 clients around Asia and around the world, Indian clients and clients around the world, and said, listen, are you using AI, for example, to research your investing opportunities? India came at absolutely the highest in that. 80+% of Indians who are affluent are actually starting to use AI to at least research. They're still working with a wealth manager or a bank or an expert when you want to make the decision, but people have started to research. Now there is no, it's fully available, right? You could research Indian options, you could research global options, and which is why you also see the Indian quotas on mutual fund overseas limit, the $7 billion now fully getting capped out. You see a lot of interest. But at the same point of time, as I said, NRIs respond very quickly, and you see the success of the FCNRB program. It is the NRI responding to options back home in India.
Yeah, I'm sure. I mean, the larger audience in this room as well would be using AI for research, right? So, anybody not using? I'm certainly using AI for research. Everybody out here, I'm presuming, would be doing that too. So, yeah, I mean, kudos, no surprise there. Okay, maybe a couple of questions, and I believe we are hand raised there. If you can have the mic there to the gentleman on the first table. Could you please mention your name as well, sir?
Sure. Hi, good morning. My name is Ashish. One question to Sandeep is, now GIFT is in a unique position that is the first international financial service center for India. And fortunately or unfortunately, both the customer segments, the resident Indians are spread all over India. Similarly, the NRIs are spread all over the world. So you don't have these people physically present in GIFT to take leverage of the banking and wealth management solutions. So my question to you, Sandeep, is how easy or difficult the journey for a resident Indian or NRI is to digitally open an account and have the access to the full-fledged banking and wealth management solutions? Thank you.
Thank you so much, Ashish. And I think Sanjay ji from GIFT City and IFSC spoke earlier. I think the KYC rules have been made much simpler. So typically what we find is in a day you should be able to open your account from whichever part of the world you're in, or you're in India. So it's a very simple process. I think there's a mystique that will be very hard. We don't really know where it is. We don't know how it looks like, right? And I think through sessions like this, we want to demystify this whole concept. That account is in an app. The app looks very similar to your app, which will look like an India or a global app. You're able to move money like you're able to move from your India app. So, but to your question, digitalization has really scaled up in the last couple of years. And 2026, I see massive growth in digital capabilities available at GIFT City. And I think it's just starting. It will become a lot more in times to come.
Okay, I think maybe there's a bit of a disturbance here, but maybe we'll have to live with that a bit because there are a couple of other questions. Yeah, to the gentleman back there, but if the team out here, if we can just get that humming sound gone, please try for that.
Good morning, sir. My name is Puran. My name is Puran Chorodia. I live in Hong Kong, citizen of Singapore. Of course, I'm OCI holder. Most of the times, people don't keep money in their name. They keep it in corporate. Are you able to open the account for corporate?
So
it's owned by 100%, of course, Indian.
So I think we offer both corporate banking and consumer and wealth services here at GIFT City. So we can definitely, our relationship managers can definitely speak to both for your business and as well for your individual needs.
Oh, thank you.
Okay, I think we'll have to call it a day here on this session at least. But like I said at the start of it, that if you wanted to know what are the options available and whether it's a lucrative one or no, I think without any doubt, one knows that that is true. Now, how quick are you to do that is left up to you. There is an option out here. Sandeep has said that the logo behind is amongst the best ones, so make use of that. But thank you so much for joining in today. Really appreciate your time. Thank you.
We've spoken about attracting capital. The next question is equally important. Can India also become a place where that capital is managed? The world's largest financial centers don't simply receive investments. They manage pension funds, sovereign wealth, private assets, ETFs, and alternative investments for clients across continents. Can GIFT City build that kind of ecosystem? Well, let's find out. Please welcome our distinguished panelists. Dr. Dipesh Shah, Executive Director, IFSCA. Ashish Somaya, CEO, White Oak Capital Asset Management, who will be joining us in just a few moments from now. Kailash Kulkarni, CEO, HSBC Mutual Fund, along with NDTV Profit, Senior Executive Editor, Neeraj Shah.
Okay, I believe the hum is gone, so this is good. We'll have a nice, clear conversation for the next 20 minutes, 30 minutes odd. And again, the idea is to try and talk about the gift opportunity. And my panelists today, although my colleague has already mentioned this, but I'll still repeat, Dr. Dipesh Shah, Executive Director of IFSCA, Shri Kailash Kulkarni, CEO of HSBC Mutual Fund, and in a bit, we'll also be joined by Ashish Somaya, Chief Executive Officer of White Oak Capital Asset Management. But gentlemen, both of you, thank you so much for joining in. Really appreciate your time. Dr. Shah, can I start with you? And I've noted down this question because I wanted to start off with that particular one. It's long been promised and spoken about as India's big bet to become the global asset management hub. Now, I would love to know that from a regulator's lens, what does success truly look like now? And what will eventually make you believe that in 5 years' time, that this, I won't even call it an experiment, this promise has been successful?
Thank you. I think at the outset, I must compliment both NDTV and HSBC for having this conference here in GIFT City. I think it always adds a lot of value when you actually visit the center and talk about the financial center and activities in front of you. I think they always say that seeing is believing, and when probably many of you would have visited this place, might be for the first time, you would probably try and fill the place and understand that, look, it's not something on a concept. It is not something which has been planned. It is actually happening in front of you, and that's where probably the excitement comes more, to see it live. But I think since the morning, there has been some numbers which has been spoken about. Let me first start with where we stand and probably then answer to what you just asked me in terms of 5 years from now, where do we see ourselves. I think where we stand today, and friends, I was just trying to convert some of these numbers into INR.
Please continue.
Also see
Welcome, Ashish.
In terms of banking asset size, in the morning you heard about 40 banks. And what is the banking asset size of that banks is 11 lakh 51 lakh crore in GIFT City as on 30th June 2026. So this is the number which is actually already happened. It's a banking asset size sitting in GIFT City. The cumulative banking transaction in Q1, and probably HSBC would probably pump themselves more on this because the numbers of Q1 is equally exciting to see. The cumulative number for Q1 for 26-27 for banking asset size is 19 lakh crore for the banking cumulative transactions in GIFT City. Now, if you look at capital market and particularly the stock exchanges operating in GIFT City, in Q1 of 26-27, the monthly average turnover on the stock exchanges has been 10 lakh crore in terms of the volumes generated in the GIFT City right now.
Wow.
And the total debt listing as on 30th June 2026 is around 7 lakh crore of the debts which are listed on the GIFT City stock exchanges as we speak. But to our friends from the capital market and the fund industry, I think the numbers has been very encouraging. We also saw almost 400 funds and almost 250 plus fund managers. But what have they achieved in terms of cumulative commitments raised by these funds is almost 3,74,000 crore of the cumulative commitments been raised by them. And out of that, I think always been talk about how much of that has been invested. Is already 1,86,000 crore of money has already been invested from GIFT City into India and outside. Now, those are the real numbers which are happening as on date in front of all of us. Now, if we see in terms of next 3 to 5 years, what is that we are aiming? I think the first phase has always been, getting yourself started, and probably, in the morning it was spoken about that we are just small steps being taken. But actually what you see on ground is now a stage set for this to become actually a global financial hub. When you start, you almost start with a regional and the opportunities for the inbound, because those were the easy targets, that one, the money which was going out or managed outside for India, or the entities which were moving from India to Dubai, Singapore, Mauritius, now have a stop at GIFT City to manage the whole ecosystem here. And that's where we saw the first round of success coming in, that the whole 1,200 firms that you see now, from 129 firms in 2020 to 1,200 firms now. In last 5 years, we saw that 1,000 plus firms entered GIFT City, where majorly those which would have otherwise housed themselves into financial center outside to do India business. But as we speak, in the last 2 years or so, we have seen 150 plus foreign companies or banks entering GIFT City, which has probably some of them have no business in India. So they have entered GIFT City, we have no branches in India, and they have started doing international business from GIFT City. So this is probably a testimony to the ground being set for the regulation and tax as they operate. Many times it is said from an Indian perspective, one has to experience 4 or 5 income tax filing and then see how it goes. I think we have income tax filing history of 12 years now, and there has been no major disruption. I think 2 guys are sitting here, probably they can tell more about their experience, but there has been no major disruptions in terms of how the tax law is operating into the GIFT City. So from here on, if we have to see that for next 3 to 5 years, where we are going to, I think we can easily cross 5,000 firms in Gift City ecosystem, because most of the firms have started now finding it's much more easier, and it is easier to get license, it is on time, and you are able to sort out the whole ecosystem balance, advantage within the gift. But more importantly, I think the contribution towards the inbound capital, which can be raised for India, can be significantly higher than where we are. And that probably would be a testimony that how do we handle the NRI money flowing into Gift City and going into India. Can that journey be made much more simpler and easier through a digital? The more and more institutions make that journey easy into the Gift City ecosystem, I think the volumes, we may not put target to ourselves being a regulator, but we can foresee in 5 years, if that journey is more made simple and digital, it can really balloon into a number which probably can, have a larger eyebrows than what you saw as an INR numbers.
Very interesting. Good opening thoughts, and I would love for both of my other fellow panelists to come in on this as well. So Kailash, I'll come to you. Access, ecosystem, and then stability of laws. I think these three things would per se determine, amongst everything else, how does a global hub perform or promise over a period of time. He's laid out a small vision out here. How realistic do you think is that vision? And he's been talking about, consistently asking both of you about your experiences out here. What are those experiences?
No, I can not come, I'm like 100 or 200% in fully what the regulator said, because I think I've never seen a regulator more proactive in terms of working towards the development of the industry. The amount of engagement that is there, the bottlenecks that we face, if we bring out to them, they surely come out very quickly with how to overcome those bottlenecks. I think the regulator has, and the numbers that were there are testimony to the fact that it's a very open regulation, willing to listen to clients and really grow the business. So while on one side you take care of compliance, risk and everything else, it's also how to grow the business. So we see this as an amalgamation of both the things in a very rightful manner. What we are seeing, and I'll just substantiate to that, as HSBC, we are globally connected. We deal with clients across the world. Many of our clients are investing in India through the Luxembourg route. And now they want us to really open up funds in India, because they're saying, why should I go through Lux and come here? I'd rather go through Gift City and invest. And I personally would have interacted with about 1,200 to 1,400 clients across single formats, small group formats, multiple formats like this. And the amount of genuineness in terms of investing into India has only grown in these last 1.5, 2 years, despite all the volatility, despite the currency, despite everything. We have actually seen that people believe in the long India story the next 10, 15 years, and there's a lot of money yet to come in. So we have started seeing trickles coming in from Asia. We still haven't seen Europe fire, and if Europe really fires, you can see the volume scale up dramatically. And there's a whole lot of inquiry and discussions going on at this point in time.
Okay, thank you for that. Kailash, rather Ashish, thank you. And a similar question to you, if you will, right? One is, of course, there are obviously great parts to what GIFT is able to do and the vision that he's laid out. I would love for you to kind of elaborate a bit on that. And part two, just from a perspective of where GIFT is versus some of the other jurisdictions are, how attractive is GIFT for an upwardly mobile Indian to invest into India using GIFT, invest out of India using GIFT versus some of the other jurisdictions as well?
Sure. So in fact, when Mr. Shah was talking and he was giving a lot of the numbers, I mean, I felt pressure to quickly check the MIS and, So, no, but I'm happy to say we are, kissing distance of about 100 million business out here. I mean, we have inbound funds and we have, funds where we are raising money all over the world, investing into India. And also, like you were pointing out, raising money from Indians and helping them to invest in emerging markets. So both of that, we are nearly 90 million now. And I think maybe by next week or so, we'll be about 100 million in terms of total assets, which is managed by our Gift City entity.
Kudos. And it's a recent start, right? It's not a very...
Yeah, it's probably January.
It's probably what?
January.
Wow, okay. Kudos.
So I think there is good, good traction for this. And in fact, as next steps, these are AI apps. As next steps, of course, we'll be approaching the regulator to make a retail FME license, which will be more scalable. So we are obviously excited and backing it with all the efforts and hard work that we can make. On your second point, I think, see, when it comes to raising money all over the world and investing into India, I think 2-3 things to look for. First is, I think, all of us as participants, we should not look at it as a destination. I think it's a journey. It's evolving, right? Because look at India itself. We are barely a couple of percentage points of global market cap, correct? We are not really a single country asset class as of yet, because bulk of money till recently coming into India was always some part of global equity, global emerging market, Asian equity, whatever you have. But as India slowly becomes a more deliberate, direct, single country exposure, then obviously you will find more takers for investing via GIFT City into India. Because if I'm directly, deliberately investing into India as a single country, there's no better way to do it really. So I'm quite bullish that it's actually going to become very, very big as a gateway into India. I think there is no doubt about it. And we should not back ourselves just with incentives. We should not back ourselves. We should not count that our growth will come only because of incentives.
Of course.
But one can't, we would be failing in our duty if we don't mention the fact that there is tax incentive. Like you said, from anywhere in the world, if you're investing into India, there's no better place than GIFT City.
Okay.
Yeah, so as far as say US and other parts of Europe, Middle East, everywhere there are inquiries. Because there are vehicles, we ourselves have vehicles from Dublin or wherever, right? But despite that, people are interested to inquire with us that, okay, why is it that, how can we invest through GIFT City rather than investing through any of those? Now, when it comes to outbound, right? So obviously till very recently, we had onshore funds which were acting as feeders for investing outside the country, right? But I think that now clearly GIFT City is the one which is through LRS we are pooling money here and then we are actually investing. I think that for that to grow, it's just 1 or 2 things that we should, and like I said, it's a journey. So I think it keeps evolving. I think we are only talking in terms of Indians investing in India or Indians investing, we are only talking in terms of outsiders investing in India,
right,
or Indians investing outside. But I'm sure that when I say as a journey moving ahead, the regulator would definitely think about making it as a offshore fund jurisdiction. Like, somebody sitting in Dubai wanting to invest in Latin America, but the fund is, a fund center, a global fund center, a fund hub, where global fund houses are domiciled, right? So I think that would obviously be probably they would think and maybe the next step, and then I think it will become even more powerful. I think the true power will be, we'll all be very proud and it will be true power if it is not just a gateway in and out of India, but also on its own standalone. Because see, fund management industry globally, Indians are right up there, right? We are a global fund house founded by an Indian, and there are many, and there will be many more in times to come. So then why should we be housed in any other, because Indians are in fund management industry all over the world. You'll end up in London, Hong Kong, New York, exactly, Singapore, anywhere, right? They've done like in IT services. So if we want Indian companies which are truly global asset managers, then I think in and out of India is one, and then we all need to work together that it's a standalone fund hub itself.
Yeah, big shout out to Indians across the world, frankly, because it's not just in the hotel industry or the service industry now. Indians are present across, right?
See, you have seen Indian companies which are truly global IT companies. Exactly. You have seen Indian companies which are truly global auto ancillary companies.
Or pharma companies.
Yeah. But you will eventually, with support from GIFT, you will eventually see Indian companies which are truly global asset managers also, I think, in times to come.
Dr. Shah, is that a vision? So 2 visions. One, how do you encourage Indian money managers to become truly global money managers? And 2, can GIFT eventually, as a part of that vision, maybe not in 3 years, maybe not in 5 years, maybe in 10 years, but can GIFT independently be the hub for funds which have got no connection to India, but using GIFT as the place of domicile, if you will?
I think probably government was well aware that NDTV and HSBC was holding this conference. So I think recently in the parliament, you might have seen the amendment which has been already been moved, which talks of 9A.
Yeah, it will happen. I mean, I'm saying it is actually bound to happen. Even.
Yeah. So what I'm trying to convey is that steps has already been taken to make this as a reality, that you are a global fund manager. The fund is been incorporated anywhere outside and you manage it from GIFT City. And also from India. I think from both perspectives, government has already moved an amendment which takes care of many those conditions which were seen as more restrictive for a global manager to be sitting here. And probably that will become a reality as we speak in probably few months from now. So it's not about 3, 5, 10 years. I think you will see that happening, very soon from the GIFT City perspective. And then your second point of an inbound and outbound gateway as to how more and more people use this. I think it is for an inbound fund, as was mentioned. I think earlier it was very hard to convince people that look, this gift is also one of the locations that you can use for this, and the perception issues were very, very tough to overcome. But with the experience of last probably 4 or 5 years and with the global fund managers coming in, I don't think there is now a question in the mind of the global fund managers or the global funds that India and the GIFT City strategy has come right in front, right at the top, versus using Mauritius, Singapore. I can very confidently say that nobody is probably using now Mauritius to invest into India as a fund vehicle. They would always prefer GIFT versus that. And I was happy to hear that, what was said, that even for all the global funds, the question now is, it is better to do it from GIFT City for India. So inbound, I think it is becoming a no-brainer for people to use it. And also government has supported this with 25-year tax holiday. Fund manager sitting in GIFT, out of 20 years, there is 0 tax. There is no GST. So I think it's a comparable tax incentives offered when you are operating from outside and in GIFT City also. And I think the Indian fund managers which were sitting outside were probably getting attracted because of the tax regime being sold to them, and if you offer them the same, the question is, why not I do it from India rather than sitting outside and do it at 1/10 the cost rather than operating in an expensive location outside. So no doubt that inbound, it will clearly become a winner as we proceed. For outbound also, we have seen a lot of funds being now launched. In fact, the mutual funds routes been used in GIFT City for investing outside. And I was happy to hear that the HSBC may also be, looking at creating their asset management vehicle within GIFT City for outbound and inbound. So this type of structures in GIFT will offer a lot of Indians to use GIFT City for investing outside rather than sending money to Singapore and then being managed from outside India.
Got it. Well, and I believe Kailash will be leading that assignment. But I have a question for you, Kailash. Now, having set the stage out here, where is it that we, and by we I'm using the term gift per se, where is it that we are competitive with global jurisdiction? Where is it that we are lagging? I'm sure, I mean, nothing is perfect, right? There would be places where we are lagging.
I think so. First, we have to understand that today when we say the word gift, people know what it is. You don't have to go and talk to them saying, what is gift? They understand, especially if you are in the capital markets. Yeah. I think across jurisdiction, across clients, they know what gift is all about. But yes, they do want to know more. They want to understand it better. I think there's a little bit of lack of understanding about gift, which will, like Ashish said, it's a road journey, right? It will happen over a period of time. I think the challenge is, take Lux, for example, because that's the most accepted, universally accepted kind of jurisdiction. Obviously, the first protocol for a European to go is to go to Lux. Now, to convince him why to come to GIFT, we need to have those kind of protocols. So I think regulators already talking to the Lux regulator for passporting. Once a passporting, life becomes very, very easy for everybody to come straight in. Otherwise, there are some compliance rules, etc. for different countries. EU has something different, UK has something different. So it is complicated. And once that passporting arrangement happens, then it just smoothens out the whole process when it comes to foreigners investing into India. And I know for a fact that they have already engaged with the regulator in Lux, so which is a good sign. It does take a little bit of time for getting all the paperwork, all the T's crossed and I's dotted. But I'm pretty confident it will happen. I think in the meantime, over the next 1 or 2 years, I think more engagement is required from people like Ashish and me when we talk to our clients to promote GIFT. See, the regulator can do only so much in terms of promoting GIFT, right? But individually, if you're talking of 1,200 asset managers already out here, each one, when we talk to our respective set of clients, we keep pitching GIFT as a solution for global investors to come to India. I think that's where the buzz becomes much bigger, and that's when people's acceptability will grow. So it's just the question of 5 years versus multiple decades. So you see, they have a head start, and we are just 5.
Any major challenge?
No, that's the biggest challenge today. I think
that is on your part. On anything else on the regulatory side?
No, like I told you, I think whenever we as HSBC Group have gone to the regulator, I think they have really heard us out, and they have come out with solutions rather than saying that, sorry, this is hard-coded, written and cast in stone. No, it's never cast in stone. Okay. And every 3 years they change the whole, framework in terms of listening to us, putting in ideas. So I don't see that to be an issue. Okay. But yes, can the government also do that little bit extra in terms of using those diplomacies to get these jurisdictions to accept us and do these faster than the normal process? The answer is yes. Great. But I don't see any bottleneck per se. And I completely agree that this is going to be the next big destination, not just for inward output, but also as a hub.
Ashish, as a money manager, when you think of GIFT and you've made some rapid strides on the money managed through this jurisdiction, do you think of it as a destination for Indians investing abroad, or maybe your NRI clients investing into India? Or do you also think of it as a destination that you spoke about? Because you guys have global funds as well. You're truly a global house out of India, right? Conceived out of India, founded by Indian, as you say. One of the rare things out here at this point of time. Do you think of GIFT also as a hub for non-Indian activity?
Yeah, that's exactly what I said. I think, see...
You said that you want it, but are you already thinking of it?
Yes, of course, because look, ultimately this is all a question of ecosystem, right? Because there'll be multiple providers who will come in, like, whether it is custodians, whether it is fund accountants, whether it is the registrars, whether it is distributors, more and more managers, more funds, right? More platforms, correct? So I really think that apart from, why I specifically say it's a journey, because apart from what regulator can do, apart from what we all must do, ultimately we have to give it time for the ecosystem to really, because because this has a viral effect, right? Because if there is an ecosystem, there are more participants, then it spreads. Second, definitely I think I have experienced what Kailash also mentioned, which is that it's a bit of a sales job. It's not for the regulator, it is for us to do the sales job, because look, when I ultimately land up with a client, let's say our sales team is there in Zurich, UK, multiple jurisdictions, we have salespeople, correct? Now, they are, let's say for 6 years, we are running a UCITS fund investing into India. Take an example. Now, when he sits there, he has to tell the client, sell India, then sell our firm, and then when the documentation comes, they are used to seeing a certain form and format of documenting and doing the transaction. Now, there, we need to make the leap and say, look, if you invest through the GIFT City Fund, it is more beneficial in 1, 2, 3, 4, 5 ways. So which is what now, last thing, beyond the sales job, we also need to make sure that our GIFT City Fund is registered in various jurisdictions with the local regulator, right? I mean, because we can't just show up. I mean, I can't just land up in Dubai and start marketing a fund. It has to be registered with the local. So right now, we are crossing all those hoops. So I don't think it is much yes, the long-term ecosystem, what I said as a fund hub, there we all need to work together. But the current point which I'm saying, which is about raising more money, I think it's a sales job.
Okay. And so just before I come to Dr. Shah, just one quick follow-up. Anything that you would want to happen? I mean, I was asking Kailash the same thing, right? Because nothing is perfect. There are challenges, things need to improve, and it's a continuous process. I think 10 years from now, we can have the similar conversation, right? Because there will be challenges which the regulator will have to do. Is there anything specific that comes to your mind?
Yeah. So I think that when we were talking about the long-term vision of making it a global fund hub, and I gave the specific example that let's say somebody is sitting in Dubai, investing in Latin America or some emerging markets, right? And we are managing that money from GIFT. And let's say the fund is actually domiciled in GIFT. It is, licensed by them, domiciled in GIFT. So we are pooling money from all over the world, and from there funneling money all over the world. Then I think out here the tax is what one needs to make sure that there are no taxes, because it is just a fund hub. It's that income was not yours to be taxed. It's just a fund hub, right? Because you're managing money for global people investing all over the world. So I think some of those things, and I'm not fully knowledgeable about what all it entails. See, money going to India, money going out of India, we have complete tax jurisdiction. It is within it is ours to tax. But if you are a fund hub, right? I mean, it's just, it's your fund industry sitting here and managing. It is not actually income produced out here. So then how do you treat that? I think those things one needs to, by the by, I think that is what will evolve.
Got it. Like a transit flight, effectively, only using the airport as a hub for landing and
a transit flight, ideally, you should not ask for visa, something like that.
Something like that, okay. Dr. Shah, any thoughts on that part one? And part two of my question, of course. Maybe you want to respond to each of the points that both the gentlemen made. Or part two, you yourself would have already been planning for the next 3 to 5 years. What are the innovations that you're truly excited about that GIFT will bring about over the next 2 or 3 years? So two-part question here.
Just a small data correction on the 1,200 is the overall firms that we have, and 400 are the funds, and 250 plus are the fund managers. So just to put that in right numbers. But just one disclosure, I have no influence on them. I am from development side, and they are not talking anything on regulation. It's also a surprise to me, because that always comes up in every discussion. But I have one complaint. As a moderator, you always ask the institutions that what is the ask from a regulator. You never ask a regulator what is your ask from the institution.
That's coming up.
I think you should also.
I said we should do better.
You should also ask that what is our expectations from the institutions. Because every time they come, the institution comes to us and they will say, Singapore, this is happening. Hong Kong, this is happening. Mauritius, this is happening. So you should change everything of your regulations to align it. And we ask them, how is your Hong Kong office operating? How is your Singapore office operating? And how is your GIFT City office operating? Can you have a benchmark there to make sure that your GIFT City office is equally in line with what the Singapore office operates? Or it should be better than that? Because I think the way the opportunity is coming to you is much larger. But the way it is managed is an extension of an India office. That, I think, has to be fundamentally changed from the institution perspective. You are actually managing a global office, sitting in India, and managing the global money. So if that changes, I think you will have a lot more of businesses, and you will have less of the regulators in the room. And I think the businesses themselves will be talking to each other in a much larger sense. So that is our ask from the regulated entities. But to the point which I think Ashish mentioned about the tax, I think it's a very valid observation that when it comes to an outbound, our structure does not operate in the same way as it operates from, say, Singapore or Mauritius. And in last 10 years, the tax policy changes has always been one key ask: give us a parity. Whatever you can do from Singapore, you should be able to do in the GIFT in the same tax principle. Your tax principle cannot be lesser than what you are offering to Singapore. Sometimes it gets accepted, sometimes it gets rolled over to the next year's discussion. So it always keeps coming.
It's a matter of
Probably in this year's budget also, there will be discussion around how to align the tax policy where there are gaps to make sure that it really achieves the scale and size which the government has planned for GIFT to become.
Yeah, well, we are going to record this and send it to all the AMCs individually that this is what the regulator has said for sure. Okay, yeah, sorry Ashish, you want to respond to that?
No, I think he's right in comparing that, okay, what is the number of people and size of office in different jurisdictions and how much meat. So of course, we are increasing our strength, but yes, he's right that how much meat are we putting, how many people are there in this office, what all functions are we running here. I think all those are important clearly. And like I already said, we have to do a better sales job.
Yeah, actually, yeah, to be honest, both of them did say that they are not doing, or maybe organizations at large are not doing enough sales. So I think both of them are candid enough to say that it should happen. So great. Okay, is there any other question, Dr. Shah, that I as a moderator have failed in my duty to ask the regulator about what the industry should do?
I don't think so. I think you have done your part very well. I just wanted to add few things which I thought will help everybody to put the things in perspective. But I think it's a great way of interacting with the institutions, get their insights. And as our chairman said in the morning, I think the biggest advantage for us as a regulator is that we are new. You know, we don't have a legacy with us, and that's helped us to be on ground, helps hearing the insights from the industry and probably help them achieve the roadmap. And that's the common objective. It's not that his growth is not going to, be negative for me. Both of us are on the same platform. The more they grow in a more responsible way, I think that's what the regulator wants.
And I'm sure, Dr. Shah, that they would echo the same thing, because the more this ecosystem develops, it's great for everybody who's a part of this ecosystem, right? I mean, it is in their interest as well, as they've set up shop out here in GIFT, that this expands truly and meaningfully, right? I have one last set of questions to everybody, and Kailash, I'll come to you first. We've spoken about the larger points out here. Are there any points of friction that you hear from other parties? One is what HSBC truly may want and would be doing. You would be traveling across the world, listening to other parties talk about other jurisdictions versus GIFT. Are there some points of friction that might be prohibiting them from setting up shop in GIFT that you hear of?
So, it's not points of friction. I think it's the interregulatory connection, like I just said, right? Passporting happens, life becomes very easy for a European client because they understand the rules, regulation out there, and it just allows them to be free. Second, like Ashish said, right? Once your passporting happens, it's easier for me to go and promote my products. You know, I don't have to go to every jurisdiction and then take approvals. Otherwise, it's reverse solicitation. That becomes a serious challenge in terms of going. Because unless a client asks me, I'm not allowed to connect with the client. Now, obviously, that limits all of us in terms of communicating what is available in GIFT. But, I just wanted to say something which I think possibly we missed out on.
Please.
The headlines over the last many, many months has been FI outflow, FI outflow, FI outflow. No? The question then is, why are these numbers happening? They are also FIs, right, coming into India. And those numbers are growing. Our book is grown up 3x. So I'm just saying that there are a large number of clients across the world who truly believe in the India story. And they genuinely want to come into India, and they are not worried about this quarter, next quarter, monsoon 85% pay hai ya 105% pay. They are not looking at it. They are looking at the structural story of India, and they cannot see any other big nation in the world out there who's going to grow faster than India. So that's the conviction which is there with majority of the clients, and long-term investors are still coming to India. I think we miss this story when we talk about the headline numbers, and the front page or the front headline in a show is that FIs are going out. If FIs are going out, my question to Dr. Shah is that why is his business growing? And that's also FI business at the end of the day. So clearly we see this as a big diagram. There are clients who are going out, but there are enough and more clients across the world who believe in the India story and coming in.
Dr. Shah, you want to kind of quickly respond to that? Because frankly, while we may talk about it this way, the headline numbers are not misleading, and the headline numbers are that there has been significant outflow, not just in 2026, but 25 and 24 as well. How do you respond to what Kailash is saying?
I think first we have to understand the GIFT from the FEMA perspectives outside India. So, there's no FDI which applies to GIFT City when somebody comes in and becomes an FME or a fund registered here. But when you invest into India, you use the FPI route. You take the SEBI license and you take the FPI route and you invest into India. That, I think, if you start seeing the RBI database now, and they have also started publishing GIFT IFFC, from where the money is coming in. So they have also now slated one line item is the GIFT IFFC in the FDI and the FPI by SEBI. So that has started coming in. And our numbers, as I said, is the one that gets published every quarter. It's a quarterly publication that we do based on the data that we get from all our regulated entities. So the numbers are clearly showing a lot of investments from GIFT City going inside. Our zone also operates outbound. So many of the investment coming in can also go outside. And the outbound has also been growing. So both ways, we have seen increase in terms of investments. I'm not expert to probably say that, why then it is, the FIIs are going out and why this is coming in. But I can clearly say our numbers are that the investments are going up.
Okay. Just the final question, Ashish, to you, and then we'll maybe wrap up with a small round of that if the panel were to reconvene in 2029, what would you think would have been definitely achieved? But before that, Ashish, same question that I asked Kailash, any points of friction that you hear other people tell you, it's not your view, but others are telling you about why is it that they might be hesitant to immediately set up shop in GIFT despite the promise that it gives versus other jurisdictions?
No, actually, not that I have come across. In fact, maybe it could be more awareness related, more awareness and more, operating, understanding related. But actually, if you see, like we've a couple of times discussed, if you're investing into India from any part of the world, then it's a no-brainer, it's a great jurisdiction. And I suspect that costs and all also, like, Kailash mentioned, and we all operate in Europe, Luxembourg, Dublin, etc. I'm quite sure cost-wise, we are way more affordable compared to. My guess is that if you set up a Luxembourg fund, I don't think it will be anything less than $1 million a year establishment cost. I don't think it can be less than that. Right? So compared to that, it will obviously be more attractive to operate here, especially if you're investing into India. So I mean, honestly, I've not got much color on, what I thought I've obviously discussed, but
of course,
got external feedback.
Well noted. Okay, so then last question, and the same question to all three of you. I'll start with you, Ashish, then to Kailash, and then to Dr. Shah. If this panel were to reconvene in 2029, what would you would want to say that it has been achieved? Now, the ambit of the argument is GIFT and your operations within GIFT.
Yeah, so it might sound repetitive, but I feel that, more as a country, more as a jurisdiction, more as an industry, the ambition is what I actually said, that, if we all work together and make this actually like a, see, for Indians to be truly global asset managers, whatever I said, I think I'll be really thrilled if over the next 5 years, it's not about in and out of India, it is actually a fund jurisdiction. That would be most exciting thing to happen for us. Yet another industry where India will kind of rule the roost.
Awesome. Okay, Kailash?
So as asset management,
I'm really
HSBC,
sorry. I just wanted to say that most of the other jurisdictions don't have a humongous home market attached to it.
Yeah.
We are truly unique.
That's true.
Right? So we can always use inbound and outbound as the anchor point, but then it will actually evolve into being something else. Yeah, I'm really sorry. Yeah, please.
Yeah, Kailash.
So as HSBC Asset Management, we are present in more than 20 countries in the world. And in 2029, I would love to see a situation where every client of ours actually talks to us saying, I want to go through GIFT. That I think would be what we have achieved by 2029.
Dr. Shah, you want to add some numbers to that as well? You seem to be a numbers guy. You started off with those numbers.
I would say the Global Financial Center Index, which gets published every, twice in a year. We started at 94, 95 in that index out of 130 financial centers globally. We are now at around 47, 48 somewhere in last 5 years. And probably, as you said, in 2029, I think if we are in top 20 in that financial center index, I think it will really give a lot of insights as to how the zone has really evolved, not only from an inbound. I think from inbound, I can very confidently, as I said, we can say that it can become top 5, a destination for you to invest into India as a center. But globally, if we can be in the top 20 by 2029, probably that we can all feel proud about, that look, as an Indian, we are able to produce something which is of a global nature.
Wow. Well, power of manifestation. We should try and do that for sure. But gentlemen, all three of you, thank you so much for taking the time out and being on this panel. It was really, really nice to have this conversation with all of you. Thank you.
Well, technology has changed almost every aspect of finance. Opening an account takes about minutes, payments happen in seconds, artificial intelligence is reshaping everything from fraud detection to investment advice. But the bigger question is, can regulation evolve quickly enough to keep pace with innovation without compromising trust? That balance will define the next generation of global finance. And to discuss that, please now welcome Vijay Krishnamurthy, Managing Director and CEO, India INX, Joseph Joshi, Chief Tech Officer, IFSCA, and NDTV's Gauri Trivedi.
I think by now we have all been able to establish how important GIFT City is, the kind of opportunities it throws up, and how important it is to know more about how it can be part of global finance supply chain. But that's only part of the story, the other part being the nuts and bolts of it. You know, if there is a kind of tech digital assets that GIFT City can offer, what could those be in terms of specifics, where it stands between the tech and digital aspects of financial assets? What could those particular products be? What is the scale of the regulatory landscape? I know we touched upon this in the previous panel as well, but specifics to innovation versus regulation, where exactly is it? And also the fact that GIFT City is the very first laboratory, so to say, when it comes to the kind of global financial ambitions that India has. And in a laboratory, some things work, some things need to go back to the drawing board. What exactly are those is the kind of conversation we'll try and cover. And let me start first by asking the one thing, you know, and in fact, I noted these terminology down because I would like to believe that I'm not the only one in the room who doesn't know all of them. Tokenization, blockchain, AI, digital assets, programmable finance, it's a long list actually. What all are these that we are looking to build in terms of the first set of products that will come out from GIFT City? I know we now have an exchange and a regulator essentially covering both aspects of the conversation. And this is a question I throw out to both of you, which is that some of these are going to be important when you talk about India's aspirations in the global finance landscape. Some of them will also be tech first, but which of them is really going to drive global investor appetite when it comes to coming in India? Sir.
Thank you so much, and happy to be here. So it's a very interesting, place where we are right now in GIFT IFSC, and happy to be part of this exchange, which is driving change, and possibly looking at a lot many things in the future. So today, if I was to say, as an exchange, we are an exchange, but we are a fintech firm. Right, because nothing in an exchange works without technology, or nothing in the financial market today works without technology, because you need to have a good technology, a fast technology, a very reliable technology, and which is very quick, because that's what the entire thing is. And happy to share that, because being part of BSC, we are very capable, and we have the best tech suite that we have today. And given this entire space that we are in and we are talking about right now, I think so we have used technology extremely well to offer different kind of products to various investors, be it inbound or outbound, from that sense, wherein right from integration of the customer to remit his money into GIFT IFSC, to the way he invests, to the way he gets back his money, and that entire chain is very well connected through various technologies, and it's made as seamless as possible. As in the earlier panels, it's been always discussed that we are just the beginning, and there is always a lot more to do and a lot more to work on. I think so. There we are working in the absolutely right direction, and this is always going to go hand in hand. I think so. Tech and finance, or as we call as fintech, is going to go hand in hand. And all our products are also that's going to come in, whether it's going to be in the form of digital assets or real world assets or whatever, or in terms of securities that may define, is going to be very important, whether how it's going to get integrated through technology.
Joseph, which are those products that are really at the forefront of what you are working on and building from a regulatory landscape as well? And anything else that you want to add to what?
Well, good afternoon, everybody, and thank you for having me here. And before getting started, as always, the disclaimer, the views are personal, because being a regulator, we need to be a bit cautious. But very interesting question. I'm a technology guy, but at the same time, I'm also a regulator. So which means for a regulator, it's tech neutral or tech agnostic, as we call it, right? From a regulatory lens, if I look at it, we're not going to regulate the technology. We are going to regulate the risk or the activity which comes because of you using the technology, right? So same activity, same risk, same regulation. That's what we kind of preach. Now, there are cardinal things which we hold very close to our chest, like, for example, financial stability, market integrity, consumer protection. So these are the angles which we look. But being the technologist, I'm also intrigued and excited by these technologies. But then it is not about picking one technology. Each has its own customer pain point or friction which it's solving. Be it tokenization, your programmable finance, AI, blockchain, whatever you're talking about. But then what our chairperson told earlier, that's the number one. This bunch of technologies, is it getting the trust across? And we are talking about cross-border here, global financial center. So number two would be, are we talking about interoperability? And three, which I will look at, is, are we talking about scale? So if your technology solutions, whatever they are, they come together as a bundle, as a stack, can get these things in order, while looking at those cardinal principles we hold dear, I think that solves the equation for us. So that's my 2 cents.
And which brings me to ask, which is that next wave of financial infrastructure that we can expect that global investors would want? All of these are products of the future, but not all of them have the same appetite or the regulatory landscape or even the tech wherewithal. Where is that, appetite most when you talk about the next wave of financial infrastructure?
See, when we speak about the next wave, what are we really looking at is a question to be asked, because today if we talk about, say, Indians, right? It has been far more concentrated towards the Indian markets, and they're looking to really diversify into the global arena, right? And diversification is good. Diversification in terms of both, hedging towards the currency as well as your portfolio diversification, rather than being concentrated in one single market. So I would like to put it this way, that post-COVID itself, that next wave has started, because everything has become a click of a button, right? You're sitting in the comforts of a home, and you were doing things in the Indian domestic market, and even globally, right? And today, thanks to the gift and the environment that we are in today, and of course the regulatory support, and of course Chairman also spoke in the morning, regarding the use of various tech. So now it's also getting connected globally, and it's both ways. It's not one way, right? So it's not saying that that somebody who's only wanting to look. So diversification, when we say it's a global diversification, people are also wanting to see from sitting in the Europes or the Americas, how can they participate in the Indian growth story. So when you're looking at the next wave of the investments, it's actually the Gen Zs who are really driving it, because today they are a lot more informed, a lot more information available to them, and they are looking for various avenues to really do that. Now, only our job is to say that how am I going to enable them? How am I going to be the enabler, right? Be it technology, be it product, be it trust, be it safety, right? So these are going to be the the key pillars based on which how I'm going to really help drive this next wave as an exchange, giving the right set of platform from an exchange. On that platform, what are the kind of products that I'm going to offer, which is going to be regulatorily compliant. And see, being an exchange, we are typically B2B participants, right? But the whole idea for us is to see how when we are connecting to the B, which could be an institution, which could be a broker dealer, how are we enabling his client to really participate in that entire journey of the transaction. I guess that's the vision with which we are working towards. So more than anything, I think so the next wave has started, and as we always say, that's always going to be the the levels of improvement that's going to happen. And as you had mentioned one of the term, tokenization, right? I think so tokenization is, anyways, we can always call it again as fractionalization, right? Or tokenization or fractionalization. So today, through our platforms as India and XGA, today somebody is able to invest in the global markets and own fractions of shares, right? So that's anyways going to be, that's anyways possible in the securities market today, wherein if I have got, say, maybe $100 or $500 in my pocket, can I buy, and I may not have the ability to buy, you know, say a SpaceX or one share of Apple or one share of Microsoft, but I have $100, can I use it and be, you know, own a fraction of their share? Today that's possible. The technology has enabled that, the platforms have enabled that to do.
I'll come to tokenization in a bit, and I'm going to ask Joseph on that as well. But the fact that in a conversation around finance and global finance, we are actually talking about Gen Zs, just tells us that how important they are as an important stakeholder. You know, you're talking about a 60-year journey of a 20-year-old in terms of finances, and how they view technology as more than just an enabler, but probably, you know, gateway to what global finance really opens up. And that's, I think, extremely important to understand. Joseph, then let me ask about the tokenization bit, because, you know, that's a very important aspect of how and what really GIFT City offers, right? You know, in the previous panel, Neeraj asked everybody that very few people actually understand the opportunities that GIFT City offers. They all want to know about it. And I think tokenization is the best example of just that. You cannot purchase an asset class or make deep investments in a particular asset class, but you can have exposure to more than one asset class. And I think that's best exemplified through tokenization. Your thoughts on the tech infrastructure and backbone around it?
Yeah, so when we talk about tokenization, it's fractionalization, agreed, but then you move the whole fractionalization onto a distributed ledger. And with it, they're talking about atomic settlements, the liquidity, you know, cycle moving very fast, the velocity is really fast. And literally you can digitize any asset. That's what they're trying to say. We had our share of sandbox experiments. We started with deposit tokenization. We did bond tokenization. Then it moved into real estate tokenization. Applications started coming in that. We got a few fund tokenization. And then slowly onto bullion, we got some gold tokenization ideas. And of late, we have seen ship tokenization and also distressed assets related tokenization. So it's like literally you can tokenize anything except love and hate, I think so. You know, that's how it's going. But then the power of that is something which we all need to understand. And who owns the asset? How can they buy, sell, trade it, primary, secondary? What's the legality around it, right? And how does it get settled? What happens when something goes wrong? So there's a whole gamut which has to be looked out, and it also changes based on the asset.
Do we have answers to those questions, or is that still work in progress?
So there was a concept paper which IFSCA had published. We had very rich responses to that. And currently, the team is working on the regulations towards that. So while the sandboxes have given us a lot of learnings, very soon we will translate that into a regulation, and probably that's where it's going to take off. And also, I think the SMC, the Securities Market Code, is coming up. So there might be some hooks and crops in that as well.
And I think that's the whole dilemma with regard to regulation and innovation, isn't it? You move too fast, you end up becoming, it could actually be harmful to investor interests. You move too slow, you're pulling down innovation, so to say. And I think that balance is going to be extremely precarious when it comes to GIFT City, isn't it?
See, let's admit a fact. Innovation is always going to be ahead of regulation. Regulators will have to catch up, markets will move fast. That's a given. But the balance, as you said, is the right thing. And as I briefly touched upon, we do the sandbox part. And I think probably we have one of the best sandbox frameworks. We have different flavors of sandbox. Something called as an innovation sandbox, where you have a bleeding edge idea. We can play it with synthetic data to see how it works with this risk-reward equation. You want to test it with live data, but then at the same time, I need to balance it. So you kind of ring fence it by saying, hey, let's do it with 100 users, 500 users. Let's cap it up at 100K, 500K. So that's what we do in the regulatory sandbox. We also offer something called as an interoperable sandbox, whereby a foreign fintech or a startup can also reach out to the regulatory sandboxes of our fellow domestic regulators, RBI, SEBI, IRDA, and also there are some connects, fintech cooperation agreements with, say, a monetary authority of Singapore, so that we have ties. But then these are at a high level, but what did we learn from them, the outcomes? So when we started the sandbox to learn about the innovation, the first wave of applications were on payments, cross-border payments. Mind you, that time we never even had a payments division in IFSCA. But clearly the market was telling us, hey, we need cross-border payments. Today, what do we have? We have not only a payments division, we have PSP, the Payment Service Provider Regulations. We have a FCSS, Foreign Currency Settlement System. The payments landscape has really taken off. The starting point was your sandbox, the innovation angle, keeping your ears to the ground. Similarly, we had applications on AML CFT. In fact, there was a very interesting application from a space tech which was trying to get the geospatial intelligence about a satellite and give it back to an insurance company so that they can underwrite the satellite insurance better. Now, how do I fit that? So then you heard of fintech, so we invented the term called TechFin so that we could accommodate technology for this BFSI or the financial institutions. So today that became, we started with a regulatory framework, but today it's a regulation, TechFin and ancillary regulation. So that's how the progress has happened. Similarly, we are seeing on tokenization. I just told you the kind of tokenization things happening. So we are seeing these innovations coming in. We have a dedicated area for that. And the framework which we have put in, we commit to responding in 30 days for the preliminary application. And the average right now has been 10 to 15 days. So 10 to 15 days response from a regulator on an innovation, I think that's a global standard.
Yeah, it is. Your thoughts on that? From a builder's side, how do you see regulator responding to innovation that's coming in?
See, I think so, Joseph really covered most of it. And I think so there is one good thing from an IFSC perspective. We have, we are just 5 years old, if I was to say that, 5 to 6 years old. So we also have an example of what should not be done, right? So we have a clear global example on, how to tread. What are those things which need, because it's important that, okay, people will know as to what really needs to be done, but also because we are a late starter onto this entire IFSC journey, I think so we are at an advantage of saying that, okay, what are those mistakes which need not be repeated? And I think so, given the framework that is there today with the sandbox, which was rightly pointed out, works really well. I think so we are well balanced with that, and we're doing well. I think so. The kind of progress that we're making in each of these directions is really good. We are actually, I would say, term it as it's innovation with caution, right? So I think so. That's the right balance with which right now GIFT IFSC is really moving ahead.
And I think that's one thing across the board, whether it's GIFT or elsewhere. What is it that investors want more? Certainty or speed? And I think that's the whole point about flexible regulation. Do you want certainty in terms of the regulatory landscape? Do you want speed of adaptation? And I think that's where investor comfort really lies, isn't it? Knowing that answer.
Absolutely. But then you know what my take is. I would always want certainty as a regulator. Because, see, when you do any POC, yeah, you're trying to do something for 3 months, you need speed. But then we are creating the next generation financial infrastructure. They should stand the test of time. It's not for 3 months. So basically, I need to know what will go wrong, what are the risks, and I want it to be certain, and as we all say, the trust. Only then the whole thing will move in here.
Given the fact that we are expecting, and the aspiration is to be able to not just compete, but at some point of time replace in Abu Dhabi, replace in Dubai. These were conversations that we saw morning was about, and rightfully said, while Singapore may have a 100-year advantage, Hong Kong may have a 200-year advantage, Dubai and Abu Dhabi don't. So when you are to compete on those parameters, the most important is also the regulatory comparison, isn't it? Your thoughts on some of the global comparisons, global learnings that we probably need to imbibe more and could speed up on?
See, I think so. We, as I said, there's a good advantage that we have at GIFT.
Any examples that you would like to give, whether from a Singapore or a Dubai or anything else?
Yeah. So, see, there is this, when you sit to invest, right? Globally, there is this concept on, say, the omnibus as a concept, right? Wherein the end investor is typically not known, or who's really investing. The UCCs or the UCCs are typically not known, and there's always a face behind that entire thing, right? So that's a concept, I think, so which has worked well globally, and and that's going, and that's possibly one area or aspect which possibly and we are working on that, I think so. We as GIFT IFSC along with the regulator, but yeah, we have some alternate to that, which is we call as a SNAP structure, which is a segregated nominee account structure, is something which is an alternate to that, which we are working on. So that's anyways. See, the good part, if just because you asked me to give an example right now, what is there and what we are really working on. But the best part, as I said, is innovation with caution. And what we have done is, because earlier when IFSC or IFSCA was established, right, I think so a lot of the SEBI regulations or the domestic regulations were something which is applicable here. But I think so over the years, what has really happened is the regulations here have actually blended with the global best practices, taken that into consideration with, of course, the heart of India, which is being quite conservative and quite being risk protective, being risk averse, is something that we have done, and we have beautifully blended that regulations. And I think that's a very continuous journey which is on. I think so. Also, as I understand, the regulations are reviewed every 2 years, to see what are those things that really needs to be got into account and what things really needs to get changed. So from that perspective, I think so we are although we have started a bit late as compared to other IFSCs, but the journey is on, and we are taking the examples from them, adapting it to us, and that's going to be the uniqueness about us. And soon I think so we should be able to compete fairly and squarely with all the other IFSCs who are well established than us.
You have a regulator responding in a fortnight, and I think that's breakneck speed, if you ask.
Absolutely.
Any best practices that you would like to sort of speak on that are being, examined and looked at from a regulatory lens, given that we are talking about some of the global comparisons?
Absolutely. In fact, we are one of those regulators who have a regulation on how to make regulations. Right? So we are very clear, and whatever the window is said, 3 years has been revised to 5 years. Every regulation goes through a public consultation. So basically there are no surprises to the market, right? So it's at least a minimum 30 days. It's out there for people to give the feedback.
But that's standard. I mean, you look at TRAI, you look at other regulators, they also have the same.
Correct.
Then they hold an open house also, and
yes.
Yeah. But yeah.
Yes. But then that has been institutionalized here. It's not an afterthought. Right? But then some of the other aspects, I hope the crowd already said, like, the way things are open here, where we are open for the feedback. I think that's one of the biggest advantages, because this is a growing ecosystem. We don't have the baggage as the other regulators might have. So as he rightly said, the IFSCA 1.0 was taking the domestic and making it customized for the IFSC. The 2.0 was looking outside to other global regulators to see how can we make it better. And the 3.0 would be how can we bring in totally new businesses, get that blue ocean strategy so that we really get up there with the other jurisdictions. So the 3.0 is where the Viksit Bharat, whatever the brainstorming which we're trying to do is what we are trying to do. Because the 1.0 was getting it started, 2.0 got the global best practices, 3.0 is where we should start differentiating. So we are very clear on that path.
And that's, I think, the whole journey all about. The fact that some of the numbers that have been shared today, those figures, they're very heartening in terms of the banks, the kind of exposure that they have, and the kind of, whether it is in debt or equity, the overall portfolios that are there. Which brings me to ask the other third part, which is this of the conversation, which is around the fact that when you talk about this space and when you talk about it as really being a first for India, there will be a certain amount of learning along the way. There will be some things that work, some things that are probably okay, but they can't be scaled up. Any learnings that we've had so far, because that's exactly how we're going to really learn when you talk about this as a laboratory. Any specific examples that you could share? Solutions that worked, technologies that worked, but were not scalable, were not doable on a large scale that Gift City aspires to?
I think so. Every day is a learning curve for all of us, because I would consider us to be a startup where we keep learning every day. So I would just take this example of, say, maybe the global access business, which is there, which is more from an outbound perspective. As India INX, we had a subsidiary, India INX Global Access, which we established in 2018, right, which was more targeted towards maybe the corporate or institutions who were there in established and gift IFSC who were wanting to invest globally or do prop tradings into the global markets, right? And actually that really didn't scale up. It really couldn't really much do much because it was really confined to a very limited set of people. But I think so what learnings that we got out of that was, and what we did really well along, and the regulator, a lot of credit should go to the regulator. In last year in the month of August, as we speak, I guess today is 11th August, perfect. I guess 12th August was the circular date, I remember that distinctly. So they came out with a very clear-cut framework on what can be done, who can do, what are the roles, responsibilities, and all of these things, right? 2018 and post-November 2025, right, we have seen significant increase and the scale has significantly gone up in the global access business. And the learning was definitely, what more should be done, what is that really needs to be done, what clarity, as we really spoke about clarity, speed, trust, right? When you have somebody which is, you have a regulator who's putting these things in very clearly in black and white as to the do's, don'ts, roles, responsibilities, who can do, eligibility and all of these things, that lends a lot more clarity, that brings a lot more trust, right? Once that is in place, that entire foundation or the base is in place, then is when the speed is addressed, and that is where the fintech really comes into the place, whereas the technology comes into the place. And that has really scaled it up, because I will just give you a few numbers. Last year for us, basically Q2 or Q2, Q3, we onboarded about 500, 600 clients. In Q1 of this year, we have onboarded about 66,000 clients, and the volumes have also gone up more than 100%. So you can see that, when something which started in 2018, where the scale was, very, very limited to a few people, with immense clarity, trust, all of these coming in, with the help of technology, the things have got scaled up significantly. So that's a very good learning and an example that I would like to, bring it out in terms of the business itself that has happened here.
Joseph, you want to add something to that?
Yeah, so from learning's perspective, if you see, IFSCA is a unified regulator. So, it's not just a banking sector or a capital market, it's unified. So you have all of these different aspects of finance coming in.
And starting from scratch, essentially
Yes.
building all of it scratch and delinked from the other regulatory landscape in India.
Correct. So that it's an immense learning which we have seen. Like initially we wanted to harmonize it on day one, but it's not that easy as we think. Can I get all those supervisory returns harmonized? Because there's a cost of compliance when the regulatory entities has to file the returns. But then it's not as easy as we think. While we are working on it through a subtech project and other stuff, the learnings are like, let's not try to, harmonize everything on day one, make sure it's golden. It doesn't work that way. It's putting a lot of stress on either sides of the equation. So that's one big learning. Second, as I said, when I use the word subtech, it's the technology which is going to kind of help us in many of these things, right? Get the things leveled up. And the whole game is changing now. Like what we did the last 5 years is not what we are going to do in the next 5 years. That's not how it's working. So which means, like you already talked about the technologies, AI and all this stuff. Now this is a new set of regulations coming in, right? How do I look into that? So the fundamental learning of keeping the ear close to the ground, listening to the industry, that's going to remain intact, because that's where most of the things are going to come in. Right? Nobody's going to sit on a high horse. We need to keep the doors open. Only then we move forward. So that's very, very fundamental. But the larger thing is, how do we use technology to push some of these things, because you are going to be a unified regulator playing across multiple things. So very recently you would have heard that the pension sector is something we are activating with our own set of things. Now all these are going to bring in new risks, new perspectives, new opportunities. And that's where we are all very keenly watching, because a black swan, it's very, very easy to happen because you're kind of converging. But at the same time, you also have global benchmarks where unified regulators have been, like MAS, Monetary Authority of Singapore, or DFSA. So we are also learning from fellow regulators. So that's another best practice or learning which I would say, where we are trying to see, do we really need to make all those mistakes? Can we leapfrog? So overall, it's pretty exciting, but at the same time, a lot of responsibility being a unified regulator.
Exciting times to be in, and let's hope that when we have this conversation next year, we talk about far more learnings, lots more in terms of technology and innovation, and of course, fewer mistakes. And that's, I think, the whole point as far as the regulatory landscape is concerned. I'm going to wrap this here. Thank you so much, Mr. Krishnamurthy and Mr. Joshi, for being part of this conversation.
Thank you very much.
Well, on that note, we'd like to warmly invite you to join us for lunch now for the course of the next hour, and we'll be reconvening here in an hour from now. Thanks so much.
Meridian is the brand she trusts. Bharat Omni. The same way. She picks a dollar deposit. Anya has just signed in to Meridian, her app in Dubai. Meridian is the brand she trusts. Bharat Omni is what runs underneath. She opens deposits sitting beside her wallet and her card. One is already running, booked the same way. She picks a dollar deposit from AU Small Finance Bank. Our calculator shows what it earns and what matures. Now our KYC begins. Her Emirates ID checked where she lives. We score the risk and put it to the bank, approved. We issue her fund transfer instructions. She remits. We match reference remitter amount corridor. The FD is booked. Rate held, evidence sealed.
All right, ladies and gentlemen, we hope you've tucked in, and we're going to start in another 5 minutes. If I can request you to take your seats and also put your phones on silent. Thanks so much. Welcome back. We hope you tucked in. Well, money moves faster today than ever before. Yet, sending money across borders, it often remains slower, more expensive, and more complicated than sending it across a city. As trade expands, though, and Indians become increasingly global, cross-border payments are no longer simply a banking issue. They are an economic competitiveness issue. So how close are we truly to seamless global payments? To discuss just that, please welcome Rishi Chabra, Country Head, Visa India, Ms. Deepthi Sivuri, Head of Cards and Retail Lending, HSBC India, who will be in conversation with NDTV Profit's Managing Editor, Tamanna Inamdar.
Lunch, we have been thinking about how to ensure that post-lunch snooze doesn't hit. So we promise to keep the conversation flowing and as interesting as we can. As a bonus round, if at the end of the conversation there's time, I'm going to welcome the audience. If you have a question for either Deepthi or Rishi, to come in and bring it in. Let's make this a little interactive as well. Okay, the context of our conversation today is global payments and how Gift City is becoming a hub for global payments, how far it can go. And of course, we have representatives of two very large global companies to talk about it. Deepthi, I'm going to start with you. In the broader scheme of things, how crucial is a presence in Gift City right now for you? How has it been growing all along?
Firstly, good afternoon. We'll try to make it as interesting as possible so that you don't feel the lovely lunch sipping in. But Taman, I think most important for us is as a multinational bank, and as Sandeep had mentioned, been here for more than 170 years, we've always served our clients on their international needs, and that's been one of our strengths. So Gift for us is actually a tremendous opportunity for us to continue that and provide them solutions which otherwise people were going outside of India to get. So that's a bigger opportunity for us, and I think we have made tremendous progress on that, both on the corporate side and on the consumer side, in terms of giving them access to foreign currency, access to keep their money safe without having to take the exchange risk. So Gift, and I think the way it is evolving, and we've heard today also during the day as to how they are forward-looking in terms of enabling businesses, investments into India. We just see an opportunity just going to, multiply from here.
Can you give me an example of growth that you've seen in size and scale? You talked about fulfilling the requirements of clients, global clients, that you can't in mainland India, as we call it in the context of Gift City. What have some of those opportunities been? What is the kind of growth you've seen?
So let me take an example, right? For our customers, for example, most of our customers are global Indians. We call them global Indians because either they're non-resident Indians or Indians who really want to have an exposure outside. They could be sending their child abroad, they could be moving out, and all of them have an active foreign currency requirement. Out of India, in fact, we do have, it's not that we don't serve our clients, and in fact, we take pride in the fact that today our clients can actually send money through their app, whether they are a resident Indian or a non-resident Indian, through their app, just send it, and within hours, they will actually see the money on the other side. And it also translates to they're sending their child across to another country for an undergrad or a postgrad. They can actually make a university payment out of their app, right? 600 universities plus that we have. And all that happens, and what used to earlier take about a week or 2 weeks for the companies and for the universities to come back and confirm that the payment has been received, now today happens like in the same day. That has already happened. So what we are going to do here in the Gift City is to actually enable that one step ahead, which is provide customers access to have that foreign currency held. In India, you hold it in rupee, you convert it. For clients today, it gives us an opportunity. They can actually send money. If they're planning an education, if they're planning a future event, they can send the money, keep it, invest, save it, and when they actually need, they can make the payment. So that's a big opportunity that we're going to create for our clients.
Rishi, you know what's exciting about the conversation today is because you have a perspective from HSBC, you have a perspective from Visa, two large global players. We're sitting in Gift City right now and just trying to understand how you are viewing it. I believe you already have a presence in Gift City and you plan to grow from strength to strength.
That's correct, and thank you for having me here. As DP said, we'll try and keep this very conversational. Post-lunch is a tough act to follow, but no, we are, you know, Visa prides that moving money in about 200 countries, right? That's what we do for a living day in and day out. And as you think about, you know, a lot is spoken about domestic payments, how India has leapfrogged domestic payments compared to many other countries globally as well, with real-time payment methods and so on and so forth. But cross-border payments is still a misnomer to some extent, right? It can be confusing at best and many times. And it's not because there's never been an intent to solve it. It's always been an intent to solve it, but the challenge is it's across different regulations, different currencies, different payment systems, different banking partners. So it's a hard problem to solve at scale because the user at the end of the day wants commerce to be frictionless, payments to be invisible, to be safe and secure, and to happen instantaneously. And obviously, you want to keep the cost low, right? Because the expectation from the end consumer or the user is the cost is going to be low, right? How do you solve all of that? That's a journey that Visa is on globally. And we believe we are well suited to solve the cross-border problem in general. We have products like Visa Direct, where it's an account-to-account transfer, account-to-card, that we do in many jurisdictions globally. It's instantaneous transfer of money. We have products like Currency Cloud, which helps you hold balances, fund wallets, make payouts at currency conversion rates that you'd want to do, working with banking partners, and so on and so forth. So the idea is how do you get our global best to something like Gift City? We are being very pragmatic about it. It's an opportunity that we absolutely want to participate in. To Deepti's point, there are many, many use cases, whether it's inbound, outbound, where we see Visa has a big role to play in. And that's the journey we are on, we are investing in, and very happy to participate and be a part of Gift City.
How much larger do you think your operations in Gift City could possibly get over the next few years after the starting point that you've already seen?
No, it's the journey will unfold as we go about it, right? We are first working on our core product capabilities that we have today, which is we can issue cards, we can accept cards. We do that globally, working with issuers and acquirers. We are setting up the same framework in Gift City as well. Then how do we bring our alternative products like Visa Direct, as well as Currency Cloud and others into Gift City? We also have a lot of value-added services that we, again, do globally. We are doing in mainland India as well. How do we bring those services into Gift City? It could be a card management system where you can help somebody run their entire technical backend for running cards and loans in Gift City, right? It's something somebody doesn't envision Visa doing because people think of Visa as a global card network, and that we are. But in addition to that, we have many, many other ancillary and value-added services that we, A, operate globally, B, we want to bring to Gift City as well. So as those products, solutions unfold into Gift City, we obviously will build our team, our capacity accordingly.
Okay, so it will grow when it grows, was the answer.
But we are very bullish on it, and we're working on it. Okay. Yeah.
So let me just get a sense, and this is a question I actually asked the Gift City CEO earlier in the day, so let me put it to you. Why Gift City for some of the services that you're describing instead of the options available in Singapore, Dubai, and other such places around the world? At the end of the day, if we're honestly speaking about how Gift City is growing, and it is, we have to see the data behind it, we have to see the use case behind it. What to your mind, Deepti, and I'll start with you, is the edge that Gift City gives right now, apart from the location of being inside India?
I think the most important part is the fact that customers can hold foreign currency, right? In India today, they can't hold, they'll only hold a rupee. But Gift actually gives them that opportunity. And from there is where all the requirements and needs that they have in foreign currency can be fulfilled. Be it a payment, be it an investment that they want to do, whether it is in India jurisdiction, whether they want an exposure elsewhere, it just allows them that convenience and as well as the product and the solutions that today they have to go to some other jurisdiction, some other country to avail. So that's what I think GIFT and HSBC we are trying to solve. The customer wants to be in India, we will get them the product and the solutions in India within the GIFT City.
I'll just add to that, right? If you think of the, whether it's a resident Indian or it's an NRI sitting somewhere else, I think trust is something to trust by design, right? The fact that it's GIFT City, closer to mainland India, you recognize some of the brands you can work with, whether it's the banks, it's the networks, it's the fund houses, so on and so forth. I think the safety and security and peace of mind that may give you, the consultation you can get in India as well to do something in GIFT City. I think whether you talk to NRIs, you talk to resident Indians, I think there's a level of comfort that GIFT City gives you compared to potentially some other geography or jurisdiction. I think that's one, it's just closer to home in many ways. Second, if you're an NRI, you want to have assets, exposure to India in some form or fashion, you can do that again through various different means, but this seems easier, trust. You can talk to your banker in India, get the right expertise for GIFT City as well. I think overarchingly, it just becomes a much easier value prop, both for the Indian or NRI living overseas or living in India. And, Deepthi had a good use case. Today, somebody wants to send their kid abroad for education 5-7 years later, right? How do you build any assets which is maybe not in INR, in some other currency, and you have that? And then how do you make sure that as that asset grows, you can then fund for their education tomorrow with potentially a one-click payment solution to the education fees as well. So all of that nicely comes together, something which is very close to home.
And is there a distinct advantage in terms of cost for the global Indian that you're describing and Deepthi is describing? Cost, ease, apart from the comfort of being closer to home that GIFT City is currently providing. When you are going out and you're telling your customer base that, hey, look at working with us in GIFT City, what is the pitch sounding like?
The pitch is sounding like we want the products and solutions which, example, somebody wants to send money to India or close to India quickly, instantaneously, less expensive, right? How do you do that today? What are the options today? How do we bring some of our products and solutions which for other reasons we may not have gotten to mainland India, but can we get it to GIFT City from a cross-border perspective, right? So these are some of the pitches that we are working with internally and externally as well. How do we make it compelling enough? Because any institution or a retail customer has choices, right? In some cases, many choices, more than you like. How do you break through that clutter and noise and put the brand of Visa behind it? I think that's the journey we are on as we both internally build some of these products and solutions, as well as externally go and talk to the market or to the end consumer, working with our partners in different geographies as well. I think that's the journey we are on. The jury is out, how this plays out over the next few years. But we are very excited the opportunity GIFT City provides, being so close to mainland India. And when we think of all the remittances, other flows of money that are happening into India today, this just provides an alternative vehicle or mechanism for that.
And if I can just add, right, from HSBC perspective, cost, if I just have to break down the global payments, the cost part of it, there are two components. One is your spread or FX spread, people call it, which is basically the conversion. And then there's a cost that the bank or the service provider will charge a client for providing that kind of a service. So for us at HSBC, when our customers actually do those transfers, there's zero cost, right? On the app, they can do the transfer, they can put the request, and including that of regulatory requirements that we will follow, and we always abide by the regulatory requirements, both from a FEMA regulator or from our banking regulator, the cost is zero, right? After doing all those steps as well, there's a zero cost. And the spread is actually displayed to the customer before they initiate the transaction. And if it is in
so
gift,
there's transparency as well.
complete transparency. And in the gift, to your point, the cost is anyway, the charge is part of it, the fees part of it is zero. The conversion FX spread is eliminated because you're actually holding, you have that ability to hold that currency in the currency that you have the need in. So that spread is also gone. So technically, it becomes like a cost, minimal cost or a no cost transactions.
You know, you used an interesting term earlier in this conversation, Deepti, where you refer to the global Indian. And this is a term I'm hearing more and more in various contexts. I mean, we speak to equity investors, they're talking about global Indians. We're speaking to people who have aspirations for businesses, they're speaking about global Indians. What is the kind of interest you are getting from this cohort that you are describing as global Indians in the recent months and years? I'm trying to understand if there is an uptick, because there is so much happening that the global Indian is now experiencing, right? Coming back to your point, Rishi, of wanting to be closer to home. Are you seeing a spillover effect of what is happening around the world to maybe this type of Indian or this cohort of Indians looking at Gift City with renewed interest?
Absolutely, absolutely. The number of inquiries that we get and the customers coming and asking us, what more can you do? What else? And we have these conversations with our clients. So what's changing, right? What's the interest that's building up? Is one from global Indians, when we call the big segments are the NRIs, and the Indians in India would want to have an exposure outside, could be for investment, could be for a payment, or could be a global traveler, right, who needs that foreign currency. So we actually are seeing a lot of interest from customers to hold that funds. And to Rishi's point, right, people want to be closer to home, but have the same amount of convenience, have the same amount of product flexibility that they otherwise would have in a different country. So we are able to actually provide that. So we actually see, and in the morning during the day, Sandeep had actually quoted the FCNR interest that has come in. The number of clients who had come in actually looking for that opportunity and availing that opportunity is significant. And what we are also seeing is, today in India, a large part of clients are Indians, are either investors outside, or where they're sending their children outside of India, or they're global travelers. All of them need a foreign currency, and they want to hold the foreign currency. They don't want this multiple, taking a Forex card, loading it, and once they come back, once unutilized, they have to send it back, they have to convert it back into INR. This is too much of a hassle, which they actually would want the convenience, which is where we come into picture, which is where our solutions in the Gift City actually going to cater exactly that.
And just piggybacking with that, right? There are use cases like today, I think Deepti was mentioning this. If I got to travel someplace, I have a Forex card, fund the card, I want to use that in that currency, lock in my currency exchange rate, so on and so forth, right? I think the regulation here provides you to build card-linked products with deposits in different currencies and have cards that can work in those currencies. So A, you're using monies from the currencies you have. You don't have to go get a special card product when you're traveling. That's number one. Number two, you don't have the currency risk, if you will. Yeah. And last but not the least, it's a peace of mind. I know I have a deposit, I have a card-linked product with that. I can use it globally anywhere in that currency. I think that is customer centricity at its best, right? You meet the customer where they are. You're giving them something that they really want to use and do. And you're not limiting them, not telling them to go get another product just for that one use case. So I think the universal appeal of something like this will grow over time as more and more customers start either experiencing it or getting a first-hand knowledge of some of these products and services. But I think there's a very compelling use case for the global Indian, something like Gift City.
When you say it will grow over time, what needs to change or speed up to make that happen, Rishi? I'd like to understand. I'm going to ask Deepti this question as well from your vantage point. How do we rev this up? First of all, I think through the day, one point is more awareness about what are the opportunities that you get once you trade through Gift City, etc. What more needs to be done or you would like to see happen?
I think one is the awareness that you hit upon. I think the more the awareness, the better. And like anything in a journey of 1 to 10 and 10 to 100, it goes through its own cycles of growth. But you've got to constantly keep the awareness, the benefits, keeping the customer and the use cases at the center of it. And how do you keep educating the the consumers and customers, whether corporates or individual retail customers about it. I think that's one. Second, it's upon us, Visa, HSBC, others, to bring the right products and solutions and keep innovating in a space that we're allowed to innovate here, right? I think the regulation has been very forward-looking in many ways. And how do we take it upon us to keep creating those customer value props? So they see value in doing this versus not what they were doing 10 years back. Because they're used to something, right? Something was working. Now, how do you prove to them that this works better than the something that they were used to? And obviously, when you change something, there's inertia. But when you start seeing the benefits of it, you just start making it part of your everyday use, right? So I think it's both. It's both an awareness that the collective we got to drive, and then B is the right products and solution that we're going to keep innovating on.
Yeah, the right product and solution is your bit in that sense. Awareness, I suppose, would be a combination of some of those right products, clicking and anything that the Gift City itself does. What about also expanding the scope of what happens in Gift City, maybe adding on more products, use cases? I mean, right now, if you look at it globally, one rage is also what's happening, say, with crypto or some of those asset classes. Do you think that there is a use case to open up, even as that debate continues on a regulatory sphere elsewhere in India?
Yeah, I think that debate is not only up in India, it's open globally, right? Certain countries have been adopting it sooner, earlier, certain are not. I think there are pros and cons of how people think of, crypto, stable coins, cross-border movement on stable coins, tokenized deposits, tokenized assets. I think it's a function of, how we innovate on these products, which are within the regulatory norms, which are very consumer-centric, and they solve for a pain point that other products cannot do, right? So if something is a 24/7 settlement, works on weekends, works for the consumer, eyes wide open, very transparent, there's a clear on-ramp and off-ramp, and it works well, and it checks all the boxes when it comes to a regulatory regulations. And again, every country has different regulations, right? Why isn't crypto or stablecoin picked up in every country, right? It's not. It's working in some, it's not working in some. There's a reason for that, right? So I'm a big believer that you don't rush into some of this. You let some of this play out. B, you make sure it works within the regulatory confines for that particular jurisdiction. And it's really solving a problem that other existing products don't solve. Again, I'm a big believer that products and solutions got to be outside in, and you want to be solving a real problem, right? And some of this may solve a problem, and if they do, then why not, right?
I'm going to take that to you in terms of what more. I would think that HSBC is one of the earlier adopters of Gift City. We were talking during the lunch break, and Deepthi was talking about how when she first came here, there was nothing much happening. You've seen the landscape, the infra landscape change before your eyes. What more would you like to see speed up, expand, change if we really have to make this the success that it's really meant to be?
I think that template has already been there, and Gift had delivered on it, right? And the pace at which the change had happened. And we have been one of the early entrants into this jurisdiction. And having worked with Gift, and every colleague of mine will vouch, it's an absolute pleasure to work with Gift City regulator, right? Who's always forward-looking, is looking at solving for what the country needs, what our customers need, what people of India need, what global Indians need. It's absolutely fantastic because at the pace at which those enablers are coming in, I think it's now for us to keep up pace and ensure we get that delivered to our customers. That's more of what we think at HSBC. We have space. We have today, IFSCA allows you to hold 15 currencies, right? For an individual like you and I can actually hold 15 currencies in IFSCA, right? Can it become 30? Can it become 25? Can it become maybe yes, right? But it's solving today for the majority of the customer's requirement. The other thing is, I know GIFT is also working with the other international financial centers. Could there be a tie-up? Could there be a cross-pollination? Could there be a recognition of the work that is getting done here and getting a credit there and getting the whole opportunity between the international financial centers outside of India and the GIFT seamlessly happening? So I think that opportunity is going to come in, Ramana, and people like us, Rishi, Visa, HSBC, we're all there, right, to translate that opportunity, to translate that to our customers as a product and solution.
And I'll just add to that, right? I think when you think of payments, there's something fundamental to which is trust by design. You just got to have the trust and security in everything we do. Think of what happened with domestic payments in India, right? Thanks to a very forward-looking regulator, today 100% or close to 100% of our e-commerce transactions are tokenized, right? There's a lot of benefit in that. It took an ecosystem few years to get there, but it was very well done. Bringing some of that tokenization as core capabilities and cross-border payments. How do you get trust and security into the system from the get-go, right? A lot of geographies, a lot of countries don't have tokenization either for domestic payments or cross-border. But having seen the benefits of tokenization for domestic payments, both from a fraud mitigation and security standpoint, as well as the lift we see in transaction completions because of tokenization, how do you bring a lot of that into cross-border transactions, right? Again, trust by design. How do you do that? Maybe in a place like GIFT City. Because as cross-border payments pick up, and you start working with a lot of PSPs who want to do a lot of acquiring of cross-border transactions, how do you build some of this as part of trust by design? Learnings from what we have learned either elsewhere or closer to home in mainland India, how do you use that?
Exciting times ahead. As we round up this conversation, I want to know what potential you see from here on. I think, like you said, Deepti, the template is already in place. We know what can happen, and we know at this pace we will continue. But what is the potential that you see of an infrastructure platform, a financial infrastructure platform like GIFT City?
The ability to have one account which just follows you wherever you go, whatever you need. That's what the GIFT can actually deliver, right? Tomorrow, if I want to work in a different country, can I just have that account where my salary can still come in, right?
That's amazing, actually. I think that's...
And I still use the same card, right? I still make the payments. That's the next step. My child's going to go overseas for education. Do I have to really struggle to fight with a local entity there, get a banking setup, or can I just use this account for the child? Carries the card, carries the account, carries that ability to transfer, make payments for the living expenses, for the landlord, for the rent, and for everything else. That's the beauty of it. A non-resident Indian, tomorrow, do they need to really worry about, okay, I want to participate in an Indian market opportunity, an India opportunity, but I really don't want to take the foreign exchange risk. Will that give that opportunity? Yes. Right? So that's phenomenal opportunity for us, and our clients need it. Right? There is an opportunity, there is this jurisdiction, there is this regulator, there are these products that are available. It's just about now translating it.
Yeah, and what better place to voice those questions and that potential than over here, where all of those stakeholders are listening. Do you want to, Rishi, leave us with thoughts of what the potential is, what you can see happening?
I think the potential is very big. Just adding to what Deepti was saying, right? Have one common bank account, have one card credential. One credential that follows you along, could be a credit, could be debit, could be prepaid, could be Forex, doesn't matter. It's
one nation, one account.
One nation, one account, one credential.
You heard it here first.
Yeah. So you can obviously take this in many, many different directions, how we want to innovate in this space for the global Indian, for the resident Indian who wants exposure to some of these assets as well. So I think the opportunity is there, as I keep going back to. Till the time we are solving with the consumer and corporate in mind, I think we'll end up with the right solutions, and that's upon us to keep building those.
So how big is the team going to become in GIFT City by next year?
I know you're forcing me to answer that question. I wish I had an answer for you. I don't. But we can revisit this question in a year's time. Yeah.
Okay. We'll leave it at that. See, we promised to wake you up after lunch. Thank you so much, Rishi and Deepti. That was fantastic.
Thank you.
When people think about wealth, they often think about returns, and far fewer think about protection. Yet as Indian families acquire global assets, relocate across borders, and build businesses internationally, managing risk becomes just as important as creating wealth. Insurance is changing from being a product to becoming part of long-term financial planning now. To explore that evolution, I'm pleased to now welcome Sachin Datta, Chief Operating Officer, Canara HSBC Life Insurance, and Saibal Ghosh, Head Investment and Wealth Solutions, HSBC India. And the conversation, once again, will be moderated by NDTV's Profit's Managing Editor, Tamanna.
Okay, this one's truly interesting because if you look at the title, Ensuring Wealth for Global Indians, you could think about it in the way of how we typically think of insurance, or you could think about it from a slightly widened scope. If you are a global Indian, actually for anyone right now, you don't know when the next bomb is going to drop on your wealth, right? And that could be figuratively, literally, one way or the other. You've made that great real estate investment in the Middle East. And then what happened? You woke up and then there was a post on Truth Social, and then what happened? Let me start in that context. And Saibal, I'm going to start with you. How important has that context become? You could have a great idea. It sounded brilliant 6 months ago. And then the new Anthropic product turned it to dust. I mean, you can count the ways in which things can go bad right now.
No, thanks. I think fantastic question to start with, Tamanna. And I think protection, wealth creation by itself has got three interesting dimensions to look at it. I think Indians and I think globally people are becoming far more transnational. So you could be working in one country, you could be national in another country, your children could be studying in another country. So the idea of wealth creation and protection, both of these vary between which particular risk you're trying to cover. To its risk itself, I think protection itself, I think for many years, for many decades actually, all of us have been looking at protection and kind of protection is independent of each other. For example, you're protecting your car from accident and you're protecting, or you're rather protecting the outcome of the accident, or you're protecting your life. All of these are supposed to be different kind of things. But when your interests across issues which are of value to you, spread across different geographies, different jurisdictions, some of these start overlapping over each other. So I think the nature of protection by itself is undergoing a change, and obviously nature of wealth creation at the end of it. And I think the third is we need to put protection at the center of wealth creation. To look at it independent of each other, I think takes the core, the pivot of value that you create away from it. I think these three things, to my mind, are significantly altering the way we are looking at protection and wealth creation. They're very close to each other. They are trans-jurisdictional. And the ability of providers to be able to provide some of these solutions in a seamless manner is absolutely essential for wealth creation to really become meaningful from here on. From a global Indian point of view, I'm sure we'll talk about global Indians as well. So it really is globalized in many manners. So it's trans-jurisdictional, it's trans-need in that sense, and it's really global in the way it really pans out.
No, to be honest, not just global Indians, anyone around the world. For global Indians, the currency factor then becomes another risk, right, that you come in. Sachin, how do you look at this whole space of more than ever now, perhaps, Indians are very clear that wealth creation is front and center, but you also want to be protected while you are doing that.
Well, I think, protection is it's as Shoaib said, it's needs a better bit of understanding. From my perspective, what's very important is that it has to be simply told, simply explained, and people have to just understand why protection is needed and why should it be on the center of wealth creation, right? And I think what probably Gift City does, and hearing so many conversations, is it kind of brings in that simplicity aspect, really to the forefront. Why should I go ahead and buy an insurance product at the very first place? Insurance is probably understood a little bit more in a complex way. Complexity is not just about from a product's perspective, but also from how the customer will want to make a payment, whether the customer goes through the journey is simple enough. So all those things really kind of come to the forefront when we look at protection. From my perspective, what GIFT City and IFSCA does is to kind of make things much more simpler. Explainability becomes much more easier. Adoption becomes much more possible. Inclusiveness becomes, a far bigger agenda than what it currently is. And of course, with more customers participating and connecting with this cause of protection, it helps you create wealth over a period of time. And insurance as a product is the only product that has multiple life stage goals attached to it. So you have a marriage in the family, there's an insurance product for it. You have your child's education, there's a product for it. You're retiring and retirement and succession planning or legacy planning, there's a product for it.
I was saying that's my department.
Yeah, so see, the thing is that, when people think of protection, the most important thing is whether people understand the reason why and what kind of protection is needed. What life stage goals are we trying to protect? How easy it is to kind of go for that kind of a protection? And what are those roadblocks that kind of come in the way to not let the person go for, let's say, an insurance product or probably lapse a policy?
Give me a for example in the context of GIFT City. Yeah. Now, everyone here, a lot of people here watching, know this whole thing about insurance, it's important for you, etc., at different life stages. Why should I look at it differently from a GIFT City perspective? How does it help me?
So, keeping simplicity as the core, there are two things, as a customer I'm always bothered about. If I'm a global Indian, for example, two things that really make things complex for me is understanding currency and, of course, taxes. The moment you throw these two things into the financial planning, things become more complex. Yeah. You try and explaining me the taxes, it becomes really complex. I need to have a chartered accountant or a tax consultant telling me what it means. Similarly, when you go for buying an insurance product, the reason why the customer is not able to complete the journey is because the payment is complex. So how do you kind of simplify some of these aspects for the customer? From the perspective of getting more customers onboarded is what GIFT City does. It kind of removes the barriers of currency. It removes the barrier and the tax advantages that it has. And it provides the journey, which is the so-called digital journey, which is easy for the customers to operate to and go through, thereby allowing them to understand the product much better, have a clear connect with why the insurance is being bought at the very first place, and then of course upon the time of maturity get the benefits that the customer had thought of while buying the insurance product. So let's say if I start the journey today, I want to do a retirement planning, and this is a long-term horizon, right?
And you are in this example, okay, you're an Indian who's sitting, say, in New York.
So let's say, yeah. So let's say if I'm an Indian sitting in New York or Dubai, I'm buying in dirhams, for example, and I want to send my child to US for education. And now there are multiple options available, but being a global Indian, I would want to kind of go with the GIFT City concept, which I relate to. And of course, comparing the currency and the tax thing that I just spoke about, I opt for this vehicle and compare various different products, choose this particular product, invest in the product, and in the next 4 to 5 years when my child is ready to go for education, have no currency fluctuation risk and make it very seamless for my son to go through the education. I mean, it just makes it obsessively simple at the end of the day.
Why does this person in this example have to come to GIFT City at all?
Well, the person can go with various different options, but the thing is that India plays that anchor in this entire bit, right? So we're talking about global Indians, and we're talking about how India becomes a global marketplace. So if I'm an Indian sitting in Dubai, want to send my son to go for an education in US, I compare multiple options, and find, let's say, the product that's being offered via Gift City as a much more easier, simpler product to deal with, I would go with that product and allow for, my financial planning to be done via the platform. And I'm using the word platform because that's what Gift City does. It provides you, the kind of platform or technology interface that you would want to interact with and get the returns safeguarded for the goals that you have.
Yeah. So that wasn't a grilling if it felt like it.
Yeah.
The idea was to come to the crux of the matter. That does this platform truly give you a competitive edge beyond the emotional pull of wanting to invest in a place which is in your own motherland? That is my question to you.
So, Damana, absolutely. I think what we've got to realize is that a global Indian can buy global product anywhere in the world. So, if I'm in US, I'm in Singapore, I can buy a product there. But I think the fundamental disconnect is in the fact that some of these products don't have exposure to markets which create opportunities for you. So, we go back to the wealth creation part of it. In wealth, for example, you're really looking at, when you look at India and investing in India, you are really looking at a market which is growing at 10% a year and has been doing that for at least 10 years, apart from the last 2 years. So it is one of the most really fast growing market. And I'm talking about the broader market, of course, within that there are nuances, etc. I do not know when an Indian in Singapore is choosing to make a investment linked insurance, are they really exposing themselves to this opportunity or not? Now, when you come to GIFT, it basically opens both of these elements out. What it does is it creates a protection solution for you on top of it. Underneath it, it allows you to choose between investing in a global opportunity or investing in an Indian opportunity, investing in a mix of both these opportunities. Within that, other opportunities. And interestingly, let me also share with you, if you look at term plans, so term plans are one of the very basic protection-oriented plans, right? Sachin can bear me out on this one. In the cost of insurance in India on term plans, it's significantly lesser than anywhere else in the world. So when you look at all of these together and you are looking at, and sorry, I must add another point to it. If you look at Indians, a substantial part of wealth of non-resident Indians is created in India, even though they are in many ways already migrated and based out of wherever else. They are connected to India in many ways, and a lot of the money, and that is again borne out by the fact that $130 billion of money comes back to India from NRIs. That money is getting invested into. So you, in spite of you living outside of India and creating wealth outside of India, you continue to have an interest in what's happening in India and building wealth here. Now, till now, access to building that wealth was through only one or two products that you could possibly do. Real estate was, of course, one of those options that was available. What GIFT does is GIFT enables you to build a fairly sophisticated combination of products, combination of solutions, which enables you to participate in the wealth creation in India, but have the facility of a currency that is not necessarily INR, and there is, of course, limited currency risk that you carry. You also carry a protection on top of it, which is long-term value creation for you, which in turn can meet needs for you anywhere in the world. That is not concentrated upon India. So to give you a context, if you look at us, for example, as a wealth manager in India, we also do insurance for our clients. And about 35–40% of what we do a year comes from non-resident Indians. So non-resident Indians are choosing to create wealth in India.
Which geographies? I'm curious.
Okay. So Middle East, of course, is a large participant. Far East is a large participant. Of course, there are some restrictions on some other countries, but Middle East and Far East, of course, are where the large diaspora really exists. So they all want to come and invest in India. What GIFT allows you is GIFT allows you to provide that combination of product, which enables you to both create long-term protection and value while investing in a market which you understand well, which you know for a fact is growing at significantly faster pace than most of the parts of the world are.
You know, another perspective of this, and I would like to know from both of you, since we're talking still about the experience of the global Indian that lives outside India. I would say there is a global Indian that is sitting in Ahmedabad and Gandhinagar as well, and I'll come to that global Indian too. From the NRI perspective, one big, I would say, painful process in anyone's life cycle is when it comes to inheritance issues. And typically, that is something one faces. Are there solutions now in place via a platform like Gift City to bring that in place and, you know, to ease out those burdens as well?
Well, this of course has got a legal connotation attached to it, Tamanna. I think
No, assuming it's all clear.
So there are
The sixth cousin far removed is not in the picture.
So there are two parts to it. Of course, depending upon the nature of asset and where the asset is held, there are taxations which apply to you when estate transfer takes place. However, I think colleagues from IFSA are not here, but if you look at, and we talk to them, what really is being worked out is how are you able to move these assets within the GIFT jurisdiction, IFSA's jurisdiction. So when you do succession planning and transfer of assets, taxation becomes simple like it applies to India. So tax laws, of course, in IFSA or in GIFT City are exactly what they are in India. They're no different, unlike all other regulations. So that work is already on. We, for example, are very actively talking to participants inside IFSCA, inside GIFT City, who provide some of these solutions, especially on the capital market side. So the answer to that question, Tapanna, is the answer may not be that we already have a solution available as of now, but work is definitely going. This definitely is an area that the regulator and the service providers see as an area that needs to be addressed.
Oh, fantastic, and that's a clear one. I now want to talk about the other aspect of the global Indian, the aspirational Indian today, who, especially after the last 2 years, as you've spoken about equity markets, is beginning to look at the stock price of NVIDIA, beginning to look at the stock price of SK Hynix, and saying, what is going to happen to me? How do I come in? And from both of you, whoever wants to go first, that perspective of that TAM, or total addressable market, now expanding and finding its way via GIFT City. Would you? Yeah.
Well, it does, it does. See, what happens is that when a concept or a platform like GIFT City comes to the play, then there's a lot of options that become available. So let's say Sandeep spoke about diversification. Diversification is an important strategy, to kind of come up with a portfolio and guarantee some of, safeguard some of the returns that you're looking at. When you've got options like this available and you've got a customer who's, more global in his or her approach, then what it does is it allows the customer to compare multiple options and then pick and choose the options and then diversify, and then, so basically the market's expanding for you. Your options are not limited anymore that, you need to look at this particular sector or this particular stock, and within the country and within the border of the country. Now, when the world's kind of fully exposed, it just kind of opens up full portfolio for you, and you can visualize and create a portfolio that you would want to create, have different kind of exposure to different kind of countries and different stocks, and like, for example, the semiconductors or NVIDIA or, other stock options. So what essentially is happening is now with that platform and with that kind of a market access and with ease of operations, you're able to onboard more scripts, more securities, and try to track your portfolio in a certain way that kind of helps you generate better returns over a period of time, depending on what kind of bets you're taking on what kind of sectors and what kind of stocks. But, to answer your question, it does open up that bit of possibility that otherwise is restricted if you were to just kind of have, your investments all done within India and not having access to the global markets via the platform. And of course, keep currency and the taxes to the back of your mind while dealing with some of these things. So the answer is yes.
Maybe I'll try to put a bit of nuance to what he's saying. To your question on global Indians in the first place, Dhawan, I think the definition of global Indians is changing very rapidly. Global Indians are not necessarily people who migrated out of India.
Exactly.
They are still in India, but they're still connected globally. So, for example, this large number of people who go out to work in GCC kind of setups globally, as well, Philippines, Malaysia, engineers who we export out, who are not really migrating out, but spending a large part of their working years in global spaces and then coming back to India. They are really global Indians. Global Indians are also those individuals who are choosing to travel for fun, for example, for destination travel. Because all of them have got global needs which automatically get generated. The moment you get globally connected for anything that you would want to fulfill for yourself, automatically global needs get created for you. You need to have foreign currency, you need to have travel plans, you need to have tickets, and you need to have a debit card which you can use globally. So all the things that Deepti, for example, was speaking about becomes relevant irrespective whether you're migrated or not. Two, I think education, and I'm sure all of us realize children going abroad to study is a far more occurrence at this point in time in regularity than it was, let's say, 10 years ago. All of us, I mean, some manner have wanted our children to go abroad and study, etc. They also are creating a certain kind of need. All of this actually is globality in some sense. When you get exposed to globality and information becomes so easily available, automatically you would want to participate in what is happening outside of India. I think I think a couple of years ago, Sandeep and I were hosting a fund manager in India, and one of the conversations he had with us was that he was saying that if Swiggy is a large food app in India, would you know what the similar app in Thailand is? Because that app also is doing very, very well. Is there not an opportunity for us to participate in that growth story as well? So I think the idea basically is globalization, and globality by itself is undergoing a bit of a change in definition. Two is, as globality takes over, information is becoming easier to achieve. You would definitely want to participate in that. Indians remain, I mean, all of us remain very, very biased towards India and want to invest in India and want to participate in the growth here. But people are also very quickly realizing, and like you said, the bomb can drop anywhere, any part of the world. You would want to keep your risk diversified over geography, over currencies, over asset classes. And that is why it is necessary to look at investments and insurance and underlying that insurance wealth as a globally diversified portfolio. Now, of course, what is critical here is how much do you want to diversify, how much do you really understand the risk of investing into one of the South Korean markets. So what is the risk of that is another part of it. But
that's fine. That's something an investor goes through with any choices they make. Do you want to go in for a small cap? Do you want to go in for an IPO? That's okay. My question is, what is the advantage that Gift City provides? Because right now, there are enough ways for people to do this sitting anywhere.
So I'll come to that, and that's an interesting part of it, which we're trying to solve for as well. I think, so resident Indians have been participating in the global markets primarily, let's say 10 years ago, through the mutual fund route. So mutual funds had a limit, and some mutual funds used to invest globally. All mutual funds have a mandate to expose some of their investments globally. And there is a limit to it, so automatically that limit has got fulfilled, and you really cannot invest too much. The other option of doing this was to go through direct ETFs or through stockbrokers, basically. You basically have stock equity, you have lines, pipes, and you could invest directly, which is possible even now. I think what has been lacking is a portfolio approach to any of this investment. Portfolio approach only happens when you have fund managers and product advisors who could actually create a portfolio for you to be able to diversify and reach an objective. What GIFT does is GIFT allows you to do that. GIFT basically creates a structure which enables you to now get exposed to global portfolios, not a product, but a set of product, a set of asset classes, a set of countries, through a body which is based out of jurisdiction of GIFT IFSC. So the regulator is in India. You can access the regulator. The fund manager is in India. You can access the fund manager, and you can then go ahead and invest wherever you wish to. This also has got two interesting elements to it. One, of course, is the alternate investment fund route. So you obviously, you're a larger investor, you can take a higher risk and do it. What GIFT is increasingly trying to do is get retail investment also in. So retail funds, of course, are coming on board. You can start with a very small amount of money, including $500 actually to start your first global investment. So I think what GIFT is doing is GIFT is basically democratizing this entire process. What was otherwise a very esoteric journey of saying that I have exposure to a US private equity market, increasingly what is happening is that is available to anybody in this room, saying that I can come down to make an investment, digital onboarding, and get access to exactly the same market that anybody else does. So I think that is how GIFT is transforming the investment journey for clients.
Okay, so how do you start that off? And this is going to be interesting to all of our viewers at home as well. I think your camera is that one, Sabil. If you look at that camera and tell me, how do you start this off? Someone who's just heard you and said, "Arey, ye mujhe bhi karna hai." What are the steps to go?
So if you will do it with HSBC, and I hope everybody does it with HSBC.
See, that plug was his own, not mine.
What is really required is you can do it in two manners. You can either do it directly through India. So in India, you have a set of fund managers who have offices and who are based out of Gift City. They have products which are listed in Gift City, which in turn invest globally. You can approach them and they can onboard you directly into Gift City. You can transfer money into their account and they then can invest you out and units can be allocated to you. The other is, and which is what we believe is the right way of doing it, is you actually open an account inside Gift City. You put your committed funds inside Gift City as US dollars, because then onwards what happens is your exchange risk becomes zero. Once you move your money as an RRS, as a resident Indian into Gift City, From there, you start accessing global markets. And you heard Vijay talking earlier about INX Global Access, for example, or Ashish talking about what White Oak is doing. You have access to all of that from GIFT City itself. The advantage, every 6 months, if you try to do redemption, the money comes back in dollars. You can reinvest the money again from the same account. If you are doing it from India, you obviously create exchange friction. So it's as simple as that. You do a digital onboarding into the bank or into the asset management company. You do a digital transfer of funds. The transaction itself happens digitally. Most asset managers now allow it digitally. And the funds are custodized under the asset manager, who in turn is regulated by IFSCA. So you don't need to go to anywhere. If tomorrow there's a discord between yourself and the asset manager, you can go and hold the regulator responsible for it, who in turn can take action on it, which is an incredibly important part of our investor journey, because many a times these challenges take place. But imagine if you are doing it in the US and you're going to go to Fed or somebody to go and solve out a $5,000 investment. I'm not too sure how effective that would be.
Okay, lest you feel left out, Sachin, you must also talk about this. I think it's an interesting eye-opener, because there is so much happening right now in terms of potential for all kinds of Indians at all price points of investments that people just don't know about.
Well, see, the thing is that, you know, when Shoaib spoke about, and to your earlier question about how do you kind of get started, I would want to just take a pause and say that, you know, if you want to buy, let's say, an insurance, you know, and where do you start, of course, is to have an account, you know, as Shoaib clearly pointed out. And then, you know, of course, when you look at some of the needs, and, you know, from a life insurance company perspective, what we offer is a range of propositions, range of products, that the customer can understand, pick up some of, you know, do a proper need assessment in terms of, you know, what would the customer want to do with an insurance product, depending upon the life stage goal that I just spoke about. And it's all done digitally. I mean, you don't need to kind of have a conversation. It's, you know, you just go online, fill up the relevant set of questions. And, you know, buying an insurance at time can be a little bit more time consuming with all the medicals involved and other stuff. You know, that also gets completely taken care of depending upon whichever country you're operating from. You can provide that medical ecosystem and ensure that all the medicals are properly done. And of course, at the end of the journey, of course, you know, payment being the most important link, is to underwrite it digitally and provide an experience back to the customer. And to be able to give that policy document to the customer, which is pretty instantaneously. And the moment customer sees, you know, the policy in hand, customer goes through, let's say, you know, the various terms and conditions, then it becomes more contextual for the customer to understand, you know, why and how an insurance product can be helpful. And I think that's the starting point from an insurance company perspective. And that's where we actually come in. That is exactly where the partnership is, that working along with, you know, HSBC and other partners, you know, Canara Bank, for example, you know, the two promoter banks for us. You know, we're leveraging on the ecosystem that the banks are creating to provide customers of these banks opportunities to kind of look at insurance or protection or, let's say, succession planning or, for example, let's say growth as an avenue to get attached and associated with us. And then we take care of some of the life stage promises and goals that the customers are making. And then, you know, take away the hassles of tax and currency risk. I mean that's how we start off on the journey on insurance and make it more inclusive, spread more awareness, and make it more participative from a customer outcome perspective. And the moment of truth, you know, for any customer is a claim. Ultimately, the maturity or a death claim. Again, you know, when all of these payments are actually away from the currency risk or the tax risk, then it all becomes much more easier. You know, imagine the hassle that a customer has to go with where the payments are moving cross-border. You know, it's very difficult to track your payments. It's very difficult to understand where the claim lies, where the servicing request is lying. You know, what GIFT City does is to kind of bring that harmony between what the customer expects or wants to what an insurance service provider or a bank essentially provides. So that's, you know, that's kind of bridging the gap, and that's the kind of big USP for, you know, platforms like GIFT City.
So, you know, what we've heard so far is a description of what is available and the benefits that people can reap, wherever they may be. what more in terms of potential of how far Gift City can go as a platform for financial growth at all ends and in all manners? What else would you like to see?
I'll have a long answer to this. Tamanna, I think a sophisticated, evolved financial system basically enables, it basically democratizes access to opportunity. I think that's the broad sort of statement I would want to make, and that is where Gift City will take us, which basically means for an investor to choose an opportunity to invest would be as seamless as investing in India as in anywhere else in the world. It would be as rightly priced and fairly priced as it would be anywhere else. And it will be guided by a jurisdiction, by a regulator in as much stringency as anywhere else. And then when these three things takes place, which product you generate, which solution you generate is a matter of how much you can really innovate. Some of the things that, for example, we obviously are looking at is that if globally anything is available to somewhere in Singapore or in Dubai or any other part of the world, we should be able to bring it to our clients. Our clients deserve it, they need it. We have not been able to provide that opportunity. And Gift enables us to provide that opportunity at perhaps significantly lesser thresholds than what are available anywhere else. And I think that is what it does. It basically democratizes this opportunity to our clients. It makes it seamless and it provides jurisdictional cover, which is far more comforting than doing it outside of your own country or outside of your own regulator.
I think the only thing that I would like to probably add is that why fine Gift City provides that platform. How do you kind of make the journey more friction-free or frictionless so that it allows for more customers to participate and leverage the power of this platform? Like, for example, UPI is an equivalent example of how it has enabled scale, right? So for me, the measure of success is that why the platform, which is very transparent, the only thing that probably will drive the trust and participation to this platform and usage of this platform is whether the journeys are frictionless. They are completely transparent, fully digital, no human intervention required. The customer and technology, and interaction, and of course the financial institutions backing that technology and providing that solution. So I think if you're able to work more keenly on making the journey friction-free, and when I say journey, I'm not just talking about onboarding. I'm talking about onboarding, servicing claims. I'm talking about how do you imagine that the customer to whom you sold policy 20 years ago, how do you settle the claim for that customer 20 years from now, or when the maturity falls due? So it's not just about point-in-time thinking of what we do today and how do we grow the business today. It is about how do we sustain this growth over a period of time via the platform that Gift City provides, and not to let the customers fall off this platform, and making sure that this is completely engaging, transparent, and of course, driving a lot of trust and adoption amongst the customer with that transparency that this platform brilliantly provides to all of us.
I must say it's truly refreshing to hear talk of claim settlement as well in the context of insurance. What most people experience is the onboarding. And then when it comes to claims, there's no end to be found. So it's very refreshing to hear that perspective and that thought as well.
Yeah, so we call ourselves as Promises Ka Partner. We believe that we are not selling life insurance, we are selling promises. And it is a moment of truth for any life insurance company, or for that matter, any financial institution to stand up to when the customer needs us, as against to just onboard the customer. So therefore, the full life cycle, and that's the reason why my emphasis on claims and servicing, because if you don't do it right on claims and servicing, customers will never trust you. Yeah. So equally important that we make that friction.
That's not always the experience that happens. It happens with, at that time, there is no partner to be found. So this is excellent. So I just wanted to appreciate that. I think this has been a great conversation and really opens one's eyes at a time when I think the global Indian is defining themselves. Maybe this is still a work in progress, and Gift City definitely gives that platform. Thank you so much to both of you for joining us.
Thank you very much.
Well, throughout the day, we've actually discussed policy, regulation, and institutions. Now we turn to the entrepreneurs who will ultimately determine how much of that vision translates into reality. Innovation, as you know, rarely begins inside boardrooms. It begins with founders solving specific problems and challenging established ways of doing things. And before we have startup founders with us with their innovations, we have a conversation with Dr. Deepak Bajaj, Academic and Campus Director, Deakin University, Gift City, to understand the academic push behind skills and entrepreneurship. Along with him, I'd like to welcome my colleague Gauri Trivedi.
This, I think, is an important conversation because when you develop an ecosystem cannot be developed till the time you have the right skilled manpower. The skill sets that are actually needed to ensure that when you talk about Gift City as a major global finance hub, then it actually leads to. And Dr. Bajaj, you of course are running an important institution. Deakin University has set up its campus there. In your sense, the numbers may be still work in progress. You know, you run 2 courses, the numbers are still sort of adding up. And but where do you see this entire intent to set up a campus in Gift City to cater to the skill needs that are specifically designed and catered to the ecosystem that needs it? Your thoughts? There you go, sir.
Yeah, Gauri, thank you.
So pull up the mic a little bit, yeah. Just keep it closer, yeah.
This is better?
Yeah.
Can you hear? So, yes, we were the first ones to set up a branch campus in India, in Gift City, because that time only Gift City was allowed. But it's been a fascinating journey. This year, just for the interest of the audience, we have doubled our number. But in a small number, you double it, it still is a double. But what it shows is the trust a lot of parents, even at a master's level, you'll be surprised. The amount of queries we get from parents, grandparents, uncle, aunt, and then the child.
So that's because an advanced degree is always a collective family decision. Very rarely is it that it's an individual decision. Very rarely in Indian households.
Yeah. So that trust is developing. Ultimately, most Indian families look for what is the future after the degree. For 99% of students, this is the last degree. So then it's about employability, return on investment, and that's where the effort has gone to prove that point that the ROI can be good for a foreign university. Now, coming to the part, why did we choose to come to India? We chose to come to India because we have worked with India as Deakin University for last 30 years out of Delhi. And thousands of students have actually gone every year to Deakin University in Melbourne. So when the Indian government allowed foreign universities to come to India, we were their logical first choice. Now, to prove that logical first choice, we had a lot of paths which were not chartered. We had to chart our path, and you hit and miss. And that's why we started with 2 masters, which were aligning with the Gift City ecosystem. So, for example, HSBC is an employer of a couple of our business analysts. So, the fintech capital needs these kind of degrees, cybersecurity. So we have started with that, but we will expand our offering to maybe AI in the next year.
How important it is to address the skill gap, and how pronounced is the skill gap right now? Because, you know, when you talk about Gift City in its largest potential, when it achieves that in a couple of years, how pronounced is that skill gap that we're talking about?
I'll give you an anecdote. I have lived and worked in Australia and Gurgaon. So my background is construction, so I've done a lot of these campuses, including HSBC campus in Gurgaon. So what I can say, in the 90s, it was almost impossible to find talent what the GCCs were looking for. That time they were not called GCCs, they were called BPOs. But for voice and for text, people were looking for talent from South. We were getting a lot of talent from South. Now the same talent is easily available in that ecosystem. I foresee the way GIFT is growing, in 5 years' time, it will be a mini Gurgaon or a mini Bangalore. If it's considered good, then call it that way. But what will happen is the skill gap will continue to be a problem for India, because you need millions and millions of skill upgradation. This is a niche area, but even generally the skill gap exists. Someone said the skill is there, discovery hasn't happened. But the discovery will start from universities, and universities need to work on the skill gap, not on the degree and exams. Degree is a byproduct, but if you don't have skills, they will be jobless. So the problem is that.
What's the appetite among students for some of these courses? You mentioned you primarily have two important courses, business analytics being one, and second being around cyber security.
Yeah.
You will try now AI-related course that will come out. What's the appetite among students? Are they evaluating this as a very serious career path now?
Yeah. So let's go back one step. Who's our audience? A student who wants to go overseas and has put his mind or her mind to going overseas will always try to go there. But visas have become a problem. So this is a product where for 1/3 of the cost of what you would spend if you went to Australia, in 1/3 of the cost in Gujarat, you could get a same degree, exactly the same degree, which is recognized around the world and which will take you to places. Some of our students have ended up in US and Middle East with the degree. But I would still say with the skill set. That's very critical. So the type of audience we are getting is a generation of people who can afford that much, which is about 1/3 of what someone would send overseas. And they are getting attracted with a foreign degree. Also immersion into Australia, perhaps a future prospect of migration to Australia. These are their thought processes. The other thought process is, after spending, say, 1 crore in Australia to get the same degree,
and you don't get a visa to stay back to work, then there is a problem.
Exactly. So if you spend 1 crore and you have to return back after 2 years, what's the return on investment then compared to spending 25 lakhs in India?
But ROI on a 25 lakh course also depends on industry linkages. How strong are those industry linkages? Are you able to place your students right now? Where is the demand predominantly coming from, and where do you foresee it?
Perfect. So the demand, the way I'm seeing, GIFT City is still developing. Decision making is still arriving in GIFT City. It hasn't arrived fully. So the decision making has to happen from one of the big cities in India for the GCCs. Now, global capability centers around the country, which is the fastest growing industry for India, by the way, in the service sector, they are finding a sweet spot with our type of degree. I'm not saying others are not, they are. ICICI Bank is also hiring. But some of the global brands whose requirement is a bit more technology-oriented degree, they are finding a sweet spot with our students. So that's where my linkage is working the best. These are the companies out of Bangalore, Gurgaon, Mumbai. And that's where they are getting the salaries which they are very satisfied with. They are getting...
No, but this will work when your GIFT City campus students get employed in GIFT City companies, right? That's what the aim is. You are saying GIFT City should become mini Gurgaon, Gurgaon should become mini GIFT City, right? That's the whole aspiration and the whole thought behind it.
So it's working both ways. So some students who are coming from Delhi to study in GIFT, naturally their sweet spot is wanting to go back. GIFT City, as I said, the ecosystem is still developing. The hiring decision making is still not happening in GIFT that much. It is still happening in the head office of the companies. There are 1,000 companies here. Out of those 1,000 companies, I think about 100 would need our graduates. But to reach that 100, you need to still wait for their growth path to happen. That's not happened. Large companies have achieved that. So our students are finding jobs in those companies, more so than smaller companies.
Final question I want to ask you, Mr. Bajaj, which is that where do you foresee these courses in the next couple of years? Do you, and also do you foresee more companies coming in, more campuses being set up in the next couple of years? Because that gives a sense of just what is the extent of demand and interest from the students.
So it will never be a Massey university. None of them. None of the foreign universities would be, I'm not using the word classy because that's a narrative I don't want. It will be exactly what the industry needs, but it will always be smaller numbers because the fee structure of foreign universities can never be below a certain point. So it will have that value proposition for those people. What will happen is, in next 2 years, if you ask me, I foresee about 5 universities in GIFT City itself and about 20 universities, foreign universities in the country. So these 25 universities in the country would be kind of equivalent. In their ranking, maybe up or down, but each one will have a value proposition. Each one will offer courses which are relevant for their ecosystem. And I feel these 25 universities, how they thrive, how they grow, how they survive in some cases, will all play out in these next few years.
All right, that's the hope on which we end this conversation. Thank you so much, Mr. Bajaj. Let's hope that the next couple of years, there will be more campuses, more students, more companies interested in employing those students in GIFT City itself. Thank you so much for this conversation.
All right, our next session showcases startups that are currently, they're basically spearheading India's growth trajectory. The next session will showcase startups incubated at GIFT City that are developing solutions for the future of finance. We have with us 5 startups today who will showcase their business ideas and also tell us how GIFT City is helping them scale. So let's begin with our startup presentations. First up is Sapan Karia, co-founder of Trad. Trad, you must note, is working to make cross-border trade safer and more accessible for SMEs by bringing together commerce, finance, and insurance. It's over to Sapan now.
Hello everyone, good afternoon. I'm Sapan, co-founder of this company called Trad. We're building AI native cross-border trade platform for SMEs in India. As you all are aware, the mandate that the current government has for exports is about $2 trillion in the next 4 to 5 years. 2032 is sort of a target. A significant portion of our exports come from SMEs in India. We believe SMEs are not serviced enough by consultants, banks, etc., like the corporates get, and hence building this platform. So large corporates have access to world-class trade consulting teams. SMEs have to deal with 5 sets of different people or enterprises to work with them on planning trade terms, the trade ops, the trade finance and compliance, again, and then finding capital for them. It is spread across a chartered accountant, a CHA, and a relationship manager at a bank, a FEMA expert, and a DSA for getting credit. This is an example of a client that we sort of work with. Meet Rajesh Knitting Private Limited. It's an SME knitting company based in Tirupur, Tamil Nadu. They work with Walmart and export a lot of textiles out of India. They manufacture products and export it to Walmart, and they buy some of the dyes from Lonson, which is a Chinese seller. The founder of Rajesh Knitting Private Limited is a promoter, is an engineer, is second gen. Their core focus is on growing their exports, and their daily struggles are related to day-to-day ops. Manufacturing occupies their time. So Rajesh Anna, the promoter of Rajesh Knitting, says, more credit gives them more exports. If they had access to more credit, they would compete with larger companies. Their growth today is bound by the land that they own. They miss incentives because schemes like RoadTap, etc. are not distributed to the core in tier 3, tier 4 cities where a lot of micro clusters for exporters are placed. And unavailability of liquidity is sort of lost business for them. We are building trade finance infrastructure today as a wedge, eventually expanding to trade finance and forex, and then building a AI native cross-border trade platform. We found a very interesting problem in exports that is around factoring. So imagine Rajesh Knitting exporting to Walmart. Walmart agrees to pay only after 60 days. There is a credit gap. Of course, they can go to a bank, get their PCFC loans, get the bill discounting, etc. available. But factoring becomes a very interesting product line for them, purely from a cost standpoint. But the problem statement with factoring is Walmart will not agree to transfer money to a third-party factor. Now that is challenging, which means either the deal does not happen and Rajesh Knitting does not get the credit that they deserve, and the financer, which is the IFSC-based factoring company, does not get access to that client, that SME client in India. So what we are building is, we're essentially building an e-NACH equivalent for cross-border rails. So Walmart can keep on paying that exporter in their GIFT City foreign currency bank account. We have the regulatory ability, authority, and the technology to sort of pull money out of that exporter's bank account as and when the buyer, that is Walmart, transfers money to Rajesh Knitting Private Limited. And that's a starting point for us. This was impossible before Jan 2025. RBI came up with a circular where it allowed exporters, resident exporters in India, to have offshore bank accounts. FEMA exemption came in October 2025. We found a sponsor bank with Yes Bank, and then we applied for an approval under regulatory sandbox of GIFT's IFSC and got a RIFSCA approval in Feb 2026. Why do we believe we can win? We've super focused on this narrow segment of SME manufacturer who happens to export or import, vertical play, and hence we are super niche on that part. I was working with a company called Pantomath Capital Advisors, essentially selling IPO as a service to SMEs in India back in the day. We have distribution partnerships with factoring companies which are already locked in, which allows us to start distribution from day one. And we have a regulatory go-ahead from IFSC. Current traction, we have LOI from Credlix and Yes Bank. We have a regulatory approval. We have pipeline of banks like ANEX, GLDB, DBS, and Column in Singapore and US, and pathway to license for PSP. We already raised an angel round. We have backers from ABS Factoring, which is one of the largest German factor. The executive in London, Mayur Totla, is our investor. Pramit was senior VP at Credlix, is our investor. Founders of companies like Exlo and Payoneer, which are one of the largest cross-border payments company in India, and Payoneer, one of the largest around the world. And founders of MyBillBook and Salts, again, in SME, SaaS, and supply chain financing. We are incubated by GIFT IFIH here. So this is a background. Sapan, I come from GTM sales, partnership, and legal sort of background. I used to work with a company called Pantomath Capital Advisors. I'm a company secretary by education and an alum of Indian School of Business. My co-founder, Jayant, is looks after technology, product, and data. He's in Masters in Computer Science from University of Illinois. We both met a previous company called Club, where we used to do lending and cross-border trade. Idea is hold it, move it, finance it anywhere. Since Century's bank that opened the bank account owned the relationship, we are trying to build that layer for SMEs. Thank you. Any questions? Any questions? Points? Cool. Thank you.
Thanks so much, Sapan. We'll be tracking all your work from the sidelines. Now, the next startup is Bharat Omni, and representing the company is Hemal Shah, the co-founder and head of business strategy for Bharat Omni. Now, it's a cross-border financial infrastructure company for global Indians, both NRIs and resident Indians. It's over to you.
Hello everyone, good afternoon. And it's a pleasure and privilege to be here with so much great audience over here. Right? We are called as, I'm Hemal, I'm the founder of Bharat Omni, and I do have Arpit, who is the co-founder with me. Right? And we are called as Bharat Omni. Just a brief why we are called as Bharat Omni, right? Because we are building for Bharat and in Bharat, right? But our overall vision is to be present everywhere in the world, right? So we are building Bharat infrastructure for global Indians, right? So that's why the name is called as Bharat Omni. Right? So imagine, our vision is like, imagine somebody who is sitting in Toronto, right? She might be using an app, right? Basically, different apps for different kind of investments, whether it's savings or deposits, right? AIF, pension. They might be using a different app for different kind of investments. They might be able to do it, right? Our vision is to basically power that rails, right? So imagine somebody is opening a savings account, right? He or she might be using a Remitly or a Wise or any other app, right? But underlying the journeys, right, that would be powered by us, which we are building rails, which is called as Bharat Omni, right? Okay, but why? Why there is an existence like this, right? Because see, today, there is, on the other hand, on one hand, there is a global Indian which is actually willing to invest into the Gift City products or for that matter, international products, right? And on the other hand, there are institutions like banks, wealth managers, HSBC, asset management, wealth management firms, who are willing to basically, serve those consumers, right? But there is no layer which bridges both of them together, right? That's where we come into picture. We bridge both the parties together, right? Okay. Before this slide, and as we see, right, the visual speaks better than word. We also have a demo, which I will be able to. I request them to play the demo so that it's better visualized.
Ananya has just signed in to Meridian, her app in Dubai. Meridian is the brand she trusts.
Yeah. So here you can see here, right? This is an app. Now this is unique kind of demo where you can see on the right hand side, right? It's kind of a technical. It's on the right hand side. We are showing what actually happens in the back end, which is what our platform does. And here is the app that a recipient might be using. So here you can see there are deposits, mutual funds, CIF, bonds, wallet, cards, and remittance. Right? So everything is basically powered by the app. So everything that is powered by the backend that we create over here. Right? Yeah, please.
Bharat Omni is what runs underneath. KYC, her NRIC digit by digit, her address proof by issuer and date. Every rule is ours, and every rule is set per country. Scored and approved. Instructions issued. Maturity, repatriation and withholding, all computed by us. Her bank's name on the glass, our rails underneath. Bharat Omni, the financial operating system for global India.
So that was it. I mean, overall the vision that we carry, right? So that's what the demo was. On the team side, as you know, I am Hemal. I'm the founder of Bharat Omni. We have Arpit, who is the co-founder. We have a core team. We have a product manager, a technology architect, and a business consultant onboarded. We also have our advisory board where we have Sanjay Sharda, who is on our advisory board. Sanjay brings 25 years of banking experience, right? He is advising us in our journey. We also have a private banker who has already joined us in our journey as on our advisory board. Traction till date is we are already live with our deposit discovery across partner banks, right? We already have a proprietary solution for that. We are working on NRE onboarding with the resident country documentation. We are live with the FCNRB leverage program, which is like we are actually facilitating the FCNR leverage, which is right now live, and it has a window of 30th September, right? So we are live with that. We have already a IFSCA regulated sandbox approved. We are applying for a PSP license as well, right? Obviously, as everyone knows that we are incubated within GIFT IFH. We have support from Microsoft for startups. We have a seed funding from IIM Kashipur, and some angel commitments also we have secured. Right? Yeah. Yep. So that was it from my end. Thank you.
Thank you so much for that presentation. Innovation isn't a single breakthrough. It's hundreds of practical ideas solving real problems. Let's move to our third startup now. It's HiYPay, and representing the startup is Devang Nirela, founder and CEO, HiYPay.
Good afternoon, everyone. I'm going to talk about our platform, HiYPay. I think a lot has been spoken by Sapan earlier about the trade journeys. What India clearly lacks, and I think one of the most critical aspects of data points that we need to look at, is India has close to about 60 million SMEs. Out of those 60 million SMEs, only about 2.5 million SMEs have about an IEC. IEC is Import-Export Code. So when you talk about Import-Export Code, and apart from that, close to about 15 million SMEs are working informally in the export sector, either through basically they work through partners. The idea and the goal of the government of India has been basically to drive them and get them formally into the entire ecosystem out there as part of the ecosystem whereby they could get the benefits and everything. Similar things holds good also for the service providers and service operators and service exporters. Largely because when you look at the service exporters, they have been basically off the curve out there right now. They're not been part of the compliance track. For them to be as a part of the ecosystem, RBI has again mandated a lot more things. So this is what we are building at HiYPay. HiWire, as the name stands, it stands for high-speed wire. Traditionally, wire has been used for any cross-border money movement, any cross-border payments that has been done across. And what we are building at HiWire is a full-stack platform for India's cross-border trade. We are a cross-border, full-stack cross-border trade platform, not just a payments company. What we mean by that, when we look at an exporter journey today, what does an exporter want? What is their key need out there? One of the core needs is basically to see how we can help them sell globally. We help exporters get listed, get working on global marketplaces like Amazon, Etsy, Walmart, optimize their entire listing, they have to optimize their business on those marketplaces.
and help them sell on those marketplaces and generate sales for them. At the same time, basically, this has been led through an agentic AI platform. At the same time, we also help them facilitate B2B partnerships in global geographies, whether it is in UK or in US or in GCC countries. The idea is to help them drive more sales. Aside to that, we help them get paid. So help them with collecting payments from global geographies, again, in a very, very efficient manner. Today, for example, an exporter, a mid to small size exporter, pays close to about 1.5% to 2% to a bank as fees or for FX spread and other things. The idea is to optimize that cost. And at the same time, they get the monies in nothing less than 48 hours. The idea is to optimize on both the sides, help them collect the payments, and finally, help them stay compliant. The idea is basically to help them finish their entire compliance and regularization journey, because today, compliance becomes the biggest bottleneck. Today, if you look at some days back, RBI, the ED had reported in the newspaper, one of the reports from RBI, which had come in very clearly stating that all the banks, there are close to about crores of shipping bills which are not yet been closed. When I talk about shipping bills not yet been closed, RBI has a system called EDPMS. And at the same time, basically, Customs has a system called IceGate. Whenever an exporter is shipping goods out of the country, they use a shipping bill or an airway bill, it is mandated by the banks and basically the customs to ensure that basically all the forex compliance or the money receipt in the country is tallied with basically the shipping bill that has been there. Most of the shipping bills are not yet been closed. RBI has been enforcing on the banks to close the shipping bills. And that is where the crux of the problem lies for most of the exporters, whether it is a small-time exporter or even a larger exporter. So this is what we built, and we have done this through 3 solutions of ours. One of the first services that we offer is Go Global Now, which is an agentic AI-based solution for basically helping sellers or exporters, like a small seller or drug seller in Bhadoi, or maybe a handicraft seller in Jaipur, or if you look at a small gems and jewelry seller in Surat, to get listed, get working, generate sales on global marketplaces like Etsy and Walmart and other places. On the other side, we have Highway Pay Exim, which is our collections and compliance platform, where we help the exporters manage their collections very, very efficiently. Today, we are working with close to about 1,000+ exporters in the country itself, again, through banks and partnering with banks. And again, we are working with other exporters for managing their compliance and ensuring that the compliance gets taken care of. And finally, we also been working with exporters as an add-on, as a cross-sell on value-added services, which includes basically lending, as well as basically on logistics and other side of the overall business. The idea is to basically be a support, a complete backbone for the business and for the exporters. We have just received, about a month and a half back, we received our in-principle license, PSP license from GIFT City. And one of the things which I would want to share out here is what does GIFT City enable us, what we could not get out of the mainline. We see PSP license as a complementary license to the existing payment license in the country, in the mainland India. But having said that, basically, rather than going for the payment aggregator license, which is the core license in the mainland, we said we prefer the PSP license. One of the biggest benefits that gives us, if you look at the 4 benefits, one of the key benefits is you have one unified regulator. And I think enough has been said about the regulation side of the things, but from our payments perspective, whether you're doing payments, whether you're doing lending, whether you're doing any kind of a business, you need to have a single regulator. Everything converges to a single regulator itself. That basically helps us remove all the bottlenecks and obstacles in the overall ecosystem. Second, for us, GIFT City is again treated as an offshore jurisdiction. Now, being treated as an offshore jurisdiction has its own benefits. Of course, Mr. Bajaj mentioned about the Deakin University earlier, just a while back. Same thing holds good for even the exporters. For them to hold their funds in GIFT City becomes a much easier experience versus basically what they could do in the mainland. Simple thing being, RBI allows them to hold an EFC account for 30 days. Whereas in GIFT City, they're allowed to hold the funds for 90 days, which is by itself a very large thing. And on top of it, they also earn some treasury income out of it. Your EFC accounts are non-interest bearing. Globally benchmark rules, and you'll compare this, I've seen regulators like MAS, including the regulators in EU as well as in Dubai and all. IFSCA stands at par, at times much better than most of the regulators globally. And when in the current scheme of things, when India is trying to go global, you need to have an ecosystem which allows the business and trade to flourish under a common regulatory framework, which is what GIFT City allows us to do and build for. And of course, efficient economics for us, one of the biggest drivers was basically tax and GST benefits out there, 10-year or 20-year tax holidays. That definitely has excited us. And one of the final most important thing is the kind of innovation that you can bring out here. As a company, basically, for us, we're thinking of a lot more innovative solutions which we could not offer or do from the mainland. Now, one of the simple solutions I can think about is digital escrows, where we're looking at offering it for maybe the exporters to treat it as a buyer protection journey, where an exporter, when they trade, let's say for an example, an exporter in Ahmedabad is working with a seller in Africa, and both it's a first-time sale, they don't trust each other. In order to create a trust, they need to basically have an instrument where the money can be parked efficiently and safely, so that basically the buyer knows if I am paying the money to the seller, and the seller does not deliver, my money is going to come back to me. And same thing for the seller, if the money is going to come back, is there in that account. If the buyer refuses to pay, I get the money clearly. And that's a benefit, that's one of the small innovations that we can work on. There are several other innovations that we can create similarly on the cross-border play. We can basically do not only for trade, but also for basically people the NRIs putting in money into the country, their investment platforms, and a whole lot of other things. A lot of new innovations can happen through the GIFT City route. And that's what attracted us to GIFT City. As a license holder, we are allowed to do 5 activities: account issuance, e-money issuance, escrow, cross-border money transfer, and merchant acquisition. When you talk about account issuance, we talk about creating a wallet infrastructure for basically the customers, whether it is for an NRI, whether it is for a domestic customer, or an exporter, or an importer. E-money issuance allows us basically for our customers to go around, use and get them carded. So for example, let's say there is an exporter in India who wants to work, wants to go globally. At the same time, they also work on global marketplaces. They want to get issued a global prepaid card. We would be able to do and issue a global prepaid card sitting right out of GIFT City, which is going to be very, very handy for them. Sitting in India, you are not going to be able to get a global prepaid card. Of course, I spoke about escrow solution and cross-border money transfer, and merchant acquisition is basically we can acquire exporters and help them basically get onboarded and work on the journey here. So one simple authorization lets us own the entire cross-border stack, whereas when you look at the mainland, there are different licenses for each of them. Let's say cross-border money transfer, you have an 82 license. Merchant acquisition, you have a payment aggregator license. Account issuance, only banks can do. Again, you have a PPI license for if you're doing prepaid card. So you have multiple licenses which you need to get, whereas in this, in a single license framework, we're able to get the entire basically details. And we'll be operating soon out of the GIFT City on the IFSC regulatory path. We've just received, as I said, the in-principle approval. We'll be filing for the final approval right now and going for the final approval in just due course of time. From the business point of view, what does it unlock for us? For Highway Pay, we're able to own the rail end-to-end. The journeys can be held end-to-end. We don't need to work about or think and partner with anybody. Only if we want to offer any kind of solutions, we can offer that from the GIFT City itself. Hold funds compliantly. Any money that has been held can be held in a compliant manner in foreign currency, in multiple currencies. As a payment provider, when we sit as payment providers in India, we would not be able to hold accounts in multiple currencies, which we are able to do that here. Global reach and a credible base, simply by being a PSP out here, has enabled us to open up and basically partner with institutions globally in global geographies, whether in Africa, whether in US, including basically in Singapore and all. We've been able to establish partnerships and get the partnerships in place because there's enough trust on the regulator out here, has enabled us to create a global reach. And finally, there is better control over the effects and realizing the better economics. From a customer point of view, again, lower and transparent cost. Faster settlement, money reaches the exporter sooner than basically what it could do in the Indian geography. Compliance, anyway, which we spoke about, and a single dashboard to see a complete holistic view, right from payments to basically their compliance to what business and sales that they've generated on the single platform. So this is all in all what we are doing at Highway Pay. As a company, basically, just a bit about myself. I am Devang Nerala. I have been entrepreneur for almost last 30 years of my journey, and having set up 2 companies. One is Financial Technologies, which is now called 63 Moons, where we have created exchanges as well as built a financial market infrastructure for India. And my second company was Atom Technologies, which was a domestic payments company, which I had later, which was acquired by Entity Data Corporation. And For us, cross-border, and I would always tell that to people, cross-border is a time right now what domestic payments was in 2009. And now is the time to innovate, now is the time to basically create newer solutions for India. India is on a hyper-growth stage, and at this journey, if India needs to succeed, they need to have a very strong and a capable and compliant payment infrastructure. Thank you very much.
Well, next up is Expat, and Priyansh Jain is here to speak to us. Expat is a global fintech company building the financial operating system for NRIs. Priyansh, it's over to you.
All right, so we are expat as in the expatriates who are the people who are from their native country, but they are not living in, they are living in any other country than their native country. So that's why we named Expat. We are building a financial operating system for the NRIs. Today, if you look at the NRI journey, for banking, they are using a different app. Payments, they are using a different platform. Transfers, investment, taxes too. So what we are building here is a one platform for their every financial needs across the borders. Yeah. So if you look at the life of an NRI, it's very simple. That they leave India, they have to do an LRS. Let's say they are a student, they are going to a university. They pay a very high fees, and at the same time, they face a certain kind of complex documentation. Then next, they start working after their graduation. They earn a salary in USD. They have a very low savings on their checking account. There is no NRI native bank account. They have to manage both their accounts in India and as well as the US. When it comes to sending the money, they pay use Wise or Remitly or any legacy bank where they spend about 2 to 7% just in fees, and there is delays. The transfer period is very long, and there are monthly limits. At the same time, the exchange rates are pretty low. When they have to file taxes, after doing all this, they come under two regulations. They have to manage their US taxes as well as their India taxes. On both sides, it's pretty expensive. All their documentation, their investments, etc. And when they visit India, they can't use their personal UPI. Of course, all of us do, they probably take their family member's phone, go out, shop with that. So the entire system is broken for every use. They use a different platform, different app. Interesting thing is that there are 35 million people of Indian origin across the globe. The data says that there is 2 trillion logged into NRI accounts. They send about 124 billion home annually. There is a DTA in place, but that's rarely claimed because on both the side, it's not understood properly, and to manage it also is a hassle. And the latest data is about, out of all the foreign travelers visiting India, there are about 11.6 million NRIs who are visiting. Some of them has the UPI, but 25% don't, which is close to about 3 million. This is their life before expat. Now, this is their life after expat. When they leave India, first of all, we help them with a low LRS. At the same time, we hand them a US dollar account as soon as they land in US, and we give them a debit card. So they don't have to ask money from their friends and family. That's what happens when they land in the US. So they have a banking ready for them before they even land. Once they start working in the US, we provide them a cash account. So rather than earning a 0% yield, now they're earning about 2.5 to 3% yield with zero fees, and also up to 6% APY. So we provide them with one account where they're able to receive the money, they're able to send the money, at the same time they're able to earn on that particular money. They're able to send the money home, which is on Google rates and instant transfer. And we have the largest limits up to $1 million they can send in 48 hours. And at the same time, we also help them with investments into India via mutual funds and Gift City. So they are able to send and invest in one place. We are able to file them with the taxes of US and India both together. We understand NRI life very well. Our founders are based in US. They are NRI. They themselves face the problem, and that's how expat came into the picture. So the entire filing taxes we are doing with the help of the AI over here with Rally Tax, which saves them about 50% in the tax savings. Tax filing, sorry. And when they visit India, they can just pay like a local via UPI with the help of PPI here. So they no more have to borrow a phone of their friends and family. They don't have to rely on the conversion, Forex, etc. And they can connect their card directly to the app. So they have an instant access in the UPI. So we are making a one single unified platform where they don't have to download different apps on their phone or manage different bank accounts. Now, why? Why are we building it now? So we have reached at an age of a digital maturity where everyone has a phone, they understand the fintech platforms very well. An average household of NRI is about more than 100K USD. And at the same time, they're not novice. There is a new age. They've lived enough in the US. They're using multiple apps so far now. So it's the right time to penetrate in that market. The banks are a little slow than what they used to in India. We have a full infrastructure ready with the UPI, IMPS, CBDC, and as well as the GIFT. The outward LRS market is also exploding, given the kind of students going out and people shifting to other places. As we see the data, there has been about 31 billion worth of LRS in the FY 2024, and it's just growing year and on. So this brings me to a very interesting thing. Why? There are so many platforms who are doing it, who have a great transaction value, who have a great relationship. But we are at the core of the place where we understand the transaction, the relationship, and as well as the NRI nativeness. So how we are building what we are doing with the GIFT over here. So this brings us to the most important part, the infra part, where we are building with GIFT over here. We have about 100,000 users across our platforms. We bring in participants right from the NRIs in the US, where they can send money, they can invest within US with their USD. There are businesses, NRI businesses, who are sending their money to their GCCs, to their back offices in India. We have travelers, when they come, they pay to India. And then we have Indian travelers also, residents who go out and spend money. GIFT IFSC lies at a very important juncture for us, where it plays a very central role as an infrastructure player, while we work as a platform where we are simplifying the entire use case for them, because at the back, there is a lot of effects going on, their compliance and stuff. The operating model is where we are providing them with a multi-currency account. We are providing them a cross-border payment engine over here. The investment layer and the compliance and the government part sits at the core of what we are doing. The target market is simple. We have the retail NRIs, whom will help with the multi-currency account, will help them with the INR payouts. We'll also help them with the repatriation part and the LRS too. Investors, particularly, we can all see the FCNRB come into the picture. USD, FDs, the mutual funds, and the other global products built out of GIFT. We have exporters and NRI-focused businesses who, again, are sending funds to India on month-on-month basis. And we have foreign travelers we are providing them with the local currency accounts and instant payouts. The reason why we chose to build at GIFT is because it's an India-centric flow. I think the startups also spoke about that, how it's a unified regulator where all regulators are coming into one picture. It's a two-way financial corridor with the USD and IR in place. Reduce foreign dependency. It's a global NRI financial hub where a lot of products are being built out for NRIs out of GIFT. The export and merchant enablement, and of course, the PSB backbone. So yeah, we are here out to build the global bank for NRIs, which they deserve, where their system is currently broken. We are making it singular for them and making their lives, financial life easier. So yeah, that's it from my side. Thank you.
All right, on that note, we will be reconvening in a short while from now. I'd like to invite you for a quick cup of tea, and we'll be back in just a short while. Thanks so much. right, we are re-congregating for our last session for the day. If I can please request you all to take your seats, kindly put your phones on silent. In just a few moments from now, we will be restarting the event. All right, before we head into our next discussion, we have one final presentation to conclude today's pitches. Please welcome another startup. We have Ankur Sharma, a fintech leader building regulated cross-border payment infrastructure across banking, treasury, embedded finance, and global payments. He currently leads Decentro's cross-border business. Ankur, over to you.
Hi, good evening everyone. It's a privilege to be standing here and representing Decentro and presenting how we cater businesses on their cross-border requirements amongst this lovely audience. I'll begin with thanking HSBC and NDTV for organizing this event and giving us the opportunity to showcase our product. I'll also take this moment to thank the GIFT ecosystem and IFSCA as a regulator for providing us a unified regulatory layer wherein we can cater to businesses in India as well as global businesses with one single regulatory obligations. So my name is Ankur Sharma. I represent Decentro. We are basically a banking as an infrastructure company. We help businesses to build their financial products. We operate in multiple lines of business, beginning with KYC and onboarding solutions, and then heading to domestic collections and payouts for mainland India as a market, along with the infrastructure for lenders. So as we scaled our financial products and in the line of helping businesses to build or get started with these financial products, we came a bit closer to problems the same businesses are facing on the cross-border trade side. And that is where we decided to also start supporting businesses on that requirement. So before I jump onto the product, we are already catering to about 2,000 plus customers with about 320 million plus transactions happening every month via our stack. We take pride in promising businesses to go live with their financial products in 2 to 4 weeks. So this slide also talks about few of our customers who we are already serving. So on the cross-border side, with multiple interactions with our customers, we realized as a business expands across the globe or across borders or into multiple currencies, payment comes with not only linear complexities, but the payment problems basically, or payment complexities magnify. So to answer that or to tackle that, we have built a product which covers the end-to-end cross-border money movement journey, complementing a business who's into cross-border trade of any nature. So our financial stack offers multi-currency accounts, ranging from about 9+ currencies, with the capabilities of payments, which can be collections as well as payouts. And third is the ledger module, which is the third part of our stack, wherein a business can maintain ledgers ranging from cashbacks, loyalty, or their digital record as well. So we are basically serving businesses in India as well as global market by trying to bridge them. So in India, we cater to LRS remittances, which basically are individuals sending money out of the country, along with Indian businesses who collect money from customers overseas, as well as global businesses. So our Gift City infrastructure provides multi-currency VAs, collection capabilities, treasury capabilities, FX, and then again reconciliation and settlement configurations with one single integration. So these are basically 3 legs of the journey which we support. One is on the India side, or one is the, I'll say, one is the transaction initiating side. The second is the transaction collection side and the third leg is the settlement leg basically. And we try to provide the entire 3 legs unified in one single API wrapper and pass on it to our clients. So these are 6 parts of our, these are 6 modules of our entire stack. So the first 3 modules, which is multi-currency VA setup, digital LRS and treasury FX, is on the money collection side and money getting reconciled. And then the last 3 modules are on the settlement side. So I always put it like this. So we are not a payment company. We are rather a payments infrastructure company, of course, sitting on a payment rail as a core. But the idea is to build programmable payment logics which can be enabled for our clients based on their requirements, right? There can be trade factoring companies who have certain payment related logics which they require, or there can be an investment enabled company who requires certain payment logics, right? So what we try is, rather than going to the market selling what we already have, our approach is to first hear out the pain point of our client when it comes to receiving the money across the border or settling the money across the border, and then customizing our infrastructure as per their requirements and to enable a seamless flow of funds. So we are a PSP, Gift City PSP. We recently received our final approval. We are a API first company and we enable end-to-end payment journey with a programmable logic around how money moves across the globe. So these are few use cases or few industries we cater to. Investment platforms. So any business who's enabling Indians or NRIs invest across the border. Indians can be investing in US stocks as an example, or NRIs can be investing in products at Gift City. We cater to such players by complementing them on the money movement side on behalf of their users. Travel business, so a lot of travel aggregators across the globe, they have payments to make to overseas vendors, suppliers. We help them in consolidating these payments and settling them with ease. Third is trade and export platforms, mainly exporters, importers, about which a lot was talked in earlier sessions. So any exporter who wants their user to make payments, basically, we help them. Then fintechs is the fourth journey, wherein any business who wants to enable cross-border as a service we can provide our stack to them. Global SaaS and global e-commerce companies is another segment where we cater to. So any business who's serving to overseas clients, there can be SaaS companies, they can be so any business who's serving to overseas clients, there can be SaaS companies, they can be auditing companies, any sort of software. We help them on the collection side, or any e-commerce business who's selling to global customers. Or, you know, there is a, I'll tell you, there's a client of ours who's basically a OTT platform who's launching regional content for NRIs. So we are helping them on the subscription payments to collect from global NRIs customers. And then import-export operators, of course, is the core segment of this trade. So how Gift City has supported us in building the cross-border stack is, so IFSCA's framework let us go live as a licensed PSP with one single license catering to both Indian businesses as well as global businesses. We can hold and move foreign currency with one single regulatory parameter. And so this is how our foundation looks like. We are at the core a banking or a payment rail, and on top of that, we are building the infrastructure that can cater to multiple industry segments, as I talked about, ranging from investment to travel to trade. So basically, we are a infrastructure layer for global financial workflows. And then the idea is to make complex financial workflows programmable, so businesses can move money and reconcile money across the markets without any underlying financial hassle or heavy lifting. So this slide basically explains, how a single merchant can have multiple virtual accounts under a single integration. So we onboard a client as a master merchant, and then they can open multiple sub-merchant accounts for their clients, which can be in different currencies, as the slide explains. And with this multi-currency setup, that's how the collections look like, right? Different sub-merchants onboarded under a master merchant can be assigned different virtual identifiers. And for each transaction, they can receive money as per these issued virtual identifiers, and then reconciliation reports can be configured accordingly. And in a similar manner, payouts happen from as I said, from multi-currency accounts. Payments can be sent to different beneficiaries across different nations. So these are the currencies in which we offer multi-currency accounts, ranging from US dollars, Canadian dollars, up to Swiss franc. So on the collection side, since we are helping global businesses or collecting money from or collecting payments from their global customers, so we enable different methods for that. One is wire transfer, of course, since this is a cross-border payment. Then we also enable card-based collection. So any client of our any customer of our client can make a payment using international credit card or a debit card. And then we also enable local payment methods. So just like there is UPI in India, we've got different payment methods operating across different geographies. There's Pix in Brazil, there's Alipay in China, there's SEPA in Europe. So our stack can enable our clients to enable these local method collections for their clients. That's how our dashboard looks like. It gives the entire visibility. So yeah, these are the few features we offer, right? Platform integration comes with a simple and easily consumable APIs. Single integration and multiple payments can be managed through our integration. And we also integrate multiple banks with our APIs. So these are few of our customer testimonials. And few of our investors. Thank you, and if there are any questions, I'm happy to take them. No? Thank you.
spent the day discussing institutions, regulation, and financial infrastructure. I'd like to end with a perspective that perhaps matters the most, the investors. Because in the end, no financial center succeeds unless investors choose it. So what will make GIFT City a destination that India and Indians and global investors trust, use, and crucially also recommend? To discuss just that, it's a privilege to welcome one of India's most influential investment leaders. Please welcome Ms. Radhika Gupta, Managing Director and CEO, Edelweiss Mutual Fund, in conversation with NDTV's Gauri Trivedi.
Save the best for the last. Radhika Gupta has spent the last few years pushing Edelweiss and Indian retail investors towards a more global, more literate approach with regards to money. And as GIFT City edges closer to becoming India's answer to a Singapore or a Dubai or Abu Dhabi, this conversation really looks at what that gateway needs to actually work and what it means that one of its loudest champions is also one of Indian finance's most visible women. Radhika, thank you for this conversation. Thank you for joining.
Thank you, and it's very nice to be doing this in GIFT City. I've done lots of these panels, but this is the first time I'm doing one of them in GIFT, and I know you guys have had a long day, but it's nice to see a full room at the end of the day in GIFT.
Indeed, and let me start with one question that I'm sure everybody would be wanting to know, which is that what does GIFT need to do to really become the first destination when Indian investors think of getting global exposure? What is that X factor that GIFT really needs?
So if I step back and, we've been, and, we were just walking around our lovely little office in GIFT City. We've been building out this GIFT presence for the last 2 years. I think of GIFT today as maybe what the domestic mutual fund industry was 20, 25 years ago. And I think about this as making a bet in the future and hoping that I'm going to come back to GIFT City 20 years later, see a whole host of bars and buildings in action and those kind of numbers. So that's how we really think about this jurisdiction and its potential. What does it have to do? I think in very simple terms, it has to make things easy. If you look at domestic investors today, whether they're buying a consumer product or whether they're doing a payment or whether they're buying a financial product in India, we have spoilt them with ease and convenience. It takes 2 minutes and a couple of clicks to do a domestic mutual fund purchase. Fund transfers are legendary in our country. We are leaders in digital banking. I think it's about making that experience as seamless in GIFT. And, our effort, while being people who provide products and launch funds in the last few months and in the next few months, is just going to be in making that ecosystem and that experience easier. As few clicks, as little time. I'm going to give you a small example of something that we take for granted in India, but that I hope happens in GIFT. Everybody knows that SIP, the concept of a systematic investment plan, has acquired more fandom than the mutual fund industry itself. People say, "मैं SIP करता हूँ, मैं mutual fund नहीं करता." I think just
call themselves Sipian also.
Yeah, people have become Sipahis, Sipians. There's this whole lexicon. It's become pop culture. Now, you can enable funds out of GIFT, but you don't have an SIP ecosystem to actually register SIP. So a few days ago, we closed limits in our domestic funds, and I have an investment. I have a large SIP into my China fund. I want to start that out of GIFT, but the banking ecosystem doesn't yet, and the payment gateways don't allow an SIP. Something as simple as regular investment that is enabled in India now needs to be done. And I'm not being critical. This is a young ecosystem. This is work in progress. So if we expect it to be DIFC on day one, it's not going to be that. But I think that's what we need to build towards, making things easier.
Through the course of the day, we've covered a lot of ground with regard to the potential, with regard to the aspiration, with regard to the policy vision and roadmap as well. Edelweiss has products in GIFT as well. And you have a sense, a first-hand account of the kind of investor appetite that really exists. In your assessment, that appetite versus the kind of policy vision and roadmap that we see, how soon do you see that aligning?
So look, we look at GIFT both ways. We look at it, one, as a destination for Indians who want to invest abroad. We spoke about that extensively in the last answer, and I think LRS is opening up as a route. Given that there is no choice to offer global products out of India, today an Indian investor can't buy rupee-denominated products, LRS is no choice. So LRS is the only choice they have. So I actually think GIFT has the opportunity to be the destination of choice for any Indian investor who wants to invest abroad. And as our market matures, it is inevitable that 10 to 15% of a mass affluent or HNI's portfolio is going to be investing abroad. So that's the market size I see for GIFT, and that is a very, very large and growing number. We also want to use GIFT and are using GIFT as a destination for a huge diaspora that wants to access India and perhaps doesn't want to touch it via the rupee route. And we actually started with a product for the diaspora and then have built products outbound. So inbound and outbound are both use cases for us, and we're equally excited about use cases. I think the question you asked is how excited, how does the policy ecosystem work? I think it's a super cooperative regulator, both, and I'm sure there are some folks from IFSCA or the SEZ. Every time I come here, I get a call from someone in IFSCA saying, can we meet for coffee? And today I haven't done that because I've been busy with the NDTV and HSBC folks. But the kind of outreach, I mean, we're doing a call every month saying, these are technology providers, go talk to them, make KYC easier. So work in progress, but everyone wants to make this happen.
I think that is the single biggest alignment there. I think the one thing that many people now want to know is that you have a growing middle class, a more affluent middle class. How do they participate more meaningfully in global markets? And I think that is one thing. How do you see that happening? There's already been a lot of progress in about a decade or so. How much more and what do you think could be done for that?
So I've been tracking the global investing story in India for the last 10 years because, before the GIFT ecosystem, through our domestic funds, we were offering global funds. We inherited them from JP Morgan. So we were the first to offer a China fund, one of the first to offer a US technology fund in 2020 before this whole AI thing became quite the buzz, etc. And I think there is a definite change. If you look at 10 years ago, investing abroad was kind of sporadic. China did well, so I'll do a little bit of China, or the US did well, so I'll do a little bit. And then, they had a period when they didn't do well and Indian markets did well, so leave all of this and go back to my home market. So it wasn't committed. It was like, it's a complicated relationship. But I think over the last 6-7 years, at least a section of India, including very young Indians who are, by the way, just starting to invest, realize that this is not something I do tactically. Global investing is a default part of what I do. So when I was a young student and I started working in the US, I started by default investing abroad. I invested 50% in my home market, which was US, and 50% abroad, because that was sort of the training ground. I think that's starting to happen. So people are recognizing that 10-15% of my portfolio needs to be abroad. Where they need help is a lot of hand-holding because they don't understand these markets.
I was coming to just that. Who is going to really ensure that global financial literacy also comes in for India?
So I'm sure there's some of our good financial advisors sitting in this audience, but even the financial advisory community is now asking us questions. So, if I were to ask the financial advisors they work with, they would give me a list of 40 funds I should launch in GIFT. I mean, I got 10 suggestions today and I have a list of 40 funds. Unfortunately, I can't launch them. So I think the whole ecosystem's maturity on investing abroad is growing. And I finally think if you are an Indian today, you need dollar assets. You need dollar assets because you're going to travel abroad. You need dollar assets because many of us are going to educate our children abroad. And finally, you need currency and geographic diversification. And the fact is, many listed themes are just not present in our markets and will not be for a conceivable future. So I think global investing is going to become the default and we'll all get literate, and we're working to build that literacy.
I want to ask more on financial literacy simply because there's shocking amount of details that tell you about people who are working women who are working, but the number of times they say that I don't invest, my husband does, or my father does. I mean, it still happens. How do we get there as far as financial literacy is concerned, and more importantly, for women to be financially, not just independent, but financially literate?
I think it's work in progress, right? Perhaps a generation ago, baseline financial independence was sort of what women were going for. They were starting to earn, they were educating. So we went from Beti Bachao, Beti Padhao to women starting to enter the workforce. I think if you look at the cohort of women in their 20s and 30s, they are definitely deciding, I need to invest. Now, there's still many stories like the ones you hear, and I have heartbreaking stories, but I think we are definitely improving. What's also happening, a lot of digital platforms are women-dedicated digital platforms that are bringing these conversations into the open. I must have done in my 10-year career at least 500 physical women-oriented IAPs, which are creating safe spaces for women to talk. And by the way, they also ask about gift and global investment. So I think we are work in progress. By the way, if you look at AMFI data as a representative, one of the fastest growing cohorts is women in their 20s and 40s. If I look at Edelweiss mutual fund data, 35% of our investor base is actually women.
And that's actually very, very heartwarming that you have a third of your investors which are women. You know, through the course of the day today, we've had a lot of stakeholders, investors, and talking personally about how they see GIFT City in terms of achieving milestones. Someone said that today that the ideal scenario would be that you have a fund that is based out of GIFT City, but you have an investor in Dubai who wants to, you know, tap into the market only to invest elsewhere, maybe Singapore. Do you see that as the ultimate aspiration for GIFT City, or what would be your metric to assess this aspiration a couple of years down the line?
So if I were to define success, if I were to think about 2030, I mean, you know, the domestic MF industry has about 6 crore odd investors. I would look at how many of them are finally choosing to participate in GIFT. And if we come to a world where 30, 40 lakh investors in a few years domestically are choosing GIFT, I think that's a lot of success. We have about 3-4 crore people in the diaspora. I would look at how many of them in terms of numbers are finally doing the uptick. See, I define success as not just a few institutional investors choosing GIFT. I define success as becoming the default choice for an NRI investing in India, the default choice for an Indian investing abroad, and I define by that by the width that we are going to achieve in the next few years. And I have no doubt that we'll be able to do it. What I'm very heartened to see is the amount of technology providers and the technology ecosystem that's coming up. I saw some of that showcase, because finally digital is what is going to give it scale and reach.
And I think essentially what you're saying is that the mass appeal of GIFT really needs to be tapped.
1-2 click.
Yeah, yes. As someone who's such a visible, iconic face in terms of Indian finance, when you reach out to women, when you communicate with women who are still, you know, grappling with some of the aspects with regard to Indian finance, what is the one aspect that you tell them the most? You know, whether it is financial literacy, whether it is about, you know, women who've hit the glass ceiling. Because as someone who speaks to youngsters in Indian finance, what's that big aspect that you communicate to them? I see some youngsters here as well.
Okay. This is very unglamorous and perhaps inappropriate answer, but the answer is less nuanced. I think in all the sessions that I do, and north, south, east, west, rich, less affluent, etc., the number one question that women grapple with, if you take all the men out of the room, because women do feel a little more comfortable with women. Sorry, I am not hating on men, guys. Please don't say that on the show. Is how do I talk to my husband about money? How do I have the confidence to strike up that conversation and get involved? And actually the first great step is getting involved. So what I tell most financial advisors is, do yourself and the nation a service. If you're having a financial review with the man, invite his wife and force her to sit in that room. And even if she says nothing, let her absorb. And if she's asking a question that you don't think is very smart, answer the question, but just get involved. So the number one conversation I've had in all these closed door conversations is, how do you convince your husband to let you walk into that door and get you involved. Because once you start sitting in the room, you will start asking questions. I've seen this with my mother. I've done 4 years of financial literacy training with her, and now she's confident enough that my brother and father are terrified.
But that's brilliant insight. You know, the fact that women need to be treated as equal stakeholders in family wealth and shared family goals, I think is the single biggest aspect that
So
we're yet
actually
to
we
get
don't
there.
have that much work to do. The men in the room have more work to do on this topic. Invite the women into the room.
Yes, of course. You know, speaking of this particular space, when you talk about asset management, when you talk about capital markets, you know, for better or for worse, it is a male-dominated space. You still have very few women voices like yourselves at the top. Structurally, how do we fix that? Because, you know, we're talking about at least a third of your investors now being women. You're talking about a lot of young women, you know, appealing to this sector as a whole. But at the top, it isn't changing.
So, firstly, I think you should be a little kinder to the financial services industry. If we look at a country like the US, it took them decades and decades to have a women lead a major bank. That is Jane Fraser of Citi, and you know, she just made a trip to India. At some point, I think about 70% of India's banking assets were led by women. So if there has been one industry in this country that has been at the forefront of women's leadership, it has been banking, financial services, and capital markets. So firstly, I want to start by giving ourselves a lot more credit. This is a global...
Cutting all the men some slack here.
No, no, I'm not cutting the men some slack. I'm giving the Indian women some credit. I'm not giving men any slack. I don't do that. You know, I've spent a part of my career abroad. I've spent a part of my career in India. I promise you, India has been an easier place as a young woman too. And I said this at HPS when I spoke to a bunch of young women. I said that, so someone asked me, how do you do this? How do you do this motherhood and all this? I said, India is the most supportive ecosystem if you want to do what I want to do. And some of this is evolution. I actually think one of the greatest things we can do is more role modeling. So my criticism of the capital markets industry is this. So banking has done a great job. In capital markets, we just don't see women leaders. I blame the media and movies for this, by the way. Have you ever seen an Indian movie where there is like, see a movie like Bazaar or any of them? There are no women. There are just no women. The only women you see in any capital markets roles are secretaries. I think role modeling is a really powerful thing. When Nykaa listed on the exchanges, there were so many WhatsApp groups that said, if Falguni Nayar can do this, I can do this too. And I think it gave birth to a generation of beauty and personal care startups. So I think role modeling is super powerful. And once you have women in leadership, policies change to get more women in leadership.
I think we need to end stereotypes. That's the most important factor. Let me then ask you about, I think, the one conversation that is happening across India in rooms, in large setups like this, which is around Gen Zs, our next generation. I'm not even coming to Gen Alphas, but you know, when you talk about Gen Zs, a 20-year-old has a 60-year investment horizon ahead. More restless, more you know, likely to ask questions. How do you speak to them, and how do you see their financial goals in the future? And they're going to be very different from even the millennials, forget the baby boomers.
So the first thing I've learned, or anyone has learned over the last few months, is that you don't sit as a 40-year-old and criticize Gen Z. You know, so I'm very scared.
There are no Gen Zs in the room.
No, but I'm very scared. I'm
yes.
very scared of criticizing Gen Z. And I genuinely think, I think Gen Z is growing up in a very different India. That even my India was in India in transition. We were kids who were born before the 90s, saw India pre-liberalization, I would say an India of scarcity, grew into the internet era, and really we were a bit of a sandwich generation. Gen Z is a digital generation. I mean, my father's generation waited 10 years for a landline. Here they're waiting 10 minutes on Blinkit, and they're cranky if it is the 11th minute. So I think that is the context in which you judge Gen Z in. So it's a more confident generation, it's a more digital generation, and it is a more risk-taking generation. It's a more risk-taking generation in terms of the career choices they make, and it's a more risk-taking generation in terms of the money choices. So I wrote a book, and one of my greatest learnings from writing Mango Millionaire is that Gen Z, when they look at the financial services industry, does not want to be spoken to with a face of fear. Do an SIP, otherwise the world will end. Do an SIP before it becomes too late. They want to be spoken to about money as if you're talking to them over a cup of tea or coffee. For all the criticism that there is about influencers and social media, I think social media has been a great way to have financial conversations with Gen Z.
I think they've democratized information like never before, and I think that's the single biggest factor about social media, whatever may be its perils. The fact that the next generation views financial goals differently, would that mean a paradigm shift in how companies will have to offer different products to them?
So one of the biggest changes I've seen in the 8-9 years of asset management is the amount of meritocracy and openness that the digital mediums have brought. When I joined the industry, I think the world, and I'm talking about domestic mutual funds, was largely equity and fixed income. And I don't think there was a third conversation. Today in India's capital markets, you have equity, you have fixed income, you have passive, you have specialized investment funds, you have alternative investment funds, you have REITs, you have InvITs, you have global investing, you have conversations on launching a semiconductor ETF, you have conversations on launching a leveraged ETF, because today there is openness to new concepts. And I think we as asset managers are constantly stretching the boundaries of the kind of solutions that we can offer, the way we educate people, and keeping up with the capital markets, and even building investment talent that can keep up with the capital markets has actually become a lot more challenging in the last 3-4 years. The other good thing that's happened is, I don't think Gen Z cares what your last name is. If you're a financial services parent, Gen Z cares about the product that you offer and the value that you'll deliver. Last name comes later. I always say that, and we're in Gujarat, Nav Bhagwan che. So.
Okay. So, there are parallelly these undercurrents that are happening. One is the Gen Z aspect that we are talking about. The second is the fact that you are now at a space where there's so much of geopolitical changes that are happening. One is the political discourse, the second is the massive capital changes that are taking place. Whether you talk about the uncertainty from America, whether you talk about the fact that everybody's looking at China +1 in terms of supply chains, in this kind of a turbulent, uncertain global capital market scenario, where do you see India as a recipient and also playing a larger role in the global capital market scenario?
So I think the world has always been turbulent. I've got this question a lot that, this is a year where we've seen crude prices swing, geopolitical risk, domestic tariff risk. And I always hark people back to another equally interesting period in India's history, which was 1989, right? And if you look at the period between 1989 and 1994, India saw multiple governments, Mandal Commission, Bombay bomb blasts, Ayodhya, a major Gulf war, the rupee depreciating 50%, Harshad Mehta, a no confidence motion in parliament. By the way, if you go back to that decade, a decade or a 5-year of chaos, the Sensex was up 4 times in that period. So I think volatility has always been the color of equity markets. It's a lot more pronounced now because we live in a dramatic social media driven time. I don't think in all of this, the long-term thesis on India has changed. So if you ask me what my view is in 6 months, I can't give you a 6-month view. I genuinely believe the next 6 months will continue to be turbulent. We still aren't out of geopolitical woods. We still continue to be very sensitive to crude. But if you ask me about a 5-year or 10-year outlook on India, I don't think that that has changed. There are things I think that the last 2 years have taught us that we need to work on.
What are those? What is it that
you ask me two on the top of my head? I would say Indian companies need to focus on R&D a lot more. Historically, the amount of R&D we spend as a percentage of GDP is one of the lowest in the world, and it's about time we stop focusing on dividends and buybacks to make the market happy and really make those big, bold R&D bets. And the second thing is we need to focus on jobs.
Speaking of jobs, I think that is the other aspect of the Gen Z anger, the protests that you see. It's sort of not reflecting when it comes to hard numbers in terms of job addition. At some level, you may say that it's not somebody's specific prerogative to be actually creating jobs, and at the same time, you have a very young country which needs its aspirations to be fulfilled. In your assessment, which are those sectors that could actually be the ones creating those kind of jobs?
See, large-scale jobs are going to happen when you have manufacturing in place. There's a limited amount of job creation that is going to happen from services. If I look at financial services as an ecosystem, if I look at IT services was one of the largest employers in the country. It has its own challenges out of AI. But if we really want to make this big, I think there are two areas. One is manufacturing-led job creation, and the second is micro-entrepreneurship. For all the unicorns that we are producing as a country, the backbone of the country, and which is why I think initiatives like Shark Tank are as important as they do, is the tier 5 and tier 4 city entrepreneur who can build a 10, 20 crore revenue business. Because where is employment creation going to come from?
No, this is correct that about 50 to 60% of India's jobs actually come from MSMEs. Large companies create a very small amount of the overall job pipeline. But if you look at it in terms of the, putting the big rocks in place, so to say, the government says, we put the PLI. See, it's working so well in mobile. It's working brilliantly for companies like Apple and stuff. What more can we do? Private sector says that, it's still not adding up. We're still not going to put up in terms of private investment. How do we fix that gap?
So, the private sector will move when demand moves. And I think one of the interesting things that has happened, unfortunately, after COVID is that we have seen a K-shaped recovery. So, you're seeing large listed corporates produce real earnings and profitability growth. And then you're seeing a lot of unorganized India actually hasn't made much progress. Progress will happen when you start to move unorganized India.
Final two questions, Radhika. As someone who's been the shark on Shark Tank, I want to ask you this, that you mentioned also about micro-entrepreneurs, small tier 2, tier 3 sectors, where women employment is actually very important. Where are those areas where you see that growth? Which are those ideas that you think could actually click it, so to say? Where do you think those will?
So, one of the good things that has happened with the kind of digital ecosystem that we have today is that without building a very large physical infrastructure, you as a young entrepreneur, man or woman, can create a meaningful business. And I think the whole rise of the D2C generation and the kind of startups we're seeing in the D2C space, a lot of that has been enabled. Today, with a smart product, sensible performance marketing, use of Amazon, quick commerce, I can get to a 30 to 50 crore revenue run rate as a D2C business. And you've seen so many women-founded businesses. When I look at my own portfolio, I think 75% of the businesses are actually women-founded businesses in the D2C category that have been beneficiaries of this.
Final question, Radhika, if you were to give one message to Finance Minister Nirmala Sitharaman in terms of that one policy measure that, touches upon all of what we spoke, what would be that single measure?
So I think since this is a gift-specific conversation and you guys ask me scary questions, I think for gift, I would say two things. One, keep the consistency of the jurisdiction intact, whether it's the policy consistency, the tax consistency. We talked about gift as a jurisdiction for Indians. I mean, eventually it's going to be a jurisdiction where global investors also feel comfortable. And what is very, very important is a certain amount of consistency in tax and other policy. They should feel that this is forever and things are not going to change. So I think that's the big one. And second, make doing things easier.
Ease of doing business will always be important. And I'm going to end this right here. Thank you so much for your time.
Thank you.
We covered a lot of ground. I wish we had time to take questions, but next time.
I have to run to the airport.
Which is why. Thank you so much.
Thank you. Thank you.
Ladies and gentlemen, as we conclude today's summit, one message has come through consistently. Building a globally competitive financial center isn't about one announcement or one policy. It's about creating an ecosystem where regulation is trusted, institutions are credible, and innovation is encouraged. Investors have the confidence to commit for the long term. Today's conversations reflected both the ambition as well as the realism. There is broad agreement on where India wants to go. The work ahead lies in building the consistency and credibility that every successful financial center has earned over time. On behalf of NDTV and HSBC, thank you to our speakers, our partners, and each and every one of you for being part of this very important set of conversations. Have a safe journey home, and we look forward to welcoming you again. Thank you.